artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Very good morning. You're watching India Market Open and it's all about the trade deal. When will the India trade deal be announced? And if you listen to the White House, could be any time now.
Yeah. I mean, the statement, President Trump and Prime Minister Modi share a great relationship or whatever term they used and coming soon. Yeah, could be interesting to see.
And the latest from the press secretary, she held up something with handwritten.
Yeah, let's pull that up. That was the most amusing thing this morning. So this was a personal message, I think, from Trump to Fed Chair Powell, where he actually puts up all of the world central bank rates, and he says, you are as usual too late for the USA. And then, you can just look at all of that. He goes on to say that you really need to move on. So I like his way. I mean, these are various novel ways of trolling your Federal Reserve Chair, if nothing else.
Things that you've never seen before.
Things that you've never seen before. The only thing is, does it work contrary? Because Jerome Powell has 8 months at best, right?
Yeah.
Would want to go down seeing that he's not cowed down to President Trump or any political pressures, right? So this may work otherwise, but let's wait and watch. Let's see.
Yeah, and so that's part of it. But otherwise, markets don't seem to care. All you say about Trump, the fact is that he gets the results he wants. Look at what's happened with Canada. One day of saying that no deal with Canada, and they have seemingly buckled. That's why US markets were up, and let's start with that. US markets rose in trade on Monday. The S&P 500 and Nasdaq hit all-time highs, and you saw that on the indices, all the indices up in the green. Now the reason for that is Canada has conceded on its digital tax, which it was going to apply to the United States. It's walked that back as trade negotiations continue. All eyes now on trade deals. US will, ink with nations before the July 9th deadline. And of course, most importantly, India. If we have that bite, we can actually pull it up and play it out now, where you have the White House representative talking about a trade deal with India and how it could take place anytime. Listen in.
Sure, yes. The president said that last week, and it remains true. I actually just spoke to our Secretary of Commerce about it. He was in the Oval Office with the president. They are finalizing these agreements, and you'll hear from the president and his team, his trade team, very soon when it comes to India.
And on China, how do we counter China on that front?
Yes, I mean, look, India remains a very strategic ally in the Asia Pacific, and the president has a very good relationship with Prime Minister Modi, as you know, and he will continue to have that.
Okay, so that's what it is on the trade deals. Bond yields, meanwhile, move lower as Trump is pushing to pass his big, beautiful bill. There is an assessment that they would add $3.9 billion in deficit once that bill passes, and he said he wants to do it before the 4th of July. So the 10-year actually dropped to 4.2% levels. Oil continues to move lower as well ahead of the OPEC Plus meet. So Brent is thereabouts around $67 per barrel. Meanwhile, Asian indices have opened up mixed, because the whole question of what's going to happen with the trade deal. But the implied open for India is what we should look at, and completely flat even now in the positive, 22 points up. But from what we're seeing yesterday as well, very tentative trade is what we can expect, because even the closing, though underlying positive news is there and sentiment is there, I think till you don't have some clarity on the trade deal, nothing's going to really move.
Yeah, very likely. But just the way the markets are moving, I think all quant indicators are now pointing that they are firmly in the greed zone. So yes, Friday actually, Bloomberg's fear and greed gauge on the S&P 500 hit 298 points, which is the highest since March 2024. And the ticker tape fear and greed index for India is in extreme greed zone as well. So talking about greed on the market and quant indicators pointing towards that, right now we are there. I mean, the Bloomberg index highest since March 2024 really made me think that, oh my God, look at S&P 500, quite something.
So important points. But then for us here in India, based on what has happened overnight, the big news, of course, is what happens to the trade deal. What are the timelines that we're talking about right now, and what are the implications? Of course, we've spoken about it in the run-up to today. What are the sectors that could get impacted? And we've got Natasha joining in live, I believe, from Washington. What can you tell us, Natasha?
Well, yes, the trade delegation in DC, Washington, DC, has extended its stay. There was a previous extension prior that happened as well. And the reason the extension has happened is because it's taking time for the United States and India to iron out certain differences that they have. One of the key sticking points is also the increased access that the United States wants into the agriculture and dairy sectors in India. And some of that is politically sensitive for India, given the farmers and many of them who have smaller farms who don't want the big companies, US companies, to arrive on that land. So that's one of the sticking points. But also the major thing that's important to both the United States and India is to try and iron out these differences before July 9th. Now, July 9th is the deadline for the reciprocal tariffs, which were put in place in April earlier this year, that have now been put on hold for 90 days. And that deadline stops on July 9th. So if by July 9th, the both sides have not reached an agreement on this interim trade deal, then what happens is that over 25% reciprocal trade tariff comes into play, which India certainly does not want to see happen. Now, India is seeking duty concessions for labor-intensive sectors like textiles, gems, and jewelry, while the United States is looking for duty concessions on industrial goods, automobiles, especially electric vehicles, and also petrochemical products. At the same time, both sides, Indian side and the United States side, the commerce sections, are working also on wrapping up the first phase of a bilateral trade agreement. Now, the deadline for that is fall of this year, which is around September. Okay. But they want to try and
so there's a bilateral trade agreement. There is the July 9 deadline. Rishabh, who tracks the Commerce Ministry very closely, also joining in live. Rishabh, now you reported exclusively last night that the Indian delegation is going to stay back beyond 30th of June. What's the plan here? Because the sticking point from what you have reported seems to be on access of agricultural products, of US agricultural products in the Indian market.
Correct. That seems to be a key leading sticking point, given the fact that India continues to be a very, very large agrarian economy. A lot of farmers, medium and small farmers, have very small land holdings, and hence any sort of an impact, any sort of foreign crops coming into India, any foreign dairy produce coming into India, which is heavily subsidized, by the way, in the US. Farmers get a lot of subsidies as well. If they manage to enter India, they will undercut Indian farmers on a lot of these prices. And that seems to be the largest sticking point. Another very crucial point that India wants is, of course, the assurance that there will be no additional tariffs coming in once this interim trade deal or a mini trade deal is agreed upon before July 9th. Because if that sort of an assurance is not given from the US, then this entire self-imposed deadline of July 9th will not make any sense. Another point that India wants as part of this trade deal is, of course, these sectoral tariffs that have continued to haunt Indian exporters. Remember, these reciprocal tariffs of 26% were paused, but what was not paused was the auto part component tariff, the steel tariffs, and the aluminium tariffs that India has since then combated on the WTO platform as well. So these are some of the very, very key sticking points, but repeatedly bullish commentary from the White House is what we've seen. Trump has repeatedly said that a large trade barrier will be dropping down. So again, we're seeing very, very positive commentary on a trade deal that should be out very, very soon.
Yes, absolutely. Rishabh, thanks so much for bringing us those details. Of course, so anything that could come by, we would have to wait for the fine print, of course, but then one would assume that the sectors that Rishabh just spoke about, auto ancs in particular, auto ancillary companies will be in focus at the start there. But let's talk about what happened in trade yesterday. First off, as we normally do, let's take you through the fund flow activity. And you had net selling by foreign institutional investors to the extent of 831 crore rupees. Domestic institutions mopping up as much as 3,500 crore rupees. And really, that is a story in the recent past, the fact that domestic institutions are sitting on quite a bit of an amount of cash because of the inflows that they've received. And here I'm talking about mutual funds, and that is providing quite a bit of support. The Nifty 50 has lost ground in trade yesterday. After 4 sessions of advances, it briefly broke below the 25,500 mark, but then managed to claw above that mark to close at 25,517. Heavyweights, ICICI Bank, HDFC Bank, Reliance Industries, Axis Bank were the ones that led the declines in terms of contribution, and you saw quite a solid pop-up for Trent. It was a top gainer on the Nifty 50, and along with State Bank of India proved to be a contributor on the upside. Broader markets once again outperformed, and both the mid-cap and small-cap indices gained quite a smart amount of ground. The market breadth was tilted in favor of the advances in a 3:2 ratio. By the way, the mid-cap and the small-cap index have extended gains to a 7th session in a row. And PSU banks were the big gainers in trade yesterday on a sectoral standpoint, with the index gaining as much as 2.7%. PSU banks, of course, in focus on account of a potential value unlocking that has been asked for by the government. Defense stocks continued to be in a bright spot. The index rose as much as 1% or close to 1% in trade yesterday, and realty stocks once again underperformed a 3rd day in a row this time, and losing about 3/4% or thereabouts. Realty has fallen in 7 of the last 10 sessions.
Yeah, but it's not necessary. It's not the best space to hide for sure. But the good part is that because the markets are moving the way they are, now people are saying that instead of just being on overnight trades or very short-term trades, swing and positional trades are back on the table. So therefore, that is something that at least dealing rooms are talking about, technical traders are talking about. So something that is maybe good. There is some bit of certainty on trade. Though keep in mind that usually when it's an extreme greed zone, the markets tend to pull back a little bit, so you got to be careful of that. Like I said, quant indicators are in extreme greed zone, which is a sign of caution. So you might want to be careful with leverage. You can take all positional trades that you want, but with leverage positions, please be a bit careful. And frankly, BFSI looks very, very strong, but a lot of other sectors are bordering on expensive, so you might want to be mindful of all of that. And I'm guessing Tamanna is going to talk about this, but 4 listings today is quite something. Are you talking about it?
No, please go ahead.
So, it was very interesting to just put out the subscription numbers, like Globe Civil Projects, 119 crore IPO, subscribed 86 times.
Whoa.
Elan Barry Industries, 852 crore IPO, subscribed 22 times. The low one was Kalpataru, which was about 1600 crores, maybe the size and maybe the nature of the industry, just about 2.26 times. And then we'll have Raymond Realty do this as well. So It's a big day today. I don't know how our screen accommodate all, but it'll be an interesting 10 a.m.
So we're going to have an IPO tracker up on the screen very quickly. This is a full-time thing that we're going to do for the next several days, because that is how much activity is going on. Just in the last 4 days, these are the listings, Neeraj and Alex, but 4 major IPOs have been announced, from Cure Foods to Wakefit to Meesho, and all interesting companies. So the appetite for primary market is just
humongous.
But what is interesting is that it's not like it's squeezing out liquidity as much as I thought it would. There seems to be enough juice out there for everyone. So yes, IPOs is one bit to look at, and we're going to have a special report on it in just a bit. I think the other factor to maybe keep an eye out on is early business updates that have started coming in. So for example, you have Ireda, decent set of business updates for Q1. You'll start getting the first hints and look at it. We've hit July, so prepping for that result season as well. Hutco, not half bad in terms of the pipeline that is shown in their business updates. IT is another pack that I would look at. A couple of notes today talking about how Q1 is not looking too bad, because deal cancellations are very low, if nothing else. So I would watch out for the Nifty IT as well. Apart from that, of course, there's a consolidation phase. The next big fundamental trigger or news push will come when we have ink to deal with the United States, and it's coming sooner than later. Now, that is clear. The sectors which will be impacted will be your export-oriented one. Watch out for pharmaceuticals, watch out for autos, because there could be some concessions there. So that is going to be one big trigger. But in terms of the markets, we've seen a bout of profit booking that snapped the 4-day gaining streak yesterday. Despite weakness in the benchmark, the broader markets, that's mid-cap and small-cap, continue to show strong bullish momentum. Overall trend remains upwards, but a consolidation and range-bound trading phase is expected, at least for the next few sessions. Index is still trading near its 5-day EMA, indicating that the short-term trend remains positive. Key resistance for Nifty, 25,630. The crucial hurdle, as long as the index trades below 25,700, consolidation may continue. Key support at 25,480. Support is still seen at 25,400, and a fall below this could extend the correction to 25,200. So keep a mark on some of those levels. As far as Bank Nifty is concerned, resistance at 57,530, support at 57,210. I'm not too sure if the PSU Bank rally continues today. You may see a bit of a cool off there. So keep that in mind as well. But on the derivative side, Puneet joining in to set it all up.
Well, thanks so much for that. So definitely, a dampening yesterday, about 100 points down move on the Nifty, as well as some key sectors like auto as well. But we saw yesterday a lot of positive moves on a lot of individual stocks, and we could see that today as well based on news flow amongst listings. The activity that's happening in key restructuring like Gabriel, Bharat Forge, amongst Apollo Hospitals, the broader market seems to be very active and in the positive up move as well. So for the Nifty, we've seen the open interest down a bit, 3%, but 25,614 is what the levels are indicating for the Nifty 50 futures. The Nifty Bank comfortably above, the 55,500 levels, which we've been highlighting now. And in the next couple of weeks, we'll see all the banking names back in focus because of the key banking updates coming in for the quarter. So definitely an index that will be a key one to watch out for. We've seen the FIs largely sell out yesterday in index as well as the Nifty options, but that's not hampered the long ratio too much. From 37%, it's around 36.4% now, but it's definitely above the mid-20s level that we saw in the previous at the end of the previous expiry. So definitely a key positive for the FIs as well. In terms of stocks, and we've been highlighting a lot of action in the EMS space as well. We saw the short build up on something like an Amber Enterprises and PG Electroplast. Look at the OI change, especially for Amber Enterprises, 300% yesterday in trade. While on the other hand, and if we can look at the open interest loser side, something like a Dixon Tech has actually seen short coverings after the recent sell-off. So we've seen the key up movers essentially in the EMS space have corrected a little bit, or at least we've seen that OI change increasingly on the downside. But that's one of the key aspects. So again, today, a big day in terms of listing. We also have HDB tomorrow, so the IPO action continues. But a lot of the story could be on the broader markets yet again today.
Okay. And let's take a look at specific stocks. And I think one of the big developments last evening is Apollo Hospitals and the announcement. And of course, we will be speaking to the management to understand the rationale, etc. But a lot of excitement around it. So Apollo Hospital Enterprise, they are going to hive off 3 businesses into a new company and demerge it. This includes 2 subsidiaries of theirs that they had acquired. So these 3 businesses will be hived off and include omni-channel pharmacy, digital health business and the wholesale pharma distribution. The new company will list directly on the stock exchange. Transaction will be done between 18 to 21 months. For every 100 shares of Apollo Hospitals, shareholders will receive 195.2 shares of the new company post the scheme. So the composite scheme has 3 steps: demerger of the omni-channel pharmacy, distribution and Apollo 24/7 digital platform, amalgamation of Apollo Health Co with Newco, merger of KeyMed Private Limited with Newco, that's India's top wholesale pharma distributor. So I thought the move was interesting because it actually hives off from the core hospital business. The combined new company will have FY25 revenues of 16,300 crores, aims to reach 25,000 crores by FY27 and targets an EBITDA margin of 7%. So that's one to watch out for. Quite a few notes here, a couple of them this morning. Morgan Stanley maintains an overweight with a target price of 7242 on Apollo Hospitals. Says value unlocking could re-rate the hospital's business. Apollo Hospital trades at a discount to its key peer because of 24/7, that's the pharmacy business, was a drag on returns. The new company will be India's largest omni-channel pharmacy distribution and digital health company. So they are excited about it. Citi has maintained a buy with a target price of 8,260. They say Apollo proposes demerger listing of the businesses and this is positive for Apollo shares. They make the same point. The hospital business is trading at a discount because it's saddled with the pharmacy business. So this is going to be value unlocking. CG Power is the other one that I'm looking at. Now the company launched its QIP. Some details out today. It's going to raise 3,000 crores. Indicative issue price is set at 660 rupees a piece. That's 3.25% discount to last closing price. At full subscription, it will result in a 2.89% dilution of the company's post-issue equity capital. Reason it's a thumbs up is because all fundraisers are being lapped up. So let's see what happens with CG Power. The stock was up yesterday and the issue opened yesterday and will close today. REC, I've picked because of the clarification from REC that came in that 2 of their debtors, that's the Kaleshwaram Irrigation Project Corporation and Telangana Water Resources, have cleared their critical overdues. There was a report yesterday that there's a big lag on their balance sheet because of these dues. They have come out and clarified that there are no critical dues. Both loans are secured and have been extended against state government guarantees. So I mean, of course, the stock recovered during towards the close, but there was a bit of panic on what would happen with REC. I think this clarification may help the stock move today.
Absolutely. We continue to see more order wins, and from the defense pack, BEL announcing orders worth 528 crore rupees. It says in its notification, I thought it was an interesting one, since the last notification, just by the way, we got additional orders worth 528 crore rupees. They didn't say it in as many words, but the tone was like that. It received those orders after the 20th of June. And remember, quite a few companies do send out notifications in a flurry at the end of a quarter, and that essentially has taken place as well. The orders that were received included radars, communication equipment, as well as EVMs and jammers, various other defense equipment as well. Remember, the entire pack was in focus yesterday. It could be at the start today as well. Kalpataru Projects, another company that is going to likely react to an order win. This is from the international space. Overseas orders worth 989 crore rupees. They are for power transmission and distribution, as I said, in the overseas market. The order intake in FY26, and this is something that has come through in that notification as well, stood at 7,150 crore rupees. So that's giving you a perspective on the first quarter addition of 7,150 crore rupees, which is a pretty solid run rate for Kalpataru Projects. And the last one on my list is ESAF Small Finance Bank, a pretty small company, in fact, just over 1,000 crore of market capitalization. It has concluded the sale and transfer of stressed assets to an asset reconstruction company, and loans worth 733 odd crore rupees were transferred. The reason I remember this, or I wanted to point this out, is that in the recent past, I believe maybe last quarter, we spoke about another transfer to an ERC, and the recoveries were substantially higher. In this case, the recovery is only to the extent of 10% in that sale that has taken place. They will receive 73.3 crore rupees. It's positive because this is a technical write-off, and so they will be able to write back the provisions that they had made for this, and so that should bode well. But they are losing a considerable amount. 90% is what they're losing.
Interesting. So, two stocks. Firstly is Prestige Estates. They've launched a 21.84 acre residential project in Chennai with a gross developable value of 3350 crores. These days, a launch of a project announcement which is large also gets stocks revved up. So, I wonder if Prestige does the same. Remember, I mean, 3350 for Prestige is good. It's not like egregiously large. So, keep that in mind. But Prestige may react. So, watch out for this one. Astra Microwave, I mean, a clutch of companies doing these warrants, and Astra is no different. They are going to allot 20 lakh convertible warrants at about 864 per share. The point is, one of the investors is Gopikishan Damani, and therefore allotted about 5.78 lakh warrants, and therefore you never know if this stock has a bit of a reaction. So a couple of them from my end, and then there is this Nomura note on car trade wherein they have given a good target price. So that could be an interesting one as well. So maybe car trade should be something in focus.
Okay, I'll add just one more stock because I think that this is something that I saw later, but we should mark it nonetheless. Gabriel India from the Auto Ancillary Pack. Puneet has put out a nice piece of information. We will talk about it later as well. It was up and about in trade yesterday. This is a major restructuring that they are doing. They will basically put all of their auto businesses of the Anand Group under one head, which is under the listed entity of Gabriel in India. Just a small point, and this is something that our research team has shared. The EBITDA margin as well as the return ratios for all of the acquired companies are much higher than Gabriel's standalone margin, and so that amalgamation will be positive for Gabriel India. And analysts see EPS accretion of as much as 7 rupees per share. Of course, the promoter shareholding will go up for Gabriel India to 63.5% from 55% earlier. But as we pointed out earlier on in the program, primary markets are red hot as we speak right now, and we've got 3 listings today. Or is it 4 listings? Sajith is joining in to tell you more about that. Sajith, how do they look, and what is the likelihood of these listing at a premium?
That's right. 3 listings and 1 listing after demerger. Primarily, the 3 listings which are happening through IPO is raising around 2,500 odd crores. The first one being Ellen Berry. It's an industrial gases company. The total issue size was 852 crores. It was 400 rupees per share, and the demand for this was nearly 10,000 odd crores. Subscription was more than 17 times. If you look at the premium, expected premium, it's around 57 rupees per share, which basically comes to over 2,000 rupees per lot for them. The second one is Kalpataru, is a Mumbai-based real estate company. The IPO was very muted. The total subscription was only 2.3 times, 1590 crores, which has been used to pay debt. 414 rupees per share was the IPO price, and expected premium of nearly 1 to 1.5 rupees per share, which is there. And the third one is a global civil projects. It's into civil construction. One of the bright spots here is that there was high demand which came in there. 81 times demand was there. Total demand was 6,700 crores for an IPO, which was only 119 crores, and that and expected listing price could be as high as 98 rupees per share.
Okay, so we have a lot of action on D Street today, and of course some issues are opening as well. Remember, all of the IPO news right here on NDTV Profit. We have to take a very short break, but before we get into the break, sneak peek of our conversation with SBI Chairman C.S. Setty, where they've talked on the 70th anniversary of the bank, but we talk about key concerns like rate cuts and margin impact. The backdrop of that conversation is what's exciting in a building which is over 100 years old. Take a look.
The question of the margin is always something that is bothering a lot of people, especially in the rate cut cycle that we're in. And we're closing to the fag end is what we all understand that. But is that at all a worry for State Bank or for the Chairman of the State Bank of India?
So the net interest margin trajectory is, in my view, would be a U-shaped curve, in the sense that in a couple of quarters, we see the margins getting compressed.
Yeah.
Obviously, the front loading of repo rate has accelerated the repricing of some of the retail portfolio. For us, the benefit is that we don't have much of that repo-linked portfolio. Our portfolio is broadly either fixed or MCLR. But we want to give the benefit of MCLR reduction also to our customers, right? So which means that you need to calibrate your deposit rates. This is precisely what we have done. So going forward, I believe there are two things. One is the margins get adjusted, and number two, the September onwards, again an unexpected pleasant surprise from the regulator is to cut the CRR by 1%.
Yes.
So that will add, one is it will immediately reduce the cost of maintaining that reserve. And number two, ability to deploy those funds. So September onwards, I think there will be a addition to the margins. So we need to look at the exit margins of Q4.
Correct.
I think broadly,
broadly
most of us would be better positioned.
And it's a pride of the country. यूजर फ्रेंडली है. SBI के ऊपर सबसे ज़्यादा ट्रस्ट रहता है.
Wherever I am, even in the rural most areas, I still can find SBI.
Indian banking starts, and I would say even end with SBI.
This office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Welcome back. You're watching India Market Open. In a major move aimed at unlocking shareholder value, Raymond Realty, the demerged real estate arm of the Raymond Group, is set to make its Dalal Street debut. We had an exclusive conversation with the group CMD, Gautam Singhania. Listen in.
My first question coming to you is the timeline that was decided with regards to where listing of the demerged entity with Raymond Realty goes. That is something that you fast-tracked, and it's absolute value unlocking for the shareholders as well. Your initial comments?
Well, we had committed that in 2027 we'll try and do the real estate demerger. But yes, you're correct. We did fast track it because we thought there's a lot of value to be created. We want to create it separate entities with their own focus of what they need to do, and bring in the best of class governance, world-class teams, management teams. So we saw a lot of merit in fast tracking it, which is why we did it, and we delivered the demerger a couple of years ahead of what we had planned.
Okay, Mr. Singhania, what's the kind of opportunity that Raymond is sitting on, taking into consideration the development pipeline that the company has?
Well, I think, we had a historical land to start with in Thane, and after that, we have taken 6 JDAs so far. I think the opportunities in the city of Mumbai are amazing, and the fact that we've got 6 joint development agreements so far shows that people have put their faith in this company, even though we are new developers. So I think between Thana and our new projects, we should be over 45,000 crores worth of projects currently in hand.
Okay, so the 6 joint development agreements, Mr. Singhania, that you're talking about, are these the ones that you will be launching in FY26 alone? Or is it going to be, spun over the next couple of years? How are you looking at it?
So the first one, which is the Bandra East one, which is the Queen's Necklace, has already been launched over a year ago. And I'm hoping in this fiscal, 2 for sure, if not 3 more, we hope to launch, which is what we have line of sight of.
Okay, so that's the conversation ahead of the listing that we will see for Raymond Realty. Meanwhile, Kunal Rambia joining us this morning off the streets. Sunny Agarwal of SBI Cap Securities joining in as well. A very good morning to both of you and great to have you on. Kunal, let's start with your take on the index, because while the broader markets seem to be going strong, a bit of pain on the Nifty and the Bank Nifty.
Good morning, Tamanna. Thanks for having me on the show. So yes, Nifty has seen a stellar move after the breakout of 25,100. It made high of almost around 25,650. And yesterday we saw some kind of profit booking. I think this profit booking is likely to continue even for a couple of more days. Overall trend remains absolutely positive. And on Nifty, 25,200 is supposed to be washed out as a support level. And near those levels, I would advise a buy on the index.
Okay. Talk to us about what you see ahead of the first weekly expiry of 5 as well for the benchmark, Kunal, and good morning to you. And also what the perspective is on the Nifty Bank, because in the very recent past it has cooled off just a tad bit.
Absolutely. Good morning, Alex. So yes, what you're saying is absolutely true. In fact, we saw some kind of profit booking yesterday, but the broader market is looking very attractive. In fact, the stock specific moves are really good. So for this, this weekly expiry again, one needs to keep an eye on the support which is mentioned, 25,200 to 250 kind of levels. I think near those levels one can buy, but for now, sideways consolidation with a bit of negative bias is likely for 2 days. So for Thursday expiry, I'll be cautious. And on the upside, I think the limited potential for the upside with a bit of downside is likely. And on the Bank Nifty, 56,700 is something to watch out as a support, which is 600 points away from the present levels. I think that can be a good level to initiate buy. As the index trend is absolutely strong, I think buy on dip can be a good strategy on index.
Okay. And you've picked 3 stocks as you normally do, and these are all from the broader markets. What are you seeing?
So absolutely, Alex, the first counter is these amine companies which have shown extreme strength in the recent times. Look at Alkaline Amine and Balaji Amine, all are doing good. So the first counter is Alkaline Amine, which is looking attractive even after this big rally. And there is a final breakout which confirms the entire downtrend of last 2 years coming to an end. So with the stop of 20 to 50, one can initiate a buy. The short-term target or say mid-term target is around 2,600. The second counter is IOB, Indian Overseas Bank. Again, this counter after broader consolidation is now trying to come out of the consolidation with the stop of 35. One can go long on this and the targets can be 44. Again, these are midterm targets. And the third counter is Prince Pipe. Again, this counter we discussed last week also. It's a reiterating call on the same with the stop of 355. One can certainly hold on to this counter, add even more at this level. The minimum target can be 400. And all these 3 counters are looking good from this week to next week perspective. So keep a little broader view, keep trailing the stop loss. I think they can reward better.
Okay, so pipes in focus as well. Sunny, wanted to know what you made of the Apollo deal and the announcement yesterday of the demerger. Some very positive views from a couple of brokerages on Apollo hospitals. Do you share that sentiment?
Positive. I think it's a big value unlocking that is going to happen. So we were doing a just back of the hand calculation. So company has guided for close to 25,000 crore revenue potential of a demerged entity with a close to 7% EBITDA margin. And even if we assume a close to 15 times EV EBITDA multiple on that 7% EBITDA margin, the valuation comes close to on a per share basis of 363 rupees. That is, so I believe again it's again the multiple assumed here is very conservative number. So it's a smaller peer competitor, that is the Entero Healthcare, that trades at a significantly higher EV, EBITDA and PE multiple. So there is again angle of very conservative multiple which we have assumed. So I think definitely a good value unlocking going forward. And at the same time, within that demerged entity also there is a further potential of value unlocking in the form of Apollo, which is a medical arm, wherein they are also going to increase the stake further. So I think it's a pretty good deal for the shareholders of Apollo Hospitals.
Would you buy Apollo Hospitals though, Sunny, at the current juncture, or would you wait?
Yeah, definitely would like to add. Anyway, apart from this demerger, their core hospital business is also performing very well. So there is a plan of expansion of close to 1,900 beds in the current financial year. And at the same time, again, the number of beds are going to increase significantly by FY30. So even the core business is doing well. So would like to add in my portfolio. We believe the fair value of the business based on SOTP is close to 8,100 rupees.
So considerable upside based on that fair value estimate as well. Let's talk about Ambuja Cements. The management has in fact laid out a plan to sharpen the focus on cost savings, and Jefferies and Investec have maintained a buy on the counter. Puneet is joining in to tell you more about those details. Puneet, what stands out here?
Well, definitely cost savings is one of the key aspects, but the company seems to be ripe for comeback. That's what Jefferies has highlighted. There are 3 to 4 other key points in this particular note as well. The first one being that the company seems to be gearing up for a strong recovery in FY26 compared to a very flat year last year for Ambuja as well as for the cement pack. The other key aspect is the focus of the management on cost reduction as well as improving efficiency going forward. They've said that one of the key focus areas is stabilizing the key mergers and acquisitions done recently as well as over the last couple of years, while prioritizing cost efficiency, capital expansion, as well as use of technology in the business. The management sounded confident, that's what Jefferies feels, but one of the key aspects is that Jefferies has highlighted in their note that they've come back enthused from the meeting, and they feel that Ambuja is they actually have reaffirmed that Ambuja being a top pick in the cement space for the brokerage. Similar for Investec as well, target price of 836 rupees per share, and they already mentioned that the management has been able to achieve 19% cost savings and are looking to have additional 12% cost savings going forward. So 2 brokerage notes, both being very positive, and Jefferies having Ambuja as the top pick in this space.
Well, cement certainly has got a bit of a leg up for sure. Puneet, thanks so much for bringing that to us. Kunal, some moves yesterday too in cement stocks, right? I mean, Ambuja is one case in point. The Ramcos of the world did very well too. Now, it's not the quarter where typically sales are gung-ho, but the stock prices are moving higher. Good to take money off the table?
Good morning, Neeraj bhai. So yes, these counters are looking actually very attractive even on the charts. But the breakouts are still pending. Look at Ambuja Cement. This counter has not crossed 585 mark since October 24. There were almost 5 to 6 attempts done so far, but it was a failure. So if this counter manages to cross above 585, I think I'll also turn buyer on this counter. Till then, I'm being cautious. On ACC also, this counter has not really crossed 1950 to 2000 levels decisively, though there was one attempt somewhere in the month of April and May, but it turned out to be again sideways. But these counters are right. I mean, this ACC is right near the support. The other counter, Ambuja, is near to the breakout. So as of now, it's a wait and watch. But if the triggers turn really good, then these can be really good, attractive bets also from the short term to medium term perspective.
Okay. Fair call. Now, some of the other news makers, if you will, in the session, and real estate has such a tepid time. Sunny, the last 7-8 days, real estate stocks have lagged the street performance per se. Today there is some news flow on Prestige Estates launching a large residential project in Chennai. Maybe that spurs the stock a little bit. But would you use this sluggishness in the real estate stocks to buy them? Because I remember when policy announcements came in, everybody said that real estate stocks were going to be ones that should be bought into.
Yes, definitely, Neeraj. I would like to add quality names in the portfolio. The reason being that, as we all know, that because of this 50 basis point rate cut, there is an expectation that demand is likely to remain healthy over the period of next 4 to 8 quarters. And at the same time, if you see the market that is playing out, I think it's moving from unorganized to an branded players. You name the branded players in the market across the city. So they are hands down launching the project and at the same time getting a good response also. So I think the listed real estate pack continue to look pretty well in terms of and is well placed in terms of demand environment. And we continue to remain bullish on the entire real estate as a pack. Within that, I think smaller micro players like Brigade Enterprises or for that matter Suntec Realty, the newly listed entity Raymond Realty, there we feel that in case there is any dip over the period of next 8 to 10 days, that's a good opportunity to add to the portfolio from a long-term perspective.
Let's very quickly also get a view on the charts for some of these real estate names. 7 out of 10 sessions in the last 10 sessions have been losing for the realty index as a whole. Kunal, on the charts, what would you pick right now, if at all?
Alex, honestly, these all counters are near the resistance, and last week, as we discussed, the Prestige is near to the previous highs of 1800 levels. Similar is the case with DLF. It's near to those levels of 2024 of 920, 930 levels, and they are consistently finding the resistance from the same level. So I'll turn cautious, though from the short-term point of view, this small consolidation with negative bias is a buying opportunity. But positionally, I'll turn cautious on real estate at this level.
It is 8:44, but close enough to 8:45 for us to go to our daily segment, which is the dealing room chatter. It's called Heard on the Street. And of course, we're joined in studio by Soumit Sarkar. Soumit, what have you heard?
Well, a couple of stocks that have been buzzing, HDFC, AMC and Angel One. Now, dealers are indicating that large HNIs have started to accumulate both these counters on anticipation of a strong Q1 earnings. Now, for HDFC, AMC specifically, dealers are saying that the AUM growth could be much stronger than what the street is anticipating. And for Angel One, if you look at, they're saying that the growth in client addition, the overall FNO and the MTF book size has been seen as positive. When it comes to Federal Bank and SBI cards, sell flows on FII desk is what dealers are indicating. In fact, for Federal Bank, the strategy that FIIs are following is that sell on every rise. So keep an eye out for both Federal Bank and SBI cards in trade. Apart from that, it's Sammaan Capital. Now, dealers are indicating that large influential investors who already own stake in the company have started to buy more from open markets. So keep an eye out for Sammaan Capital as well. And Vintage Coffee. Soon the company is expected to announce a fundraise. It has already spoken to multiple influential investors and large HNIs, and it has received a strong response. So keep an eye out for Vintage Coffee as well. And Marathon NextGen, as we mentioned yesterday, the QIP has closed. What your understanding is that the demand was quite strong. Multiple family offices, HNIs, influential investors and 4 to 5 mutual funds have participated in this fundraise that the company had done. And couple of news where our Heard on Street has gone right again. Both these news were indicated last week. NMDC, firstly, price cut announcement was expected, and that has come in. Around 9 to 10% is the price cut that has been announced by NMDC for the month of July. And CG Power, they have launched their QIP. We had indicated about this back on June 24th. And this is a 3,000 crore QIP that the company has launched, and the funds will be used by the company towards their capital expenditure plans.
Okay, thank you for that, Soumit Sarkar, the segment that you should not miss as you open your morning. I just want to focus on Dixon Tech for a second, and this note from Morgan Stanley caught my eye. They've downgraded it to an underperform from equal weight, though they have hiked the target price to 11,563. So That of course is below the current market price. It's their own target price hike. It was earlier 8,696. But what they're saying I thought was important. They're saying they've downgraded Dixon as they see higher competition in its core EMS business. Component manufacturing is a step in the right direction, but it could be tougher to execute than the core EMS business. Now, this is a stock that has been in the news. There was a small portion of promoter stake sale, completely picked up by a mutual fund, and then you've seen that stock, just rise as a result. Over a month, though, been flat, about 2% up. Sunny, I wonder what you make of Dixon Tech and this point that the Morgan Stanley note highlights, that they are going to be facing a lot of competition in its core EMS business, and they see that as a bit of a worry.
Again, Tamanna, I think despite of the competition from peers, I feel the company is likely to deliver a healthy earning growth over the period of next 2 years. The only issue with Dixon is the expensive valuation. So even if you assume that profit is likely to double from a current juncture over the period of next 8 quarters, still it is trading north of 70, 89 price to earning multiple. So definitely on valuation front, there is the margin of safety is very less as far as Dixon is concerned. We feel there are many other players which are trading at relatively reasonable valuation within an EMS space and would like to bet on those names like Sirma, Amber, PG Electroplast for that matter, rather than taking a bet on Dixon where the margins are slightly uncomfortable.
What about you, Kunal? Just Dixon on the charts very quickly.
Very comfortable with these present levels. In fact, previous week we discussed about the support being near 13,750 to 800 levels. In fact, it made extreme low near 13,250 and now it's trading at 15,000. I think this is near to the bottom. Any dip from here can be a buying opportunity considering the stop loss of 14,000.
Okay, very soon you will start seeing the news flashes about auto sales numbers. Now, it's likely going to be a mixed outlook, though you could argue when is it not? The question only is this month going to be materially different for different verticals versus the others? Let's get in Puneet to talk about this. Puneet, sluggish June?
Well, sluggish, definitely, because we've seen underperformance by the cars as well as the truck segment, and that could continue in this month as well because of lack of capex from the government at least. But the two-wheeler segment, that will be the one key focus apart from the tractor segment, and that's largely because of a good monsoon that we've seen. We've also seen uptick in the marriage season and have higher dates in May. That's transpired to sales in the month of June as well. And we're expecting someone like a TVS to be one of the biggest beneficiaries in terms of growth, a 23% growth on a very strong base that is. So both the scooters and the motorcycle segment firing for the company. The other one's Eicher Motors continuing to report sales over 80,000 for the 8th consecutive month. And that's largely the company's new strategy to focus on sales numbers rather than EBITDA margin. Seems to be going well for the company as of now. In terms of car makers, and here where the problem is, because we've seen Mahindra continue to outperform the industry for the last 14 months, and that could continue in this month as well. There's expected an 18% growth because of ramp up of its 2 EV models as well as 3XO. But for the others, it's expected to be a lean month, and it's reflected also in stock price of something like a Maruti Suzuki as well, down 2 to 3% over the last couple of days. So it's expected to be a lean month nonetheless. It's only that they don't want to fill up inventory because it's already at a considerable level, is what brokerages are anticipating. Finally, in terms of commercial vehicles, we've seen capex start off in April, but the main pivot hasn't happened yet. So we might see a lot of pressure on the second half of the financial year to report these numbers. And on tractors, is going to be in focus as well on the positive side. We're expecting Mahindra to outperform Escorts, which is nearest and closest peer. But largely on tractors, it's expected to be a growth month across the industry and Mahindra to lead the face. So if you can show the next graphic as well, get Escorts up at 11,500 is what's expected. And anytime now, we might expect the numbers for Escorts come in as well. So even if the company is able to report some mid-single digit growth, that will be a key positive. But Mahindra, TVS as well as Eicher Motors will be the 3 companies that you need to watch out for in terms of June auto sales.
Okay, so standout companies exist even in this period of relative underperformance. Thanks, Puneet, for that. Sunny, so therefore, would those also be your picks at this juncture? And here he's talking about TVS, he's talking about Mahindra and Mahindra. And for Mahindra and Mahindra in particular, you have a scenario where if the monsoon distribution is good, you have tractors that come into focus and they've been an outperformer, and you have UVs or SUVs that anyway are in focus. So would you buy that?
Yeah, definitely, Alex. I think Mahindra is firing all cylinders, whether it is a passenger car, SUV, or whether it is on tractor segment, farm equipment side. So I think on SUV side, we believe maybe 15 to 18% full year volume growth is still feasible for M&M, clearly outperforming the industry. And on tractor side, where the industry is likely to grow at kind of high single digit growth, maybe 6 to 9% kind of number, which still is expecting. Mahindra, being a market leader, will continue to outpace the industry growth. So there we can again expect a clear outperformance from Mahindra and Mahindra. I think again we continue to remain constructive on the name with a fair value of 3,500, and one can definitely look into Mahindra and Mahindra. One more name which I would like to add, apart from all the names which we have discussed, is Force Motors, where we feel that because of its product Arbania, there is a probability that they may continue to report a healthy sales volume this month also.
Oh yeah, but I just want to pull up if we can, the 3-month chart for Force Motors. Oh, there we go. It's already on the screen. See, that's how fast it moves. 81% higher. Kunal, a quick word on Force Motors. Does the momentum continue for this stock?
Absolutely, Alex. That's likely to continue, but and at this elevated levels, I'm not comfortable creating new position. If already someone is holding the position, then at the trailing stop loss of 14,250 to 14,300, one can certainly hold on. Buy on dip can be a good strategy on this, but yeah, the strength is extremely good. In fact, yesterday's volume was again more than the average of last 30 days volume. So the counter is looking very attractive.
Well, it was 6,500 viewers about 6 months ago. That's the extent of the force with which Force Motors has moved. What literally was.
Oh, wow.
Okay,
that's it's a PJ, but it's a good enough one looking at that stock price.
Yeah.
It's
Yesterday,
insane.
11%, no?
Oh dear.
Man.
Oh dear.
So they're anticipating something. You want to take the break?
Yes, let's take a break and come back with the pre-open session.
and it's a pride of the country. User friendly है. SBI के ऊपर सबसे ज़्यादा trust रहता है.
Wherever I am, even in the rural most areas, I still can find SBI.
Indian banking starts, and I would say even end with SBI.
This office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true. And today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
ICICI
that?
CDSL for the long term?
Buy.
Welcome back. Just about a minute or to go for the pre-open rates to hit. The implied showing a muted but positive start. One stock which is going to be in focus is Apollo Hospitals. Now, what they're doing, what the company has announced is very interesting, and chances are that the street will take it very positively simply because they are hiving off their distribution business from the core hospital business. In fact, Varsha is joining in with more details. Varsha, what is the rationale that Apollo Hospital has and why are they doing this split?
Yeah, so thank you so much for that. So yes, three business will be hyped off into a new company, as you rightly said, and this new company will be listed on stock exchange. The three companies would be omni-channel pharmacy, digital health business, and wholesale pharma distribution. The main rationale why they're doing is to unlock the shareholder value. Now, a transaction will be completed within 18 to 21 months, and for every 100 shares of Apollo Health, shareholders will receive 195 shares of new company post the scheme. Now the scheme involves three steps. One is they're going to demerger their omni-channel pharmacy distribution and Apollo 24/7, and then they're going to amalgamate their Apollo Health Co with new company, and then merger of that KMID Hospital, KMID Private Limited will be done with the new company. Now KMID is India's top wholesale pharma distributor. Now just on the financial projection, how this new entity will be looking like. So from if in FY25 the revenue, if you see, of all the three business is standard around 16,000 odd crore, which will go to 25,000 crore, while EBITDA will increase from 576 crore to 1,750 crore, and EBITDA margin will increase from 3.5% to 7%. Let's see what brokerages are saying on this. MS on Apollo Hospitals, if you see, they've maintained overweight. They say that value unlocking could re-rate hospital business, and Apollo Hospital trades at discount to its key peers because of the losses in the other business. Now, because these three companies will be listed in a new company, there's a chance that the PE re-rating would happen to Apollo Hospital. Citi has maintained buy on Apollo Hospital, and they say that this development is a key positive for Apollo shares, and because the company is they are also of the same stand that the company is trading at 25 to 30% discount to some of these peers because of the losses, and this with separate listing, a lean business structure, they expect this discount of 25 to 30% to narrow down. So high chances that Apollo Hospital will open up upwards today.
Yes, I mean, clearly the pre-open rate, it's just been a minute, about 3% up. This is, the price discovery is still going on, let me put it there. Price discovery is still going on for Apollo Hospitals, but suffice to say it is going to be the hot stock to watch today. We had a view from Sunny earlier. Sunny, we've seen some of the notes this morning as well. Do you want to revisit very quickly whether Apollo Hospital is a buy right now?
Yeah, definitely, Tamanna. I think we believe the fair value of the business is close to 8,100 rupees. So we continue to remain bullish on Apollo Hospital. Again, backed by two triggers. One is their core hospital business doing pretty well. There is a very robust expansion plan that will play out in Apollo Hospital. At the same time, the demerged entity, we believe they're based on very conservative valuation multiple. There is still scope of re-rating on a demerged entity. And once demerged, I'm sure all the loss-making businesses will, management will share a path to profitability for the loss-making businesses also. So I think clear-cut a win-win deal for the shareholders of Apollo Hospital.
Buy today, Kunal, 7449. Right now, this is a pre-open rate. Discovery is still happening.
Absolutely not comfortable with this level. Reason being, since September 24, this counter has not decisively crossed 7,400 to 7,500 mark. So the closing is very important. If for the week the counter remains above 7,500, then I'll think of initiating a buy on the breakout note. Otherwise, buy on dip can be a good strategy on this counter.
I also want to pull up Gabriel India. We did mark it at the start today because there is a major restructuring that has been announced. Essentially, the plan of the Anand Group is to have all of their automotive companies under one roof, which is the roof of the listed entity, which is Gabriel India. And of course, these rates will settle as things stand right now. It's already off the high point in the pre-open session, up about 14%. But Sunny, I didn't ask you about this one. Essentially, it will entail the acquisition of one of their subsidiaries by an investment co, and then the subsuming of that investment co into Gabriel India. But what analysts are saying, and I wonder if you've looked at it, is that it would be EPS accretive for Gabriel India because the EBITDA margins and the return ratios for these companies that they will be acquiring are superior to Gabriel India.
Yes, I agree with the view that all these three, four entities which are likely to get merged with Gabriel India, just we were going through their financials, the margin profile and return ratios are far better than the existing Gabriel India. And at the same time, one more positive factor for Gabriel is the diversification of the portfolio. So earlier, predominantly being a shock absorber and sunroof driven company, the portfolio get diversified, the customer base get diversified. So I think it's pretty much again a win-win deal for the Gabriel shareholder. Again, in long term, I think the merged entity can deliver a fantastic value for the shareholders of Gabriel.
Okay, some more movers in the pre-open session, and let's quickly go through all the action that we're seeing in, it's halfway through the pre-open session that we're going. We talked about Gabriel India. I want to look at what's happening with Raymond, the entity which is listing today. That'll be in focus as well, about 2% up. Demerged entity will list today. Let's look at Apollo Hospitals and see where the rates there have settled. Just halfway down, about 3% up. So that's going to show some action. Vodafone showing a lot of action, about 4.5% up. Schneider Hospital is the other one that's moving this morning. Sona BLW. I just want to talk about Sona BLW for a second. And Sunny, you may have seen the reports yesterday. Reports coming in that Sona BLW is seriously looking at rare earth mining. In terms of all of the squeeze that we are seeing vis-a-vis China, etc., they want to get into this. This was a Reuters report that was quoting a conversation with the new CEO. What do you make of Sona BLW right now?
Yeah, I think in case they are able to win some mines as far as this rare earth mining is concerned, definitely will be kind of positive. But at the same time, auto as company venturing into a mining business, I think I don't know. I think Street may take it negatively because ultimately one has to keep in mind that mining as a business, there the valuation multiples are relatively lower as compared to the auto and business. And again, there is a lot of volatility in terms of earning based on the end product prices. Anyway, coming to the core business of Sona BLW, I think trading at a relatively expensive valuation. So would like to take a neutral stance at a current juncture.
Neutral stance on Sona BLW. It's time to go to the big brokerage call of the day, and the one that we've chosen for you today is a CLSA note on DLF. And we've spoken briefly about the real estate companies that have been on a bit of a lull in the last few trading sessions. CLSA has maintained a high conviction outperform on DLF. Harsh is joining in to tell you why. Harsh, morning.
Good morning. They've hiked the target price from 925 to 1025, thereby offering a 21% upside from the current market price as well. What CLSA is saying and what gives them confidence is that the last 3 years, every launch that DLF has made has been lapped up and inventory which has been launched has been lapped up just within a few days, is what CLSA is saying. So price hikes have been extremely prudent. They haven't been exaggerated in terms of their price hikes, and they are exercising restraint even in bringing supply to the market. So there's a good balance between those three factors that are playing out. Then they've spoken about the financials, the balance sheet. They've lowered debt. Debt in FY20 was at 5,300 crore. Now there is a net cash sitting in the books of around 6,800 crore at the end of FY25. This is not through a fundraise. This is not through any equity raise that the company has done. This is purely through internal accruals, and that's what really stands out even when they're comparing DLF with other developers which have gone in and done equity dilutions. DLF hasn't, is what CLSA is saying. Most developers are focused on pre-sales. That's the third factor. 15 to 20% per annum is what most developers are targeting. DLF, on the contrary, is focused on high cash flow and margin, is what CLSA opines. The cash flow surplus over the next 4 to 5 years should be a 30,000 crore number, is what they are saying. They are expecting 60% gross margins versus 35 to 40% for peers, and they raised their pre-sales estimates, and therefore they've raised the target price as well.
Okay. Well, no big reactions to that one, but you could argue that in some sense there aren't very large reactions per se in the markets today. Nifty IT is absolutely flat as the end of the 8 minutes. Nifty and the Sensex 2 absolutely flat. Nifty 100 is kind of flattish too. So we were looking at a start marginally in the green, but a flattish start nevertheless. Yes, of course, there will be movers and flyers. So Gabriel is a case in point, which is doing well. Dixon is starting off slightly lower. Apollo Hospitals is 3% higher. So that's not doing too badly. And Asian Paints, for its part, is about 1.6% higher. But those are few and far in between. Now, the key is what to do with some of the stocks on which there were trending moves, right? So, Kunal, what about Asian Paints? Ever since these announcements of AkzoNobel has come in, well, Akzo had a reaction and then has plateaued out. Asian Paints has actually had multiple moments of some very strong moves. If it starts off about 1.5% higher at about 2350, 2380, is there a further trade here?
So Neeraj bhai, these are the counters which I love the most because of favorable risk reward ratio. One is Asian Paint, the second is Polpal, which is also at the near to the low level. Now, interesting observation on Asian Paint is that this counter has been sideways consolidating since 7 to 8 months. The resistance is placed at around 2460 and the support is at around 2280, 2300 kind of levels. So yes, this level looks very attractive. One should not be in hurry to accumulate this because the consolidation might go a little longer. On breakout, one can quickly initiate the trade, and that breakout is at around 2480. For now, it is in between. Yes, it can be accumulated from the long term, but one should not expect immediate move on such kind of counters, but extremely favorable from the risk reward point of view.
What else? Well, not too many big losers, if you will, on the all cap as well. Gabriel is really zooming in trade, and then there is NSCL and Schneider Electric, etc., which seem to be doing okay. On this bucket, Sunny, the Schneider Electric and the peer sets of the world, or even the genset companies, there is a note today that genset demand is looking very, very strong, and therefore a Cummins India, etc., could be doing okay. Any thoughts here?
Yeah, so I think the entire power transmission or power ancillary as a sector continue to look pretty well in terms of the way order book and the demand environment is placed for this entire pack. I think again Schneider, no doubt, again Schneider, Hitachi, whether it is a Siemens Energy newly listed entity, they continue to look pretty well. But one company where we are pretty much bullish on is T&D Power. So there we feel that the potential upside is pretty good from here on. And again, another way to ride this sector is through power and cable and wire segment. So the entire cable and wire segment also looks pretty well over the period of next 2 years. So whether it is Polycab is one of the company which we like from power ancillary space.
I do want to point out Bajaj Auto numbers came through. The reaction is, I think, a little bit tepid on the stock. It was initially positive. It's lost a little bit of ground. Let's see where it opens. The fact is that the domestic two-wheeler sales are a little bit of a disappointment. They're down about 16% for Bajaj Auto. Exports are a little bit of a bright spot on the other hand, with growth of about 18% in the month of June on a year-on-year basis. Three-wheeler sales, which contribute quite a bit to the EBITDA margins, are flat, completely unchanged at 39,143. Exports have gone up by as much as 49%, but it's a very small number. All told, their total sales, including CVs, which is the three-wheelers, up about 1%. And Escorts Kubota has also come out with its numbers. This is a tractor manufacturer, as you know. Exports are a bright spot here, but again, very small numbers. Domestic sales are just about flat for Escorts Kubota at about 11,000 units. Exports up about 114%. So watch out for this one. Just about 1/3% in the pre-open session. Any updates based on what you've seen, Sunny? Very quick view on Bajaj Auto. Are you disappointed with a 16% downtick in two-wheeler sales, domestic?
I think it is in line with expectation. I think, again, Bajaj Auto was expected to report a weaker set of number on domestic front, and export was something that was supposed to do well. So I think, again, inline set of number as far as Bajaj Auto is concerned. Again, Escort was also expected to report a muted set of number. It was clear-cut guided by the management that northern belt of India is where the demand is still lackluster, and hence they may see some weaker sales momentum over the period of next 1 or 2 months.
Okay, a few more, buzzers to look at. I just want to pull up Hutco. I want to pull up Ireda and SBFC Finance. SBFC buzzing after that Investec note yesterday, but Hutco not half bad in the pre-open session. Ireda, let's just look at Ireda again. So some of these have had good business updates coming in. Kunal, on charts, any of these that you're finding interesting, especially Hutco, Ireda?
Absolutely. Hutco is looking very attractive. The breakout is placed at around 255, and this counter has not crossed 255 since November. So on the chart, it looks like it's forming inverse head and shoulder about 255 with the stop of 240. One can go long with the target of 325 to 330.
And Kunal, if I were to push you, based on the after the pre-open session rather is over and we know the rates, if you had to bet on one top call for the day today, which would that top call be?
So Neeraj bhai, I think Prince Pikes is opening good, and since 3 days good momentum is seen, though it's opening flat, but still at this level it's looking good. So one can go long on Prince Pike with the stop of 355 and target being 400.
Okay, a stop of 355, a target of 400, the current market price of 368, opening flat, which maybe gives you a chance to buy into that stock as well if you indeed want quantities. That is Kunal Ramya's top call. We'll talk about it during the course of the day and market on closing as well to see how well the stock has done. I guess it's a positional trade and not necessarily a day trade, so bear that in mind. We'll also ask Sunny about his favorable mid-cap idea at the current juncture. But here's how the markets are starting off this Tuesday morning, and one would expect a flattish start, marginally in the green. That's exactly how we've gotten it. Banks 0.17, 0.18%, IT do the same. Is mid-cap and small-cap indices doing the similar thing? Yes, they are. I mean, 0.2% and 0.24%. So it's a quiet little start. No complaints whatsoever. Let's get the heat map up on the screen and see what's moving and what's not. Very little red. Okay, actually, even Stevens, you could argue, on the red and the green. Bajaj Auto, a mild reaction to its monthly sales numbers. Tata Steel, Hindalco are a couple of stocks which are down. So metals may be a bit on the back foot. Nothing dramatic, but clearly the top two losers are the metal names here. And then a few auto names. M&M2 is starting off marginally lower in trade. What's doing well? Apollo Hospitals, a strong reaction to the demerger of the online pharmacy business, and most brokerages have given a thumbs up to it, saying that it was a bit of a drag on them. Citi especially said this. Asian Paints 1.34% higher. BEL, a small order win, that's about 0.183. Dr. Reddy's 0.62. There is HCL Tech, which has signed a partnership with OpenAI yesterday, and that's up about 0.5%. Adani Enterprises, Jio Financial, HDFC Bank. So that's the long and short of it. As we speak, by the way, Trent is the top loser. But I think if you want to take one takeaway from the index stocks at least, it seems to be Apollo Hospitals up 4% and counting.
Yeah, that's where all the action is. Asian Paints not half bad as well, I must say. Asian Paints on that AkzoNobel deal. And maybe its share of it looking good. BEL has a good order win, so maybe some action on BEL as well. But let's look at the broader markets and what's happening with the broader markets this morning. We've seen the broader markets outperform the Nifty and the Sensex for the last few sessions. Does that continue today? Well, not quite, but still 0.25% up on the Nifty small cap 250 as well, and thereabouts the same on the mid cap as well is what we're seeing. Let's pull up the sectoral heat map because the Nifty, they're completely flat, looking like it's going to dip into the red any point. India Defence up, and that's possibly thanks to BEL really, because very few stocks on that index, so any one of them firing can pull up the entire pack. So that's moving well. Nifty Realty is doing well, and we'll talk about DLF in just a second, see what's happening there. After that, very positive view coming in from CLSA. Healthcare also doing well. That's again Apollo Hospital. So it's individual stocks that are pulling up these indices because no massive moves, as you can see. Consumer durables in the red. Auto is going to be in focus today because of sales numbers. It's the 1st of July, 1st of the month, and you'll have sales numbers for the previous month which comes in. That's going to give you perspective of what's happening with auto. But let's get to individual stocks where all the action is. Actually, I want to pull up the VIX very quickly before we get to those individual stocks. Let's look at what's happening to the India VIX. Mildly in the green, which shows some volatility, but not too bad, under 13. So nothing really to worry about there. We talked about Apollo Hospitals. I'll just pull it up again to see what's happening there. Top Nifty stock and possibly top stock on the NSE 500 as well. 4% up now because of that demerger plan. Raymond is the other one that I want to track. The realty business will list today. 5.5% up on Raymond. You heard from Gautam Singhania this morning. Gabriel India has also announced a major business restructuring, and that's the theme in the first three stocks I've picked at this morning's open. All of them re-looking at their businesses in a very sensible fashion, and the street loving it. Look at Gabriel, 20% up. We'll get a detailed report on that soon. Now, DLF is the other one we're talking about. It was our big brokerage call this morning, 1.5% on that bullish note from CLSA. Dixon, that's not quite the story. Morgan Stanley has actually downgraded it, and it's 2.5% down right now. Ambuja is the other one we're looking at. They had an investor day. The management has spoken to analysts, and the stock 1.5% up. A few positive brokerage notes there as well. Ireda and Hutco is the other one I want to look at. They've had good business updates coming in for Q1. We're entering the season of business updates now. Both up in the green. Ireda doing even better. Let's look at Sigachi. We had a ground report from Sigachi. There was a blast at the Telangana unit, and there have been 34 people dead. Very, very, very unfortunate. Sigachi now down for a second day in a row, 5.5% down. So these are some of the movers this morning, but broadly few and far between, Alex, which are showing any great action. A little bit of a wait and watch.
Yeah, no doubt. Wait and watch. And as you've been speaking, a few of the stocks that you mentioned have also moved higher. Raymond, for example, up about 6% as we speak. Kalpataru Projects is a stock that I had highlighted to you before the start of trade, is up about 3% on the back of an order win. You have a couple more that I will pull up. Gulf Oil Lubricants is moving quite smartly at the start of trade today as well, up about 4%. NACL is another stock that is among the gainers and moving sharply. It's up about 5% or thereabouts. Sigachi has already been pointed out, losing ground after that very unfortunate accident. You have Tarrell, which is Transformers and Rectifiers Limited, which is among the losers in trade today and losing about 2.5-3% or thereabouts. And finally, Sadhana Nitro is among the losers. I wonder if it is recovered just a tad bit, if we can pull up that stock and see where it is at. It was among the losers, but Sadhana Nitro also among the losers. You have Schneider Electric, you have Graphite, you have Deepak Fertilizers, all gaining about 2% each. I wonder among the names that I've just pointed out, Kunal, something like a Gulf Oil Lubricants, which is suddenly moving higher. Anything that gives you the confidence to trade this on the upside?
See, again, Alex, this counters I think are more or less on the sideways consolidation itself. And if you look at the Gulf oil chart, this counter is now trying to come out of the broader consolidation of last 9 months. That breakout is placed at 1300. Right now it's trading at 1307. So by any chance, if it gives closing near to the high for the day, I think then the new rally might just emerge till around 1450 to 1500 levels. But otherwise, this again is a level to be a little cautious.
Okay. Okay. You know, some of these healthcare names have done very well in the last few days. Kunal, the one which is hitting new highs, I mean, I found this of a post, right? And there's so many stocks, of course, which are doing that. But I was looking at the stocks which have moved up in the last few days and hitting new highs, which included a Laurus Labs, for example, which included SRF, which included, of course, we spoke about Force Motors, but also ITD Cementation, Deepak Fertilizers, Indigo, etc. But Laurus stood out for me, up marginally in trade today as well. Any thoughts?
So Neeraj bhai, these counters like Laurus Lab and all, these counters they are trending in nature, but again, as we discussed earlier also, they are near to the high of the trend, right? So any decline in the counters for a day or 2-3 days of consolidation can give us good opportunity to buy, because even if we buy at these elevated levels, the stop loss is going to be very, very far from the present levels, like 650 to 660. So in these trending counters, I would advise to wait for a while. Whenever there is a small correction or consolidation, we should accumulate at that time. But yeah, the fertilizer stocks are looking very attractive to even me. RCF and KSCL are the best counters which are at this level and offering good risk-reward ratio also. So Kaveri Seed with the stop of 1100, one can go long, and the positional targets can be 1350 to 1400 levels. And RCF, which is at trading at 160 with the stop of 155, one can go long, and the targets can be 175 to 180.
Okay, quick view on IDFC first. It is up and about 3+% higher, 3.5% higher. Kunal, quick view, and then Sunny, I want to get a view from you on the valuations. But Kunal, would you buy in at this point? It's been range bound broadly.
Correct. And today itself, it gave a breakout, and that breakout was placed at 73.50. Right in the morning itself, at opening, it gave a trigger. So with the stop of 73, one can take a definite bet on this with the target of around 82. Now that's again going to be positional. So keep trailing stop loss on this trade. I think good momentum is picking up here.
Sunny, quick view on the valuations in the context of that worry that you had, or not you, but I'm generally talking about investors having a worry on the asset quality side, which because of its microfinance book and the pressure that you saw there, but it's still trading at what, about 1.5 times price to book. So would you say that it's attractive at this point for the long term?
Yeah, I think valuation are comfortable, but ultimately the street will look for the color on asset quality for the June quarter, and then probably we may see a kind of upgrade from the analyst community. So as of now, our fair value is close to 70-75 rupees, so we continue to maintain a neutral stance on our IDFC first.
Okay, Raymond blistering this morning. I wonder because of its, I mean, clearly it is because of the listing of the realty arm, but Raymond completely blistering this morning, Endurance doing well. I just want to pull up and see what's happening with IndusInd. I think IndusInd is a stock that you need to watch carefully over the next few days because a whole host of things happening. We know from public information that the last day for the board of the bank to give its candidates for the next MD and CEO was yesterday. So that would have come in by now. Of course, the RBI will take its course to decide, and that decision will be very, very important. Sunny, are you seeing a trade here with IndusInd Bank?
Yeah, so coming to IndusInd Bank seems to be that all the issues are as of now behind us, and the new management is likely to drive the bank going forward. So in terms of valuation, definitely trading very close to or less than one price to book. So valuations are very comfortable. Ultimately, would like to evaluate what are the growth plans going ahead, and then accordingly would like to take a bet. So high risk, high return investor can definitely accumulate or allocate some portion of a portfolio to an IndusInd Bank. But again, one has to keep in mind that still the clarity on the growth drivers going forward are still yet to come from the management. So we'd like to wait for that. A small portion can definitely be allocated.
So just talk about Raymond. So, you know, what is baffling is, I mean, anyone who's buying the stock today is really not going to get some big advantage from the listing of the realty business, as I understand. Why do you see, or in your view, why are we seeing this bump up on Raymond this morning?
Yeah, so again, yes, as you rightly pointed out, there is no benefit of listing of Raymond Realty for a Raymond shareholder as such. Overall, I feel within now the piece which is the key growth driver within the Raymond is the engineering business, where they have recently forayed into an aerospace and defense as a segment. So that can be one of the key growth driver going forward, and that can be one of the trigger or that may be one of the factor that is exciting the street as far as the Raymond Limited is concerned.
Okay, 8% higher for this one and counting. Today, after a while, I'm seeing Electra Green Tech in the green. So that is the other interesting one.
Why the laugh?
No, because, well, it's had so many order cancellations, etc., that you don't see it in the green per se. But today it's in the green, so which is interesting.
I like so you've been on a roll with your wordplay today. Electra Green in the green, Force Motors
in the Force. Okay, but the brokerage note on Dixon is bringing Dixon down, so keep that one in mind. But yeah, no, let's focus on the gainers and let's try and see if there is some other stuff. So Alex marked IDFC First Bank because of the Invesco note that is doing well. And I think NACL and Nesco is this, I mean, Nesco is not a very large company, but they are undertaking a 3,500 crore expansion plan in one of their units is a big deal. So that stock is up 3% on volumes, unusually higher than usual. So keep that in mind. But the star of the morning has to be Gabriel India. It's unveiled a major restructuring plan to transform into a diversified mobility solution provider. Puneet Johnson with more on this. Now, Puneet, just explain to us, what is it that Gabriel is trying to do here?
Well, essentially, Gabriel India is a listed company within the larger Anand Group, which operates in the auto space, auto component space, essentially. And the company also had a lot of unlisted verticals, which are not part of the listed entity within the auto space. So they had 3 joint ventures as well as investment in one other company, which was not part of the listed entity. Now, with the restructuring happening, all the 4 verticals and the existing auto business come under the listed entity Gabriel India. And essentially, from a one product company, they will become a multi-product company going forward. And this essentially would come not at too much of a cost. So in terms of valuations, it were getting pricey, but now with newer businesses coming in, newer verticals coming in, and a ready-made revenue which will be added in the company over the next 12 to 18 months is giving that kind of positive pivot and a next jump which could take a while for the company. So the company largely operated in the suspension space, so it was one product, and they had diversified into sunroofs. But now with the 3 new joint ventures that will come as part of the listed entity, it becomes a key offering, and the company's market cap it hovers between 10,000 odd crores. So it's essentially giving that big push to Gabriel India in that aspect. And as I mentioned about the multi-product aspect, what they will now do essentially is 3 key steps. One will be, of course, to the merger of a couple of companies with the investment company AIL. The demerger will be happening of one of the key verticals which is not related to auto, but because of this, it could add revenues of almost 600 to 700 crores once this merger and this restructuring is complete. So the analyst call today is scheduled at 11 a.m. and a little more detail on how the payment structure will happen, because right now all they have mentioned specifically is that 1100 shares of Gabriel will be issued to the investment promoter investment company. Looks like the market is taking that positively, but the stake will come down to 55%. So essentially, it's that the unlisted business is coming into the listed entity, and the growth pivot has come much faster than what analysts had estimated.
Up and about. Thanks a lot for that, Puneet. Sunny, very quick thoughts here. Maybe we spoke about it earlier, but any views on Gabriel? I mean, after this 20% uptick, can it do more fundamentally?
Yeah, I think Neeraj bhai would like to hear more from the management during the analyst call and then work on the numbers. But a clear-cut diversification, as you were discussing earlier also, from a purely shock absorber or a sunroof player to a very well-diversified portfolio, even in terms of client base, the portfolio will widen significantly post this amalgamation. So I think looks well placed in terms of long-term growth driver. In terms of whether this deal is EPS accretive, we need to hear more from the management during the analyst call schedule today.
Okay, so Gabriel in action this morning. We're looking at IDFC first, up and about as well. But, I'm wondering on the auto pack, are there any positions that you would want to take right now? Kunal, I'm coming to you on this. Bajaj Auto, and let's pull up Bajaj Auto. Just a couple of updates have come in. You'll see more in the next few hours or so. Bajaj Auto with those updates, not really in the negative, but not doing great. Escorts has some updates coming in. They're also a bit sluggish on the domestic side. Exports are good, but exports is a very small number, although that stock is up. Between the two, Kunal, just Bajaj Auto and your view there right now?
So on Bajaj Auto, the short-term trend is definitely negative and the mid-term trend is sideways. So if someone wants to trade options, then I think good strategy is available in Bajaj Auto, and that's creating short straddle near 8,000 mark. The counter which is near that level, I think with the 8,000 as a straddle, one can go long on futures and short straddle. That can be a good short-term trading strategy. Otherwise, for the trending positions, I think none of them are looking attractive at this point in time.
Okay. So that's the set of stocks. We're just waiting for Pratik Agarwal to come in just moments from now. But just before he does that, the other question would be that what to do with the stocks which have had fairly volatile, choppy last few days and are correcting today now that they are down. So Dixon Tech is the case in point. Right? I'm talking about Dixon, and that's down about 2.5%, and which probably 3.5% now, in fact, amongst the top losers, right, on the BSE 500. And which brings me, Sunny, to the point that EMS seems to be this bucket which will have fairly good growth over the next 3 to 5 years at the very least. Would you use these dips to add on to, let's say, a Dixon or an Amber or a Surma or some others? And is there an EMS stock that you like at the current valuations?
Yes, Neeraj, I think definitely, the growth runway is pretty long for the entire EMS as a segment, and we continue to remain bullish on players like Sirma, where the valuation is very comfortable. Amber Enterprises, where we are seeing a diversification from HVAC product to a component backward integration, as well as many new product offering which Amber is offering. So that's another pick. And another one more name which we like is PG Electroplast, where we have seen a recent correction from highs of 1,000 to close to 750 rupees. So there, although the summer was muted this time, but we feel the potential, the long-term potential in terms of penetration of air conditioning product is still pending, and PG Electroplast can be one of the key beneficiary of that. So these three names from entire EMS space.
Okay, thank you so much, Sunny. Thank you so much, Kunal, for joining us in the first leg of India Market Open this morning. We turn to a very interesting conversation with Pratik Agarwal, MD and CEO of Motilal Oswal AMC. Pratik, great to have you on, and thank you so much for your time. I mean, we are, I would say, on balance in a very unique position in the markets right now, and I would love to know your view on it. The next big trigger seems to be a trade deal which comes in. Is that the kind of push that we need to wait for?
No, so one, we had on April 2 some contours of the trade deal, and markets reacted. Point is, while that was happening, market stabilized, and April itself was not bad, not only for India, but for the globe. I'm saying for the globe because while we may have been positive for a trade deal and all of that, it got deferred, but every country recovered pretty well in the month of April. Point is, if we are looking at immediate term variables, we are looking at the bond yields in the US softening. We are looking at crude being weak. We are looking at inflation being down and dollar weakening. DXY sub 97 after a long while. Now, all of this points to good outcomes for world ex of US, emerging markets and risk assets. So I think one should remain positive in this kind of a construct. Now, trade deal is around the corner, yes, but chances are that if we look at the big picture is that two large economies are trying to, let's put it this way, engage less, which means some bit of slack will have to be picked by everybody else. And hence everybody else should stand to incrementally benefit is the way I would look at it. How much benefit, time will tell, but then in many categories, if a lot of the populous countries are excluded, then we should end up benefiting more than not. So I would be positive, I would not be negative. While there are news items which say, agriculture, dairy, etc., being a showstopper. Point is, one has to put yourself in the shoes of the guys who are doing it. So first you say no, the other guy also says no, it won't happen, and then if you want it more than the other guy, you say okay, we will do so much. So much can be done through quotas. If you look at UK-US deal, the spaces which were difficult, people have opened up through quotas. So there is a limit to which you will import and all of that. So I think it is doable. Let's see.
Got it. Prateek, so let's assume that the geopolitical premium or discount is difficult to decipher and probably not happening per se, because the world is moving very fast. So if you're taking a 1-year view, you can't really bake in what's happening in geopolitics per se, because conflicts are coming in and ending in 12 days. So let's try and focus on ponderables that we can think about. There's a lot of dichotomy, Prateek, on how the strength of earnings would be for India, especially in the first half, because people are looking at the advanced tax numbers and saying maybe the earnings will not be good, and then looking at the base effect of Q1 and Q2 of last year and saying that maybe the growth numbers look okay. How do you think about this?
So on the index, which is what most people talk about, it would be nominal growth of economy plus minus % or 2 depending on margins, and that includes inventory effect and all of that. Now, while you can look at base effect and advanced tax, you could also do real growth of economy plus inflation. Now, inflation has been down, so which means nominal growth, economic growth would be lower, which then means impact on corporate revenues and profits would be there. So, if you are expecting 10 to 12%, maybe one should expect a lower number, say around 10%. But that is index. The story of today is not the index. We have been saying that, just like software happened in the 90s, and mind you, when software happened, that was about the time India pledged gold, and we were in a very tough phase of our economic life. But software, the new space, continued to grow strongly for several years and generated large alpha for investors. In the same manner, private sector banks did it in the early 2000s till 2020 and so on. So the newer emerging spaces which were probably not there in the market 5 years back, are these spaces to look at. They offer meaningfully higher quantums of growth, and the growth delta in newer spaces versus the index, which comprises of legacy spaces, is I think expanding, not shrinking. So we think that is where one needs to focus on. And just like the 90s, this is a period of alpha. Alpha meaning excess returns over large cap indices.
Okay, Prateek, I'm wondering where you're seeing those returns coming from. Where is the alpha getting generated? Because if you look for sectors which are yet undiscovered, the discovery has just become so much more robust. I would put it like that. And that does that pose a fresh challenge. Do you think that there is still value to go, say, in banks, in private sector banks, in some spaces like IT, etc.? What are you liking right now?
No, so we are a growth in earnings focused house, sustainable growth in earnings. Any space which does growth in earnings similar to that of the index per se, you should not expect us to be there. So many of these spaces that you said are very low in the house, many are not there. When I say newer spaces, just think of it. Capital market was hardly represented in the markets 5 years back. There was no mutual fund also listed. There was no electronic manufacturing listed. The conversation before me was on electronics. There was no new tech listed. There was no solar renewable listed. There was no EV listed and so on. There was no in pharmaceutical spaces like GLP-1s, which can offer very strong growth listed. Luxury was a very narrow sliver in the market, and so on. So yes, our house would be expected to be invested into something like NBFCs, but a lot of these new spaces and all of them happening together at the same time, to our mind, never happened before, are these spaces which offer growth in earnings significantly higher than that of the index. I mean, a lot of these spaces are small, so they are not held back by the size of the economy and the economic growth. These are the spaces which are driving the next $1 trillion expansion of the economy. And we believe these spaces held for a long period of time in a portfolio, not space per se, could deliver good outcomes for the investors. Frankly, we have been doing this for now 2.5 years.
Prateek, what is the downside to our markets? Is it lack of earnings growth, or is it a global factor which could lead to puncturing of the momentum that we're seeing right now?
No, so increasingly our markets are less linked globally. FPIs, if you see over last 2 years, would have put in close to net zero in the markets. While they come in, they create a lot of noise. They go out, they create a lot of noise. But over 2 years, they're close to zero. It is domestics who have put in over $100 billion in the same period. So any time you see a sharp negative event on account of global, and for that track US bond yields, track the currency, those are two things which cause violent reactions of FPIs. I think any sharp downtick in the Indian market has always proved to be a great opportunity to come in. As of now, when the stated policy direction is a weak dollar, when inflation is down, and chances of rate cuts across the globe are increasing, I think it is time to stay constructive. And if you are looking at two styles of making money, value and growth, we say it is time for growth style of investing.
All right. Thank you so much for speaking with us, Prateek Agarwal there, talking about the outlook that we're expecting, and trade deal continues to be the big one. I think I found it very interesting when he said that any sector which is generating the same returns as the exchange doesn't make it to their list. So you have to spot the winners there. All right. Our focus this morning on KRN Heat Exchangers. The company is in focus on the back of a massive capacity expansion plan and a recent MOU with the Rajasthan government. We will speak with the management, but before that, let's get Anushi to set up that conversation with us. Anushi, very good morning. Let's start with the quantum of the capex plan or the expansion that they have talked about.
It's a big plan in terms of where the capacity expansion is heading for KRN Heat. Now, what the update was, now they've started the commercial production at the Nimrana plant in May 2025. Do note that subsidiary KRN HVAC Products had signed 1,000 crore of MOU with Rajasthan government for a period of 5 years for aiming into entry into high growth sectors like railway electrification, heavy equipment and industry cooling. So with this capacity expansion plan that we're looking at, the capacity is set to expand by 6 times from the April April 25 levels that we have seen, which also means that going forward the revenues would also be in line of that kind of a growth that we are looking. But how soon would that pan out to be is something that we need to be questioning the management for. Initial capacity utilization levels, if we see, is expected around the levels of 20 to 25% with a scale up of 80 to 85% over the next 3 years that we are seeing. In terms of how the company performed in FY25, the revenue was up around 39%, while there was some bit of a pressure in terms of where the margins were at 16% as compared to a 19%. So we did see about 257 basis points of a contraction there, while net profit was up over 34%. It's the export picture also, which is an interesting one. From 16%, they're now eyeing an export mix of around 30 to 35%. In other key highlights of the business also, now they've received approval under the PLI scheme for 142 crores for white goods that we are looking at. Along with that, even in terms of the railway segment, they've received vendor approval from Ministry of Indian Railways for supplying oil cooler radiators for converter transformers. So how the outlook for that, the growth from that story is also something that we should be focusing on. So these are overall the trigger points for why KRN Heat continues to remain in focus.
Okay, KRN in focus, and we're speaking with Santosh Kumar Yadav, the CMD of KRN Heat Exchanger and Refrigeration this morning. Mr. Yadav, thank you so much for your time and for joining us. Let's talk about the operations that you've started in the Neemrana plant. It's a 6x target revenue. And you started in April of 2025, if I'm not mistaken. What is the status check on it, and how do you see this growing in terms of revenues for FY26?
So good morning, Tamanna. So we started commercial production 30 of May. So from now almost 1 month.
Okay.
Had we promised earlier, we delay almost 3 to 4 weeks, but finally we started commercial production 30 of May, and now we are seeing all thing in streamline. We are getting customer inquiry, and we are hiring manpower for training, QMS system, customer visits. So all thing online, and what we promise, we will grow in next 3 years. As of now, from our existing capacity to almost 6x. So we are online same path.
So in terms of revenue growth, what is going to be the contribution to revenue growth?
So this capacity we will utilize almost 80 to 85 next 3 years. So this year we are planning around 20% of new facility, and existing facility almost full. So you can maybe you can conclude like that ki existing almost full and 20% from new facility.
Mr. Yadav, good morning, Neeraj here. In FY25, was the existing capacity at full utilization, or has it moved to full utilization now? Just trying to understand the full utilization of the existing capacity and the 20% of the new facility. What does that add to in terms of growth for you for FY26?
Good morning, Raji. Actually, this our existing capacity is almost full. So last year we achieved almost 400 crore plus turnover from existing facility. So it's the peak for this existing facility. And this year we are adding 20% from new facility. So you can say 400 plus 20% from new facility.
Okay. So about a 20% growth anticipated. Do the products from the new facility have similar kind of operational metrics and return ratios as the old facility, or are they different?
So in new facility, we added 5 to 6 new product as well as existing product. So existing product, you can say we can get the same percentage of revenue. But from new products, first we have to enter in some aftermarket, especially for refrigerator parts. For railway, we will get slowly growth. So you can say in next 2 quarters, we will have pressure on margin from new facility, but existing we can get the same. And then after 2 quarters, we can also get same revenue or same EBITDA from new facility as well.
Kul milakar, Yadav ji, in the next 2 quarters, your margins are back at 18-19%, or we will see this spin?
No, it's existing facility we can get almost similar as we achieved in last quarter. But new facility you can say some pressure on the margin because of overhead and
consolidated वाला बताइए, consolidated वाला बताइए, 2 quarter बाद आपके consolidated margin किस range में होंगे?
So after the 2 quarter, I think it will be maybe grow slightly as we achieved in last quarter.
Okay, so that was in the 16 to 17% range that we will continue to see in 2 quarters. Tell us about the PLI scheme. You've got an approval for 142 crore for white goods PLI scheme. Can you give us more details on that? What is the plan here? What is the strategy?
So PLI basically we achieved in white goods and LED segment. So in large segment and component base, so we received on heat exchanger. So total we can get 141.72 crore, but it will start from next year. So this year we are like have to complete the documents and we have to start the production, and from next year, and then so it means we can get in next 2 years. So for 1 year, what we achieve like as a production, so we can get 5% and then we can achieve 4% as an incentive from government.
Okay, and what are the components that you will be making under this PLI scheme? Just trying to understand as part of the larger strategy, why do you want to go into the white goods segment, and what is your outlook for this in terms of revenue contribution? How are you looking at this?
No, white goods actually there is a segment like complete HVAC system, and then we can get in components. So in component we are receiving this PLI under heat exchange manufacturing. So because we are making fin and tube type heat exchanger, so we get the PLI on heat exchanger segment only.
Santoshji, so 429 or 430 crore, actually before I talk about the numbers, sorry, this MOU with the Rajasthan government, the number being spoken about is some 1,000 crore MOU. What is this about? Can you explain?
So Neeraj, actually under Rising Rajasthan, we signed the MOU with Rajasthan government for next 5 years. We can have to invest like 1,000 crore. So we already investing around 300 crore plus as of now. So in next 4 years, we have to invest around 600 crore. So for that, we signed document with the Rajasthan government.
So here's my question, Santoshji. When you invested 300 crores in the new capacity that you've just come up with, your capacity became 7x. Now, if you're investing another 700 crores, are we to assume that in the next 3 to 5 years, you targeting your capacity to be double of your expanded capacity? मतलब अगर अभी आप 7x हो from the original capacity, would you become 14x of the original capacity in the next 3 to 5 years?
So it's not like that actually. As of now, we are 6x compared to our existing facility. So
Right.
it's not. So actually, we like invested in land, building, and some of machine. You can say almost 100 crore plus machinery. But in same place, we can invest more in machinery to increase the capacity. So some backward integration, some new facility. Of course, capacity will increase, but in term of X, as of now, cannot comment. But for sure, capacity will increase.
But which we know, Santoshji, but here's my question then, which is even bigger, right? You don't have to buy the land necessarily for capacity expansion, but you will probably invest another 700 crores in capacity expansion. So I want to understand your vision. You are FY25 or FY26, if you are at 7x of your original capacity, right? What do you expect your capacity to be like in the next 3 to 5 years?
Actually, our planning is like that. First, we will achieve existing capacity utilization in next 3 years, and meanwhile, maybe we'll invest a small amount based on like our line balancing or requirement of our from operations.
Okay.
We will complete this 6x, and then we will invest in additional equipment of machinery to increase the capacity. So
Got
first, as of focusing on for next 3 years.
Got it. Santoshji, just very quickly, one last question. Your FY25 growth was 40%. I heard you say that you will grow FY26 20%. Is that true?
No, it's not like we are going to utilize 20% from new facility actually.
Okay, but how much growth do you target FY26?
So in term of number, like almost I think more than 60 to 70% like that.
60 to 70% revenue growth in FY26. Okay. Lovely talking to you, Santoshji. All the best with the new capacities. Thank you for taking the time out.
Thank you.
That's KRN Heat Exchangers and Refrigeration. Well, large capacities come on stream. They target about 60 to 70% revenue growth in FY26 or FY25. I'll tell you a stock that's buzzing. So KRN, of course, was up about 4% yesterday, up another 1.5% today. Another stock that's buzzing today in trade is IDFC First Bank, up almost 3%. Investec is bullish on the stock. upgrades the counter to a buy. Harsh Johnson with the details. Harsh.
Such a large increase in terms of target price. They've gone up from 65 rupee target price to a 90 rupee target price. Gives a 24% potential upside to an IDFC First Bank. What they're saying is that core operating profit will grow 29% CAGR over FY25 to 28. So very, very strong growth on core operating profit. What's going to aid that number is obviously the OPEX number. They're expecting an 80 basis point reduction in the OPEX to assets ratio, which is extremely large, and they're seeing a tapering down with regard to OPEX. They're seeing OPEX growth of just 13% CAGR from FY25 to 28, while loan book will grow at 20% CAGR FY25 to 28. And therefore, you'll likely see operational efficiencies play out. That's the one big point they're making. The other point they're making is with regard to credit cost. Credit cost will come down by 90 basis points FY25 to 28. Both of those levers to aid the ROA number. The ROA number will go from 0.5% to nearly 1.5%. And that is what the re-rating will likely be, is what they are saying. In fact, they're expecting an ROA 1.3% to be absolutely precise FY28. EPS CAGR to be 57% FY25 to 28. They see operating leverage play out, loan book CAGR of 20%. I spoke about that. And valuation, they're valuing it at 1.4 times FY27 book at this point versus the 1 time which they had attributed to it FY27 a few months ago. So they are seeing a large upside because of this upgrade.
Quite a bump up there for IDFC First, and you're seeing that stock move as well. It's a day of listings, and there are 4 listings. You'll see visuals of 3 of them on screen, and I think one of them, which is very, people are very excited about, Globe Civil. They haven't had a live stream yet. I mean, imagine, not even on their website. But the kind of oversubscription for Globe Civil is amazing. You have Raymond Realty, Ellen Berry, Kalpataru that will be listing shortly, as well as Globe Civil. So all of these will be listing in the next couple of minutes, and a lot of action that we can see over there. You know, somehow, Neeraj, all of the traditional wisdom that people say that don't go on for IPOs, wait for it to list and then see what happens. I mean, you have experts over the years coming and saying it again and again. Indian investing public doesn't care at all. They want to get in on the ground floor of those stories.
Yeah, and some of those have returned so well. So therefore, it's quite the story, really. So keep an eye out for these listings. Very quickly, just as we wait for the listing, by the way, if we can just quickly mark Yatharth Hospital, because they, there's an initial dispute because they received some order from Sagar Sambhag, Madhya Pradesh, order to take over Ram Raja Hospital premises, etc. And then there was some court involvement, some action being filed, etc. The Commissionerate has officially set aside the earlier order, and they have confirmed the company's rightful claim to the land. I believe that's why this stock is up about 4% in trade. Apparently, no further actions or proceedings are pending. So that's one on the buzzing stock. But Tamanna, the story really is about listings today. It's the primary markets. Predominantly, yes, Raymond is also listing, but essentially the activity in the primary markets, so stunning.
It's insane because, what it makes me think about, Neeraj, is that people are looking for new ideas constantly. And that's what Prateek Agrawal also said, that, okay, we'll go back. There was a phase, if you remember, about 6-8 months ago when everyone was saying stick to the tried and tested large caps, your big banks, your blue chip companies. That's clearly not the mood in the market and for Indian investors right now. They want to know what is buzzing now, where are the opportunities right now. So, I wonder if we can get the audio
I
up.
want you all to join me as we go. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Woo.
3 listings, actually 4 of them, but 3 IPOs and 1 more. What a moment.
Yeah.
And all green, Tamanna.
All green and all. Kalpataru, a little disappointing, but we'll wait for it to sort of cook a little bit.
Only 2 times subscribed, right?
Only 2 times. I wonder if we have the Globe. There you have the Globe rates. That was the one which was oversubscribed multiple times. There you have it. All 4 of them on your screen for you in terms of what kind of an upside you're seeing. Raymond Realty, not so much, 4% up. Ellen Berry, about 23% up. Globe Civil, 26% up. I mean, we'll wait for these to, of course, settle. But there you have all of the primary action as we go into a very, very interesting interview on the other side. I'm really looking forward to this one, Neeraj, where Vishwanath Nair has spoken with C.S. Setty, chairman of SBI Bank, at their newest branch. But it's the history of that branch, that building, even one of the tables where they're doing the interview, where the first board of SBI, which was pre-independent India, has actually sat down and made those decisions. So that's an interview on the other side of the break. Don't miss it.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Alright, so chaotic traffic, jackets that get wet in the rain and pothole-filled roads. There's nothing more iconic than Mumbai Monsoon, except maybe one thing, and that's the building that I was just looking at. On top of the building, you will see the Roman numerals for the year 1924. That's the year when this building was built. And what is in this building? Was State Bank of India's main branch for the city of Mumbai, right next to Horniman Circle. And inside, we've got something interesting lined up for you. At the 70th anniversary of State Bank of India, what is it that you're seeing as something that is it a starting point? Is it a big milestone that you're proud of? How are you seeing this?
So thanks for having me here. I think this building is not only the Mumbai main branch now. Historically, the significance of this building for us is this is where 1955 State Bank of India corporate office was present.
Right.
Even prior to that, Imperial Bank of India was there. So from that angle, this building symbolizes not only age and architecture, it is also testimony to the trust, consistency in our service orientation, and being the very significant part of India's economic development. I think that is what it symbolizes. Coming to your question, of course, 70 years is the foundation of State Bank of India in the new avatar from 1955 onwards. But of course, this bank has a history of almost more than 200 years.
Yeah, 219, yeah.
219, yes. And this historical, background and the purpose for which State Bank of India was formed in 1955 has driven the way the bank has been contributing to the society at large and also for the economic activity of the country. I think from there you need to see the 70 years journey from that spectrum, that what is that SBI has played in the systemic role, what it has played in the economic development.
Okay, why don't we take a walk around the branch and try and figure out, the history as well as, of course, the present and the future. Sure. So I want to ask you, this 100-year-old building, how are you feeling when you soak in all of these historical sort of, nobody here was alive when this building was born. Yes. How are you soaking it all?
I think this building, both as a corporate office of Imperial Bank of India and subsequently State Bank of India, and currently in the form of a very large branch of SBI, is a part of shaping the aspirations of people.
Right.
I think it's not only the number of retail customers who walk in here.
Yeah.
And over the years, the corporate banking aspirations and entrepreneurial aspirations of the people have been fulfilled over the years. And also, this office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Yeah.
From that angle, I think it has played a very, very large and important role.
So, 70 years in this avatar of State Bank of India after the SBI Act was born, right? To your mind, when you're looking at this history, what is it that stands out as, this is why State Bank of India was born and this is why State Bank of India as a lender exists? How are you seeing those things?
I think first and foremost, you can't think about SBI without thinking about the great financial inclusion.
Yeah.
The role what SBI has played in that. First, to start with, this is the very purpose of this organization to extend rural credit. I think it has done a phenomenal job in terms of ensuring that the initial phase of its development, in terms of agricultural financing, microfinancing, small-scale industries financing, cottage industries, and take the banking to extremely unbanked areas. We were the first bank to take branches to many villages, many rural areas which have not even heard of banking in those days. So that's I think the very, very important role which you have to acknowledge whenever you talk about SBI.
Yeah.
That people have been brought into the banking system. The second important area is that, that alone would not have helped. That how do you design your credit policies, procedures and products so that, the people who are entering the formal credit system will be able to avail those benefits. And I'll just give you an example.
Why don't we come here and sit down and talk?
During 70s, when the government of India wanted that there should be a large-scale participation of SBI in MSMEs, we have not only taken up just merely extending the credit, we launched an entrepreneurial development program. We trained the people to, how do we set up a small company and take the economic activity. And another important project I would like to mention, what is called Project Uptake.
Okay.
How you ensure that the MSMEs on a cluster basis invest in technology. And there are other important milestones in SBI's journey, in my view, is that, see, the economic crisis from time to time.
Yes.
When the foreign exchange crisis was there.
Of course.
SBI has played a very important role in terms of India development bonds, Research in India bonds. And the other one which we must acknowledge is the digital adoption. How do you take this? If you say the later part of this 70 years journey in the last one decade, SBI has played a very, very large role, either setting up new institutions or setting up our own technology platforms across the banking services. Is also need to be acknowledged that today we democratized the digitalization in the country. The last piece I would like to mention is in terms of our extending the financial services beyond banking. Today we have more than around 18 subsidiaries, non-banking subsidiaries, which provide different financial services. So the evolution of SBI from a mere banking entity to a financial conglomerate is an amazing journey in my view.
You joined the bank in 1988 as a probationary officer at that point in time. Now, of these 70 years, you've stayed with the bank for more than half. I wanted to get a few hits of your career, because obviously during your time at the bank is when the 1991 crisis happened, the 2008 crisis happened, later when the banking sector NPA crisis happened in India. After that, multiple geopolitical crises that you witnessed, especially after becoming chairman. I wanted to get your sense of what your trajectory has been like.
So there's never a dull moment in SBI.
Of course.
See, I think whichever assignment you are there, you always have some excitement. But I don't like to call them hits, but a few very challenging environments, assignments which have helped me to understand and excel in those areas and also contribute in a significant manner was one. Definitely I would like to mention about the Deputy Managing Director stressed asset resolution.
Yes.
That was the most difficult phase where post asset quality review we had undertaken large scale identification, resolution. I think this process, it is not only that we have provided the leadership to the industry. This turbulent environment we also, in my view, provided a calming effect. We have given assurance to the industry that how do we handle this large account resolution. So that is, in my view, I believe that is one of the major moments for me in the career. But the other one is in terms of Managing Director, retail operations. When I took over as MD retail, we just entered the COVID. And during COVID, it was a great humbling experience to see how our staff members react and respond to this crisis.
Of course.
And when banking was declared as essential service, we, from a management perspective, we said that safety of our employees, safety of our customers, and if we can do some business, let us do business. But I'm very proud of my teams that we have done phenomenal job in terms of providing the services. It also helped me to understand the resilience and strength of this organization in a much larger scale. We have almost, you are familiar, more than 22,000 branches, more than 65,000 ATMs. The network had to operate, and we also had rural presence by way of business correspondents. So more than 70,000 of them. So every one of those entities have worked to the satisfaction of the customers, and I believe that through that assignment, I could realize the power and potential of this wonderful organization.
Okay, I've heard a lot about this conference room in this building on the second floor, which was home to the Mumbai local board as well, when it was the Imperial Bank at that point in time. It would be great to have a chat with you there.
Sure.
Yeah. Sure. Okay. We are now entering this conference room, which used to house some of the oldest board meetings in the history of State Bank of India in Bombay. What I wanted to understand from you is, now we are in this year of 2025. There is no real competition for State Bank of India in the current setup in India, in the Indian banking sector. But having said that, there is a expectation that it will only keep growing bigger and bigger. How do you, as a chairman of the bank, how are you balancing this, staying first but also focusing on being like a growing bank?
The competition is always there. I think the advantage for SBI, or the nature of SBI, is that always face the competition head on. So when you are number one, there is a greater responsibility, greater expectations, and also see, we need to constantly redefine ourselves, to redefine the leadership itself. You know, a lot of disruption. So when we look at leadership, we don't look at only at the size. Obviously, we have had the advantage of size, and we are maintaining that. It requires a lot of effort. It's not an easy task to maintain the leadership. But what we would like to position this bank as not merely the largest bank in the country, but the best bank in the country. So what does it mean? It means that, you know, you're best in customer service, best in digital adoption. You are best in ensuring that, you know, your product profile and your processes are constantly reimagined and redefined. And more importantly, the customer protection.
Yeah.
And take the leadership position in many of the areas of the banking, financial services. My reading is that, as I mentioned earlier also, that any banking entity, unless it is able to provide a wide array of financial services, will find it difficult. So from that angle, it is not only our scale and size which positions us, and hopefully will continue to be number one, is also the gamut of financial services across the system we're able to provide. And as a single financial superstore, when a customer walks in, that he gets all the services to SBI, from SBI, which are most suitable for him. I think this is how we want to position the bank.
Financial superstore is a great moniker, I think. But I wanted to now talk about the current sort of scenario that the bank finds itself in. Not just the bank, but also the broader sector, which is that now we've seen large rate cuts come in from the central bank. Therefore, obviously, all of that is passing on to the depositors as well. Not just on fixed deposits, also on savings account deposits. Do you feel at any level that maybe these lower interest rates are the problem that you were facing 2 years ago, which is driving your depositors away from banks? You know, they may not want to put their money in the banks. Borrowing is fine, but I don't want to put my money in a fixed deposit anymore. I'll put it in the stock market, I'll put it in some other financial instrument. Do you feel that that's a problem at all?
So in a maturing economy, I think the financialization of the savings in a large way is happening. Earlier, the financialization of savings just meant that, you know, you keep a bank deposit, right? Today, the options of saving and options of investments have definitely got widened. This is inevitable, you know, as the economy matures, and as I mentioned again, you know, the insurance industry, the pension industry, and the mutual fund industry are growing significantly. But I believe that broadly the customers will look at asset allocation. And we would like to promote asset allocation. In fact, what we would like to educate our customers on two things, since you mentioned, I'm probably front running your question.
Sure.
One is, how do you responsibly invest? That means, you know, you need to have an asset allocation so that, you know, you don't get stuck in an equity market or elsewhere. Number two is the responsible borrowing. This is also another challenge what we see in the ecosystem, that, you know, as a large lender, we would like to ensure that people borrow responsibly so that their credit profile is not impacted. So what I mean to say is that this kind of movement is inevitable. But if they really talk about or think about bank products, we would be on the top of their list. This is our effort. For example, today, we open 65,000 savings bank account, which means that irrespective of whatever is happening on the interest rate side, we offer one of the best savings bank product in the country. I'll tell you, we are the only bank probably in the country which does not charge any minimum balance charges. We said that why we don't publish it as a USP, but we believe that this is a customer-oriented initiative, and this also helps a first-time savings bank account holder. I'm not even talking about the financial inclusion account. Anyway, by nature, they are a zero balance.
Right.
But even in the non-financial inclusion account, somebody wants to open an account. And even if we don't ask for minimum balance, 95% of these accounts get funded. But as a customer service-oriented measure, we do not charge the minimum balance, and a host of other benefits which we give. And our network, accessibility of a network and largest branch and ATM network, wonderful digital channels. I think that is what is our USP in terms of getting continue to be a market leader in deposits.
So obviously the analyst community is slightly more short-sighted when it comes to numbers, but the question of the margin is always something that is bothering a lot of people, especially in the rate cut cycle that we're in. And we are closing to the fag end is what we all understand that. But is that at all a worry for State Bank or for the Chairman of the State Bank of India?
So the net interest margin trajectory is, in my view, would be a U-shaped curve, in the sense that in a couple of quarters we see the margins getting compressed. Obviously, the front loading of repo rate has accelerated the repricing of some of the retail portfolio. For us, the benefit is that we don't have much of that repo-linked portfolio. Our portfolio is broadly either fixed or MCLR. But we want to give the benefit of MCLR reduction also to our customers, right? So which means that you need to calibrate your deposit rates. This is precisely what we have done. So going forward, I believe there are two things. One is the margins get adjusted, and number two, the September onwards, again an unexpected pleasant surprise from the regulator is to cut the CRR by 1%.
Yes.
So that will add, one is it will immediately reduce the cost of maintaining that reserve. And number two, ability to deploy those funds. So September onwards, I think there will be a addition to the margins. So we need to look at the exit margins of Q4.
Correct.
I think broadly most of us would be better positioned.
Coming to the pleasant surprises by the regulator, the project finance guidelines were, I'm sure, a pleasant surprise. I'm sure there was a lot of anxiety amongst the lender community, which the RBI governor even admitted as the cost of regulation. Right? Now that worry has gone away, do you think that you've gotten everything that maybe a bank needed to ensure that you fund that next leg of private sector capex? And then, is that private sector capex finally coming?
I think one major advantage is that the overhang of these draft guidelines is taken out now. That is definitely a positive, number one. Number two, from the draft guidelines, I think there have been a lot of improvement. And thanks to RBI, I must compliment that RBI has been constant engagement with all the stakeholders, whether it is banks or even project developers. They have spoken to a cross-section of people and got the feedback from them. So obviously the final guidelines are, in my view, more conducive for project financing. So I'm not even talking about just about provision alone. I think it has given a lot of flexibility and more importantly, monitoring protocols and recovery pathways, and everything is well defined now, starting from what is project finance itself. So this is a very good development. So we have never shied away from the project financing. So obviously we continue to be the dominant player in the project financing. We have very strong pipeline. While this pipeline is strong, it is not diversified in the sense that it is predominantly coming from power sector, renewables, roads and all. But we would like to see more private capital expenditure in core sector like steel, cement. I believe that I think it will take some time.
Okay. It's not going to be immediate.
Immediate.
I want to also touch upon, and these are my last two questions. First one around green financing, and that's something that's become, was a buzzword about a year ago, but now it's become significantly more important. You're going out for a QIP soon, where you will invite investors to come in. But when global investors are looking at institutions, especially in developing nations like India, they are looking at the green aspect a lot. You have spoken in the past a lot about renewables as a push area for SBI. It's something that you want to keep funding. But outside of that, what else do you see as a potential green push?
See, our efforts for greening or green finance is twofold. One is, in simple terms, is internal to us. In technical terms, what we call scope 1 and scope 2 emissions. Okay. So State Bank of India has taken a lot of effort to ensure that we become net zero by 2030 internally. And this is what our conscious effort is.
Sure.
From a scope 3, which means that your financing units also have to become green. That is maybe we would like to achieve 100th year of State Bank of India. That is 2055.
Okay.
We would like to be net zero by in all respects. Scope 1, scope 2, scope 3. But this also depends on how the country is moving. We need to be in alignment with the country's aspirations, commitments. I think if I remember, I think country wants to be net zero by 2075, right?
Yes.
So which means that we probably would be advancing our portfolio. There are a lot of effort is going on, not only in terms of merely renewable energy financing. We are trying to engage with hard to abate industries, for example, steel, cement. How do we engage with them to move towards greening that activity too?
Okay. So apart from just being a lender, you're also advising them on things.
Advising them and also engaging with them. And trying to see, like for example, we are planning to set up a center of excellence in within the project finance department to understand emerging technologies in whether it is hydrogen, whether it is green hydrogen, or whether it is battery storage. Many of those activities, while technology is developing, along with the technology, the financing activity, our ability to finance them also need to be developed. So we are setting up a center of excellence within SBI so that we not only help our own people to understand these technologies and fund them, we will also help the industry to raise the financing.
Well, last question is this. Now, you are the banker to every Indian. That's the tagline that you go with. Every third Indian is an SBI customer in some one way or the other. Is there a future where SBI becomes or enters that top 10 global list of banks? Because I think that's one of the goals that the country also has, that our financial institutions should be the size of global institutions. You are already within India, whatever the classification that RBI gives, the big bank, which needs to be monitored closely. What is that going to look like when you enter these top institution lists?
So by assets, we are already top 50, among the top 50, and recently the bank also has entered 100 top corporates by profits, the group level profits. So the top 10 banks by assets probably will take some time, but what we are trying to do is that whether we can become top 10 global banks in terms of market capitalization.
Yes.
Which is, market capitalization is just not merely a number. It shows that your efficiency, your stakeholder value creation.
Confidence.
So that is obviously something what we are trying to. We are around 23, 24 now. We have a potential to reach that top 10. But my view is that India itself offers a great opportunity. If we are trying to become economically developed country by 2047, and SBI has about 20% of the GDP. So which means, as the country's economy grows, we have the potential to grow internally. Not necessarily that, I need to grow my global balance sheet, which is currently about 10%, probably it will become 12, 13%. But the potential to grow
within India,
domestically within India, is immense, and we would like to capitalize on that.
Okay. And that includes, of course, at some level, the push from your subsidiaries and your associate businesses as well.
Absolutely.
All right, Mr. Sethi, thank you so much for joining us on this conversation, sir. Pleasure as always.
Thanks for having me.
Thank you, sir.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से
मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is CA Mahima Vajrajani. Happy CA Day.
Thank you so much.
I didn't know that today was CA Day.
Yes, today is Doctors' Day as well. So happy Doctors' Day and CA Day to all the doctors and CAs out there.
Let me add my wishes as well, because I'm not one. Sitting right next to me is CA Mahima Vajrajani, and also to all of you that have become chartered accountants. You keep all of our taxes in order, and you do a lot more than that besides. And if you're tuning in, send us a message on YouTube or write to us, whatever. We've got numbers on the screen, and that's where you can contact us. This is a show, as you know, that gets you answers to all of your stock-related questions. And by the way, a lot of doctors also invest, and
Yes.
I've seen a lot of doctors tune into our program and ask
Yes.
questions as well. If you'd like to ask questions, that's where you can reach us. By the way, let's take a look at where the markets are this morning, and you have gains of just about 0.1%. It's been a pretty tight range for the benchmark Nifty 50. It has headed towards that 25,600 mark and retreated from that point. Now trading just a few points higher than what it was at the close yesterday, but at least we are in the green. Let's take a look at the broader markets as well, and you are seeing a little bit of an underperformance today in the broader markets. They've actually had a 7-session gain for both the mid cap as well as the small cap index, and a little bit of a cool off is really warranted at this stage, some might argue. And so this is pretty healthy, plus pretty normal. And so let's also take a look at the advanced decline ratio. At this point, I think it's more or less even Stevens. And there you go. So it started off with a pretty wide gap, but that has closed, and in fact you have just about a gainer for every loser at this stage. Very quickly, let's also take a look at the sectoral movers. And the big gainer today continues to be defense. It was up and about in trade yesterday. Also a similar gain for the defense pack and a few constituents. We'll get to that in just a bit. BEL, one of them, gaining ground. The auto pack is not doing too much in trade today, and in fact it is just about flat. Of course, the entire pack is in focus on account of the wholesale data for the month of June, and the initial signs are that it's going to be a little bit of a lackluster month. Not least to which for the two-wheeler maker Bajaj Auto, that has posted numbers just a bit back. The PSU banking pack, which was among the top gainers in trade yesterday, is losing about 0.8% today. And I do want to pull up the defense pack just to see what is moving. I would hazard a guess to say that BEL is among the top gainers. It has lost a little bit of ground from the top, but it is up about 3% or thereabouts. and that's because it's just announced another set of orders in a notification that came out yesterday.
Yeah.
It was almost like, by the way, after the 20th of June, we've got another 500 plus crore of orders. It was something like that.
Yeah, absolutely. And we're seeing that gains, I mean, we're seeing that positivity in the stock as well, up 2.7% as we speak. But with that, let's also welcome in our guest for the day, Asta Jain, Senior Research Analyst at HEM Securities, and Swati Hodkar, AVP Technical Research at Nirmal Bang, joining us now. Good morning to both of you. The first question that I'm going to take today is on Concord Biotech. It's a very interesting query because the person has been holding this counter since its IPO, that is August 2023 now, bought at 280 a piece. So it was allocated at 280 a piece, and the stock is currently at 1822. Wants to know if we can continue to hold or not. Asta, hi, I'll come to you on this one. Concord Biotech, what's the view like? Should the person book some profits now?
Hi, good morning to all of you. See, talking about this counter, yes, the IPO came and the issue price was 740. Against that, we are seeing a very, very strong returns right now. So my idea here is to book partial profit, because what we believe that the valuation at which the company has got the IPO now, this valuation has got overstretched, and hence we believe that it's not fully profit booking, but yes, partial profit booking is recommended for this counter.
All right, we've got our next, or rather first caller of the day. Asif is calling us from Dehradun. Asif, first of all, I wish that I was there, and I've heard that the weather is amazing, so tell us what it's like, and also what would you like to know about today?
Hi, sir, good morning. Yes, the weather is pretty good, but it's raining hard over the last 2-3 days, so it's not quite the same as to go out or something of that sort. But I have a query on Dixon Technology. I have averaged it, and currently my buy price is 14,768. And I have a 3-year time frame. I had bought it earlier, way back in 2019, made good profits till 2021-22. Have bought again from a 3-year time frame. I need to know what does it look like on a long-term chart, say weekly or monthly chart, from that perspective of 36 months.
Okay. Okay, so let's get a technical view on this one, and in fact, let me go across to you, Swati, on this one. And good morning to both of you, Asta and Swati. Swati, on Dixon Tech, of course, today it's in focus on account of another brokerage note that has come through. But on the valuations, a lot of people have pointed out, and Asta, maybe you can nod if you think that is the case. The valuation comfort at this stage is not really there, and there are a few other options in the EMS space that could be looked at. But I'll come back to you. He specifically asked about the weekly charts. How does it look on the chart, Swati?
See, as of now, first of all, good morning, all of you. The overall view is definitely positive for longer term horizon, but for short term period of time, we might witness some sort of a profit bookings, because already we have seen a very strong rally from 2023 to the mid of 2024. So the profit booking cannot be denied at the so higher levels. As of now, the immediate support lies at around 12,500 level. If it's trades below that level, then more selling pressure or the profit booking can be seen, which might take a stocks towards to 12,000, 11,800. So those levels are the very crucial levels we need to keep a watch on it. For shorter period of time, yes, definitely profit booking is likely to be seen. If you want to add more quantity, I believe 13,500 to between to the 12,500, those levels are very good levels to take a long positions. At the CMP, 15,200 is acting as a very crucial resistance levels. Unless and until it doesn't gives the breakout of that level on the closing basis, the upside rally is restricted. Any move about that level will see some good momentum or a positive momentum towards to 15,800 to 16,400 levels. View is positive, but for a shorter period of time, we might witness some sort of a profit booking. So you can hold on if you have a longer term horizon, at least 2 to 3 years. So you can definitely hold on.
Hold on is a view, but I just want to very quickly ask the quick answer here. Is there margin of safety when it comes to valuations at this stage? Would you rather put money in the other EMS players, something like an Amber maybe?
For that matter, I am liking Sirma SG.
Okay.
So Sirma is my preferred choice in that space. and I believe that this counter is well poised to move till the levels of 650. So in the EMS space, followed by Kales Technology. So these are the two counters, Sirma and the Kales. We are finding these two counters better play in the EMS space.
A very significant update coming through for Gabriel India. This is the automotive ancillary company. Among other things, it is a manufacturer of shock absorbers. It is up about 20%, not about, exactly 20%, because it is at upper circuit today. And let's pull up some of those lines so that you understand what I'm talking about. This is part of the Anand Group, and what is going to happen is that all of the automotive companies or businesses under the Anand Group are going to be consolidated and housed under the roof of Gabriel India. Now, what is important for you to understand is that a lot of analysts have said that the acquisition of, or the companies that will be acquired by Gabriel India and that will be housed in Gabriel India are better in terms of margin profile as well as return ratios, as a result of which the operations are likely to improve quite significantly. We've got a viewer, Hemendra Nanavati, who's bought at levels of 380, and so he's making a substantial gain, more than doubling. And the question is, should he hold on? If he's holding on, what are the prospects for the long term? Asta, I'm sure that you've looked at the latest development. What does it mean in your opinion, and would you hold on?
Yes, I would like to recommend hold on this counter, because if I look about the development, yes, the development is positive. Apart from that, if I look up to the fundamentals of the Gabriel itself, the fundamentals are pretty rock solid, because they are now looking for the more acquisitions and mergers, which can be the growth driver for this company, and they are now diversifying into the new product line also. So I think diversification into the new product line and looking after the merger and acquisition along with the development which is going on make this counter an attractive bet to deploy the funds in. So buy on dips as well as a hold strategy is recommended for this counter. Initial price target can be set at around 950 to 980 odd levels.
Dips on Gabriel India is the view coming in from Asta, and the stock is locked in upper circuit as we speak. All right, Narendra from Hyderabad is calling us. Narendra, hi, a very good morning to you. How can we help you today?
Yeah, this is Narendra. I wanted to discuss with, good morning everyone. I wanted to discuss with G Entertainment.
Okay.
So I bought 300 quantity at the price of 294.
Okay.
So current loss is 45,000.
Okay.
So recently the stock is moving up. So can I hold or can I sell at the right moment? And apart from that, can I purchase current price like Apollo Hospital?
Okay.
Can you discuss these two stocks?
Okay, I got your question, Narendra. I'll take this up with Asta quickly. Asta, do you think Z Entertainment is a good counter to continue to hold, or should he sell that and buy something like an Apollo Hospitals?
As we see the Z Entertainment, because now the promoters infusion of fund is going on of around 22.4 billion, and they will be increasing the stake to 18%. So that can be a positive news. Because, but what I believe that despite of coming this news, the stock is not able to perform that strongly. So idea here is to partially book losses and exit from this counter, and can make entry into the Apollo Hospital for that matter. But I think that defense space is still looking very strong. So whatever loss he will be making in by exiting in the this Z Entertainment, I think defense counters like Bharat Electronics and Bharat Dynamics are more or well suitable to recover those losses. So rather than going for Apollo Hospital, we suggest something in the defense space like Bharat Electronics.
Okay, that's the view that Asta has, and Bharat Electronics is something that she's choosing to buy over Apollo Hospitals. All right, the next question is from Dhruv, who's writing in from Mumbai. One more question for you, Asta. He's asking whether he can buy Natco Pharma at the current levels from a 5 to 7 year perspective, and wants to know if he can buy now or wait for the fundamentals to improve further. What's the view like? And if not Natco Pharma, anything in the pharma space that you like?
If I talk about the Natco Pharma, I think right now it's better to wait for some more time, because what we have seen is that their performance has shown some sort of recovery, but still the outlook which was provided by the company was a muted one. So on that basis, I think it's better that if stocks see some more downside from here, to enter those level. In any case, if he can switch to some other pharma space, then I think DV's level is well placed at this point of the time to show more upside from here. So in Natco Pharma, if anyone wants to make entry by the lower level, but if any other counter which we are finding better in this space, then DV's level is our preferred choice.
Lab over Natco Pharma. All right. Let's take our next caller. Pradeep is calling us from Bengaluru. Pradeep, very good morning to you. How can we help you today?
Good morning to all of you.
Good morning.
I'm having Navin Fluorine 10 shares bought at 3708. Now I wanted to know whether this share I will hold or book profits now.
Okay. Help me, Pradeep, with a sense of why you bought it. What was the intention? Do you intend to hold for the long term, or did you buy it simply for a period of less than 1 year? First of all, when did you buy it?
I intended to buy it for long term. I have bought it about two years back.
Okay.
And my vision is for another 1 to 2 years.
Understood. Okay, so you're not in a hurry to sell. Let me get a view then on this refrigerant gases company, inorganic fluorides. So specific view, I think, Asa, if I'm not mistaken, there was some buzz about increased export opportunities, but then I don't know if that actually did pan out. But the company has done well, if I remember correctly. Return over the last 6 months is up close to 50% or thereabouts. So would you hold?
Yes, definitely, for the price target of 5100. Now, if I talk about this counter, first of all, the margin guidance which was given by the management was at around 25% EBITDA margin guidance I'm talking about, and that too for FY26, which seems to be pretty good. Apart from that, what we are seeing that the company has having a very strong order book, and they are a good play in the CDMO space. And now CDMO space is on the high growth trajectory. So if I combine all these factors, I think that this stock has still potential to move more upside from here. Hence, a hold is recommended from my side with the initial price target of 5100 to 5300 odd levels.
Regards to where Navin Fluorine stands. Next question is from Anita, who is writing in and wants to know about Tata Motors. She's been holding 100 shares of Tata Motors, bought at 951 a piece, and sitting on a huge loss. She's bought it at elevated levels and wants to know as to what should be the next course of action. Swati, I'll come to you on this one. Should she continue to hold, or is there a further upside that you're seeing on the charts?
No wonder, Mahima, she has bought at elevated levels, but no need to book the losses at the current levels, because I believe that probably in near-term future, we are likely to witness the positive momentum in this particular counter. The breakout level lies at 750. If it manages to clear that level on a longer-term horizon, definitely on the upside, the door gets open for a target of 840 to 900 levels. On the downside, it has a very crucial support formation has been done at around 620, 600 levels. Those are acting as a very strong supports levels. For a shorter period of time, the view is cautious, but if she manages to hold on for at least more than a year and so, then definitely she can hold on for immediate target of 840 to 900 levels.
All right. 4 listings today, 3 of them fresh issues or rather debuts on the stock market, and you see that a couple of them have actually made quite the debut. Among them is Ellen Barry Industrial Gases, which listed at 492 rupees per share and has gained from that point, registering a premium of over 30% at this point. It even defied the grey market estimates. In fact, we caught up with the company's chairman and managing director Padam Kumar Agarwala and joint managing director Varun Agarwal about their post-listing plans. Listen in.
You are into industrial gases with on-site and off-site as well. How will your strategy be going forward from here on with respect to your expansion plans?
We have doubled our capacity, rather more than doubled in the last 3 years, and definitely it would be our endeavor to do better than that in the coming years. Definitely we would like to go for both merchant and on-site in the days to come. That will be more on opportunity based.
Varun, if you can take us through what is the kind of that opportunity and how your revenue mix will be, because you get a higher margins, if I'm not wrong, from on-site. So what will the mix like maybe in a year or two?
So thank you so much for having us on the show. I think in FY25, our on-site business contributed about 17% of our top line. We expect the on-site business to contribute a little bit larger, maybe about 25 odd % in the years to come, just because, our strategy is going to be expanding into both these segments. And while on-site has a higher EBITDA margin, merchant actually allows us to reach a wide number of customers, and so both of these businesses will continue to be important to us.
Can you give us a sense of the kind of capacity that you will be adding on-site and in merchant in the next 2 years?
Sure. So currently the capacity that we own on our balance sheet, own and operate, stands at 1,370 tons per day. We are planning to ramp this up over the next 1 year to about 2,200 tons per day, and that difference of say about 800 odd tons will be through combination about 350 tons of on-site and about 450 tons of merchant, and that's over the next year that we are planning.
And when do you expect the entire plants to become operational and start generating cash and revenue for you?
So one of our plants, which is a 220 tons per day merchant plant, will be operational within the next 4 months. This is in advanced stage of construction, and we have 2 more plants which we are planning, which we expect will be up and running in about a year's time. And so once the plants start operating, then the revenue starts flowing through over the next sort of couple of months.
So FY27 would be a year when you have the full operational revenue coming in from these plants. Mr. Agarwal, what is the kind of revenue potential for these additional capacities that are coming in?
So look, last year we did 300 crores plus of revenue on a capacity which was practically only 600 tons per day. And we had added this incremental capacity, which got us to 1370 only towards the second half of the last financial year. So the capacity now, if it grows to 2,200 tons per day, we'll obviously see a multi-fold jump in our revenue numbers.
Mr. Agarwal, can you give us a sense of the kind of geographical expansion that you're looking at? Because you spoke about the fact that merchant allows you to go far and wide, while on-sites are on locations there. So what is the kind of geographical expansion plans that you have?
Sure. We started in the east, went down to south. It is our strategy generally to be a strong player in whichever geography we are working, and now we are not present yet in the north and western India, so we would look forward to add capacities on a preferential basis in these 2 locations, that is western India and northern India.
Okay, and that would be through on-site or through merchant?
On-sites generally depends on opportunities. You can't create an on-site demand. So if there is a customer, definitely yes, for on-sites we are ready anywhere in India. Our primary intent in this case is to have merchant plants, a strong merchant production, which definitely if we have on-sites, it will sort of support the on-site production as well.
Varun, you're also reducing your debt by 200 odd crores. Will that benefit flow in directly to your profitability, and what kind of gain that you can see as a result of debt reduction?
So yeah, we'll effectively become a debt-free company by paying off the debt from our IPO proceeds. And of course, our plan is to continue to expand. So while there will be a short-term gain, by saving on this almost 210 crores of debt, the interest on that, but ultimately the plan is to keep expanding. And the cash on the balance sheet will be used for that, As Mr. Agarwal said, we have plans to expand in the north and the west. We are also planning 3 plants, as I mentioned earlier, which will require significant amounts of capex. So the idea is to use the cash on the balance sheet for growth, and we are very much a growth company, a growth stock, and we'll continue to show strong growth numbers.
Mr. Agarwal, my final question to you, you cater to multiple sectors, pharma, chemicals, steels and others. Which is a sector that you see as a key driver for you in the next few years?
Our traditional sectors will continue to drive our growth. We also see certain emerging sectors like solar, and we would like to foray into supplies to those categories, in addition to banking strongly on our traditional sectors like pharma, drugs and iron and steel.
All right, so that was the management of Ellen Berry. Let's in fact pull up the stock, and like Alex mentioned, it did have a bumper listing and up 33% versus its issue price. So good D-Street debut for sure, and the future also looks promising, right? They've said that they'll pay off the debt. They're looking for capacity expansion, which will aid profitability by FY27. So that's with respect to where Ellen Berry stands. Our next question then is from Gautam, who's writing in from Mumbai and wants to know about Aavas Finances. Wants to know if he can invest in Bajaj Housing Finance or Aavas Finances for the next 12 to 18 months. Asta, I'll come to you on this one. Which one would you choose?
So I would like to go with Aavas Financer over Bajaj Housing because what we believe that Bajaj Housing has not been able to perform strongly after the listing. Maybe valuation concerns are always there for this counter. But looking after the Aavas Financer, I believe the kind of growth this company has posted, it makes a point for it to have the stock in the portfolio. So we are recommending Aavas Financer as a buy, but at the lower level of around 2050 to 2030 odd level, with a price target of 2150 to 2200.
All right, so that's the view on Aavas Financiers versus Bajaj Housing Finance. We have to slip into a very quick break, but we've got more time on the other side to take all of your questions, starting with Snehit's question, who's writing from Hyderabad on Bank of Maharashtra. Do stay tuned.
That's huge. That is a biggie. It's out there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and
Hi, welcome back. You're watching Ask Profit, and I promised that I would take Snehit's question on this side of the break, and that's exactly what I will do. He's writing in from Hyderabad and asking about Bank of Maharashtra, which he's, it seems like he's holding, but I do not know at what level he is bought. He's wondering whether to hold or sell, both from a short-term and a long-term perspective, but he's not defined that. And so let me go across to you, Swati, on the charts. How does it look, both from the short-term perspective as well as the long-term?
Alex, my view is definitely positive on this particular counter. Why I'm positive? Because on the weekly chart, if you look towards the line chart, the counter is forming the inverse head and shoulder pattern. It's on the verge of giving the breakout of the neckline, which comes to nearby 57.20 levels. If it manages to give the breakout of level, upside momentum can be seen towards 265 to 68 levels. So view is definitely positive. One should definitely hold on their long positions. Downside, it has a crucial support at around 53. So by maintaining that as stop loss, you can hold your long positions for immediate target of 65 levels.
Okay, so that's with regards to where Bank of Maharashtra stands. The next question is from Mayank, who's writing in from Alwar, Rajasthan. He's a query regarding TARL, that's Transformers and Rectifiers India. He's asking whether he can continue to hold for the next 6 months or not. He's holding 1,500 odd shares, bought at 487 a piece. Currently sitting on a loss of 27,000 odd rupees. Swati, what would you recommend? Should he continue to hold for the next 6 odd months to recover his losses?
My view is a little bit cautious because from the last 2 to 3 months, the counter is continuously trading in the formations of the low bottoms, lower highs and lower lows. So I believe that the more selling pressure is likely to be intensified. As of now, the counter is hovering near the cluster support zone of 460 levels. If it breaks that level, more selling pressure will be get triggered, and which might take a counter to 420 to 400 levels. I will suggest to keep a strict stop loss of a 460 and hold your long positions. If you get any pullback rally towards to 500 and so level, exits your long. But at the current market price, you can hold on by keeping a strict stop loss of 460 levels.
Okay, all right. I'm coming back to you, Swati, on this next question. Rajesh Maheshwari is writing in from Indore, one of our long-term viewers, and he's got Balaji Mines at a price of 2,658. 75 shares is what he's got, and he's incurring a loss at this point. He's looking for a short to medium-term outlook on the stock, and he's asking for what the prudent course of action is from this point. Does he book his losses and move to something else?
See, as of now, currently from the last 2 trading weeks, the counter is really doing very well. We have seen a very strong pullback rally from 1,500 to almost now 1,800. I believe this rally is likely to be extended towards to 2,000 levels. So the initial targets will be 2,000 levels we can see in the near-term futures. Downside, it has a very good support at around 1,700. So I will suggest to hold on this particular counter by keeping the strict stop loss of 1,700. If you get a rally towards 2,000 and beyond that level, 2,100 can be seen. So try to exit your long positions on every rise, or you can keep elevating your stop losses on the high side. Keep trailing your stop losses on high side. So 2,000 will be the initial target. I would suggest to hold on this particular stock.
Hold on, Balaji Mines is the view that Swati has with respect to where charts are concerned. All right, our next caller, Shankar, is calling in from Kolkata. Shankar, hi, a very good morning to you. I believe you have a question on SJVN.
Yeah, I'm having 500 shares bought at 40 rupees.
Okay.
It is now trading at nearly 100 rupees. So
Correct.
should I book my profits or should I hold on for another, say, 1 or 2 years?
Okay. Got your question, Shankar. I'll take this up with Asta. Asta, he's sitting on profits of almost 30,000 odd rupees and wants to know if he can continue to hold SJVN from a 2-year perspective.
So I would recommend a hold on this counter, although what we have seen that the bottom line performance was not that very rock solid in the Q4 of FY25. But if I look at the other parameters like the kind of annual or a financial year profits they have posted, it seems to be quite strong because there was a strong growth in FY25 bottom line as compared to FY24 bottom line. So overall, the financials given by the company seems to be steady, and hence my recommendation for long term is a hold on this counter, although I am setting my price target to somewhere at around 115 to 120 odd levels at the initial juncture.
Okay, we've got our next caller. Vinod is calling us from New Delhi. Vinod, namaskar. How can we help you today?
Namaskar. I'm fine.
Yes, I can hear you. Please go ahead.
Yeah. I have IDFC First Bank 450 shares at the rate of 73.
Okay.
And my view can be short-term, long-term depending upon the recommendation.
Understood. Okay. But आपने ये शेयर कब लिया था और उस टाइम पे आपका क्या थिंकिंग था, क्या सोच था?
I thought when I get the profit, I will sell it. But now since it was not moving,
yes,
and today it has come up the profit. Otherwise, it was in the loss only.
Yes. Okay. So you're wondering whether to book out. Okay. Okay,
yeah,
understood. Okay, so Swati, then on the chart, since he's moved into the green, he's wondering whether to book out or is there potential upside. We asked a technical analyst this morning, and the view was that you can acquire even at this stage for a target of slightly above 80, if I remember correctly. Is that a view that you also have?
Yes, rightly pointed out. All the analysts are as of now positive on all the PSU banks because we have not seen a rally when the Nifty was trading at the higher levels. Now these are the PSU counters banks, especially they are giving the breakouts on the technical front. My view is definitely positive on IDFC First Bank. You have rightly pointed out the 82 is the likely target we can see on the technical front. Downside, it has a very crucial support at around 71 levels. We have seen from the last 6 to 5 trading session, the counter is holding 71 levels. So it will not be a major loss even if the stop loss get triggered. So I will suggest to hold on your long position since it is trading at the CMP itself. Upside, I'm looking for a target of 80 to 82 levels on the high side. So hold on your long positions by keeping a tight stop loss of 72.
Okay, by the way, the latest trigger seems to be a note that came out by Investec. They've said various things about the prospects for the bank going forward, but they've also placed their target at 90 rupees per share, which seems to be what has caught the attention of the street. Every day we tell you what's lined up on Know Your Company, and in case you're tuning in for the first time and you don't know what I'm talking about, let me tell you. We have a show at 11:30. It's called Know Your Company, and this is driven primarily by our research team. And we pick up one stock a day. And today's stock is Fino Payments Bank. We delve into the details of the operations of the company. We look at the valuation metrics, and we try and find out for you, if you are an existing shareholder, to find out what the prospects are for you, and also to give you a sense, actionable insight about whether you should buy this stock or not. So what are we talking about today? How much is the existing business likely to grow by? What is the outlook on the commission-based income for Fino Payments Bank? And various other aspects, including what happens to the promoter shareholding structure post the small finance bank license. We will also be speaking with the management, Rishi Gupta, who is the Managing Director and Chief Executive Officer of the bank. That is lined up, as I said, at 11:30 today.
All right, so that's with regards to where Know Your Company stands. But our next question is from Asit, who's writing in from Thrissur, Kerala. He's holding IGIL, that is International Gemological Institute Limited, 150 shares at 494 a piece, and wants to know if he can add more at the current levels. He says he's a long-term investor. He's bought at elevated levels, certainly, because the stock is currently trading at 368. Astha, what's your view like? Should he continue to hold something like an IGIL, buy more at the current levels, or what should he do?
So if I talk about the IPO, because the IPO came in December, I suppose, and the issue price was 417, because the price bid was, the issue price was 417. And what we have seen, the stock is not able to perform strongly on the bourses. Maybe there are 2-3 reasons behind it. First of all, the elevated valuation. Secondly, the kind of business they are into. So I think that business is also having certain sort of constraints in the terms of growth, if I talk about, and hence what we are seeing, and not a very strong, steady set of numbers posted by this company. So all in all, we are not very much optimistic about this counter. Idea here is to book partial losses and exit from this counter, and remain invested in the partial quantity, but be vigilant about the results, because if something good comes in the result, maybe the stock can again move till the levels of issue price. Otherwise, we can see some more downside from here.
Partial losses on IGI is the view that Astha has, and look out for the earnings as well, is what she's saying. By the way, they follow calendar year as well. All right, our next caller, Murli, is calling in from Bengaluru. Murli, hi, a very good morning to you. How can we help you today?
Good morning.
Good morning.
I bought 200 shares of Home First Finance.
Okay.
At the rate of 356.
Okay.
I'd like to know the future prospects.
Okay.
Whether should I hold or there is a better future option available.
Okay, got your question, Murli. I'll take this up with Asta. Asta, I know that you like Awas Finances already, but Home First Finance, what's the view like?
So Home First Finance is looking good to us, and I think it's better to stay invested in this counter with a price target of 1500, definitely higher from the cost price also. Now talking about this counter, this company is totally focusing towards the digital innovation and of making this, home ownership more accessible. So my idea here is the kind of strategies this company is adopting and the kind of CAGR growth which we are expecting on the basis of their focus. We believe that they will be posting the top line and bottom line growth with a CAGR of more than 10% in the coming years. So idea here is to stay invested in this counter with a price target of 1500.
All right, the next question is coming in from Kerala. Shiju is writing in and he's asking about JP Power. By the way, there was buzz, and in fact, if I remember correctly, our colleague Vishwanath Nair had exclusive source-based information on acquisition of assets of this group, and quite a few assets are on the anvil, so this could be something that could react in the future. We've got Siju, who's bought at levels of 19 rupees, and he's looking at whether to hold or sell at this point. It's in the red right now because he's bought a significant quantity. On the fundamentals, do you have coverage, Asta?
Yes, and what we believe that although there are certain news flow which is going on in this stock, but the kind of financial performance they are posting simultaneously is not very attractive, because what we have seen in their bottom line is that they have posted, at least for the Q4 of FY25, the numbers were pretty negative. And on that basis, we are not very much comfortable with this counter. So idea here is to try to exit at the higher levels, because the cost price is little higher. If I taken it rightly, it is more than 18 rupees, if I am not wrong, Alex.
Say that again, please.
What is the cost price of this?
The cost price was 19 rupees, so very close to the current market price.
So that is what I am suggesting, that try to exit at the higher prices of around 19, because 18.6 is already going on. So we are not very much comfortable with the fundamentals of this company.
Very quickly, get a technical view as well. Swati, on the charts, what would you do with a JP Power bought at levels of 19?
I would like to suggest to hold on this particular counter, because after a long period of time, it's giving a breakout, and I believe it has a potential to reach up to its 52-week high, which comes to nearby 23 levels. So if you want to keep a tight stop loss, 17.50 will be act as a crucial supports level. So keep that as a stop loss and hold your long positions. For immediate target will be a 20, then beyond 23 levels can be seen.
Okay, so that's with regards to where JP Power stands. Our next caller, Govind, is calling in from Bengaluru. Govind, hi, a very good morning to you. How can we help you?
Hi, good morning. I have a query regarding the currently listed Kalpatru.
Okay.
I have 500 shares at 414.
Okay.
So I want to know, should I hold or should I sell? Like looking for medium term.
Okay, got your question, Govind. I'll take this up with Asta. Asta, what's your view like?
So we were not very much optimistic on this counter, even when we discussed this counter on your channel as well. So idea here is to book partial profit, definitely, because you are getting the chance to exit at a profit. Because what we have seen, the company has posted continuously losses. In fact, in the 9 months only, they have started showing profitability. So whether that is sustainable or not, we really need to see. And on that basis, what we believe, the valuations were stretched. And hence, our view was neutral on this counter. However, we have seen that this stock has not listed at a very strong premium as the other counters like Allen Berry and Globe Civil Projects. So overall, we are sustaining with our view that book partial profit in case if you are getting it, and remain invested in the partial quantity. Let's see how the coming quarters pan out for this company.
Vijay is writing in from the UK and he's pointing out that the last time when he had asked the question, I had said that he was up early. He's telling me now that he hasn't managed to sleep because of the heat wave in Europe. And he says that it was 22 degrees Celsius at night. Oh my God. Vijay, I must tell you that all of us here in Mumbai would be sleeping. We'd be, as they say in Hindi, घोड़े बेच के सोते हो, सो रहे होते हैं. Exactly. Like we'd be sleeping peacefully at 22 degrees at night. But anyway, Vatek Wabag is the name of the counter that he'd like to know about. Swing trade is what he's looking to try and get into at this stage. And on the charts, therefore, Swati, what's the view?
See, in this particular stock, my view is a little bit cautious because we are continuously witnessing a selling pressures from 1680 levels and not showing any kind of a reversals at the current levels. I will suggest to exit the long positions because the positive momentum can be seen only if the stock manages to give the breakout of 1500. But I don't believe that looking towards the price corrections along with the volumes, it will take a time to give the breakout. So I will suggest to exit from a long position from this particular stock.
Right. We've got a next caller from Chennai. Mohan is calling us. Mohan, very good morning to you. How can we help you today?
Yeah, good morning. Good morning. Hi. And actually, I got Jindal's stock. I got Jindal's stock 250 quantity at the price of around 251.68.
Okay.
Whether I'm holding this stock for 21 days. I just want to know whether to wait. Will it grow or else will it take too much time so that I can look for other stocks?
Understood. And so help me define this, Mohan. You're saying 21 days is what you've held it for, but you say, will it take too much time? Have you defined that as a month, as 2 months, as over a year? What is the time frame that you have in mind?
No, actually, if it grows up, I can wait for some other more than like 1 month. I can also wait.
Okay, I got your sense. Okay, ठीक है. I got an idea of what you want to know. Swati, on the charts, therefore, if you bought at levels of 251.7, would you hold on for a month's time frame?
Alex, as of now, the stock is under the consolidation phase, and I believe that on a weekly chart, it has given the breakout, but still we are not getting that kind of a spark momentum on the higher side. Since the client is not ready to hold on for the longer term durations, I believe this counter will give a slowly and steadily breakout will be seen in this particular round. Upside 250 is the breakout level. If it manages to give the breakout of level 275 to 80 levels can be seen. But the client is not ready to hold for a longer term duration. I will give a strict stop loss of 235. Try to bear more 5 rupees on a downside and hold your long positions. Probably in a day or two, we might witness some sort of a profit breakouts in the near term future. So keep the strict stop loss of 235 rupees and hold your long positions.
Okay, so that's in regards to where Jindal stands. The next question is from Ajesh, who's writing in from Bengaluru. He's holding Inox Green, 300 odd shares at an average price of 164.3. Wants to know if he can continue to hold for the next 3 to 6 months. He's sitting on a loss of 3,000 rupees right now. So Adi, do you think in the next 6 months he can probably turn into green and maybe make some profits?
I don't believe there is nothing more chart structural formations on the positive side at the current market price. Currently, the counter is sitting at 153. If it's break 153 levels, which is the immediate support level, then we are likely to witness more selling pressures, which may take a counter towards to 145 and so levels. I will suggest if you're getting any price rally towards to 155, 158 levels, try to exit the long positions. This is not a counter to take for a longer term horizon asset. So sell on every rise strategy should be applied.
Okay, all right. We've got a next caller, Arvind. उत्तर प्रदेश से कॉल कर रहे हैं. Arvind, आप कहाँ से कॉल कर रहे हैं exactly और आपका सवाल क्या है?
सर मैं उत्तर प्रदेश बरेली से कॉल कर रहा हूँ जी. थैंक यू सर, आपने मेरा क्वेश्चन लिया और एनडीटीवी को मैं प्रॉफिट को मैं थैंक्स कहना चाहूँगा कि मैं बहुत कुछ मैंने जो इन्वेस्टमेंट किया है मार्केट के अंदर आपके चैनल के ही थ्रू किया है. नीरज वगैरह वो देख के कि काफी अच्छे इंटरव्यू वगैरह लेते हैं सर, समझ में आता है मुझे चीजों को.
तो ये सुन के बहुत बहुत खुशी हुई हमें. आपका सवाल क्या है आज हमारे लिए?
आज मेरा सवाल है कि रेनबो मेडिकेयर चिल्ड्रन एक जो स्मॉल कैप की कंपनी है, हॉस्पिटल्स में डील करती है. मेरे पास इसके 70 शेयर्स हैं 1434 रुपए पे. मैं इसको लंबे समय के लिए होल्ड करना चाह रहा हूँ, नियर अबाउट 5 इयर्स के लिए. तो क्या फ्यूचर है इसका, मतलब एज कम्पेयर टू आप लोग काफी अगर आप रिसर्च रिपोर्ट्स बना पाए इस पे तो. जी,
रिसर्च रिपोर्ट्स के लिए थोड़ा सा वक्त लगेगा, मगर मैं उसके पहले आप आस्था से सवाल कर सकता हूँ कि व्हाट इज़ द प्रोस्पेक्ट. आस्था, अगर आप हिंदी में जवाब देंगे तो फिर ये अच्छा होगा.
जी बिल्कुल। देखिए, अगर मैं रेनबो इस काउंटर की बात करूँ तो ये वन ऑफ द लीडिंग पीडियाट्रिक मल्टी स्पेशलिटी एक हॉस्पिटल है। अब इसमें जो नए बैच इन्होंने कमीशन किए हैं उसके बाद किस तरह से वो इंटीग्रेट होता है पूरा हॉस्पिटल के अंदर और फिर फाइनेंशियल परफॉर्मेंस में वो किस तरह का एक रिफ्लेक्शन दिखाता है, वो एक देखने की बात होगी। तो मुझे लगता है कि अगर आपका नजरिया थोड़ा यहाँ पे मध्यम अवधि का है तो आप यहाँ पे थोड़ा इंतजार करिए, इसमें अपनी पोजीशंस में कंटिन्यू रखिए, नतीजे आने दीजिए, क्योंकि कुछ नए स्टेप्स जो इस काउंटर ने या फिर इस हॉस्पिटल ने लिए हैं वो किस तरह से आगे इनकी वित्तीय जो परफॉर्मेंस है उसमें मदद करते हैं, ये हमें देखना होगा। सो ओवरऑल हमारे हिसाब से आपको अभी इसमें बने रहना चाहिए। वैसे भी अभी आपका कॉस्ट प्राइस लोअर लेवल पे है तो कोई डर और चिंता की बात नहीं है। आने वाले समय में सब कुछ ठीक रहा तो हमारे हिसाब से 1600 से 1650 के दर्शन कराता हुआ ये काउंटर नजर आ सकता है।
बात है, क्या बात है. Wow, Asta, I'm seriously impressed by that answer, and I should take a few Hindi classes to speak to you properly the next time. I will bear that in mind. Okay, the next question is also directed towards you, and quickly change your mental gears to speak in English once again. IRIDA is the name of the counter, 185 is the buy price, and the prospects for the next 3 months are being sought, but I'm still coming to you because we have had the quarterly update and the loan disbursements are up as much as 31%, and I do understand that it is a lower base compared with your REC and PFC, but having said that, that 31% is a pretty robust rate of growth. Would you agree, and what are the prospects on the upside?
The prospects are pretty strong because what we are seeing in this counter that in fact they have diversified their funding also, and it is one of the best space to deploy the fund in if we talk about the green energy financing. So my idea here is to stay invested in this counter, and now this counter is enjoying the industry tailwinds also. So overall we believe that this counter is well poised to move till the level of 200 in the medium term. So remain invested in this counter is what we are recommending at this point of time.
That's with regards to where IRIDA stands. Our next caller, Varshini, is calling us from Andhra Pradesh. Varshini, hi, a very good morning to you. By the way, both Alex and I said that you have a beautiful name.
Yes, thank you.
Go ahead with your query.
Actually, I bought Geo Finance 10 days back at 294 price. Okay, 35 shares I bought. Shall I retain or sell for short term only?
From a short term perspective. Okay, I take this up with Swati. Swati, Geo Finance is the counter. What should she do?
Yes, my view is definitely positive on this particular counters. I believe that it has a potential to reach up to 350 to 360 levels on the higher side. So you can hold on those particular stocks for a mentioned targets. If you want to keep a stop loss, 320 is acting as a very good support level. So by keep 320 as your profit stop loss and hold your long positions for a target of 350 levels.
All right. Varshini, hopefully that answers your question. Snigdha is calling us from Hyderabad. Hi Snigdha, how can we help you today? Good morning.
So I just want to invest on 2 lakhs on PG Electroplast and Aurobindo Pharma. I have 4 lakhs of corpus with me right now.
Okay.
So is this the right time to invest on them, or if not, can you please suggest 2 stocks for short term?
Short term, and how do you define that? What is the duration that you're looking at? 3 months, 6 months, less than 1 year?
2 months.
2 months, okay. So, Swati, on the charts, PG Electroplast and Aurobindo Pharma 2 lakhs each, or would you advise against either of these and pick something else?
Yeah, I would like, and my view is not positive on the PG electrolytes, so not to invest money into those counters, neither on the Aurobindo Pharma. Apart from that, I would like to give another 2 counters. Such one is Cummins India. Why this stock has been selected? Because on the weekly chart, the counter has given the breakout of a cup and handle formations on the light chart. Even we have initiated a buy call to our clients. 3408 levels are the current market price. You can invest at least in this particular counter half for money. I'm looking for a target of 35.50 on the higher side. Downside, it has a very good support at around 33.20. So keeping that as a stop loss, you can carry a long position. Another interesting fact, not for a 1 to 2 months, but more than that period, Biocon looks very interesting. This particular counter has already witnessed a selling pressures, and after that it went into the consolidation phase. Now it's on the verge of giving the breakout. Slowly and steadily the trend is getting on a positive side. Currently the counter is trading at 354 levels. Downside, it has a crucial support at around 320. So by keeping that as your stop loss, you can hold on the long positions or create a long positions. For immediate target will be 400 levels, and beyond that levels 420 levels can be tested. So these are the two counters where you can park your money.
All right, for a 2-month time frame. All right, hopefully that answers your question, Snigdha. It's time now to hit the rapid fire round. And Asta and Swati, you know what this means. We'll throw as many questions at you over the course of 2 minutes. Let me start with a question on the hospital space. And we've got news on Apollo Hospitals today, but the question is on Indraprastha Medicals Corporation. Asta, do you have coverage? If so, would you buy and would you invest 2 lakh rupees?
Not in this counter as of now. I think Narayana Hrudayalaya or Apollo Hospital are a better bet.
Okay, the next question is on Bajaj Finance. Karthik Ram wants to know if this is the right time to buy. Swati, on the charts?
Yes, you can buy 20-30% at the current market price. If you're getting any deeps towards to 900, you can add on. Upside, it has a target of 980 to 1000 levels on the high side.
Okay, United Spirits bought at levels of 1460. Srinivasan wants to know whether to hold for a period of 2 to 3 years, accumulate more at the current level. Asta?
Yes, one can accumulate, but not at the current level, maybe at the lower level of around 1380 to 1370, but it is a good bet for 2 to 3 year time perspective.
Okay, Kamath Hotels next counter. Aparna from Kerala is writing in. She's bought 120 shares at a price of 240. Wants to know if she can continue to hold for the next 2 to 3 odd months. Swati?
Yes, you can hold on this particular counter. The immediate target will be 260, then 270. Downside, it has a very good support at around 230. So by keeping that as a stop loss, you can hold your position.
Okay, Tata Motors bought at levels of 1107, elevated levels, 70 shares, and Surya Narayana wants to know whether to hold or exit. What's the view, Swati?
My view is for a shorter period of time, we is cautious. I will suggest to hold on this particular counter by keeping a strict stop loss of a 670. If you're getting any pullback rallies toward to 720, 730, you can exit your longs.
Okay, JK Tires is the next counter. Bala Subramaniam is holding 50 shares bought at 411 a piece. Wants to know if he can continue to hold. Asta, your view?
Yes, continue to hold with a price target of 390 to 400.
Okay, KPIT Tech for the long term, we've got a viewer who has bought, I do not know what level, but he's wondering whether to buy more at the current level for the long term. Swati, on the charts?
I will not suggest to take a long position at the CMP. If you're getting any deeps towards to 1150, you can add on, but not at the current market price.
Okay, all right. So that brings us to the end of the rapid fire round. Both of you, thank you so much for joining in. I do want to refer to what is on the screen right now. And in fact, this has to do with the latest update from Mahindra & Mahindra. This is, of course, the 1st of July. And so you have auto sales numbers. This, by the way, is wholesale data. So think of this as the metal that, or the vehicles that get pushed from the factory to the dealership. Three-wheeler sales have done well. Total sales are up as much as 14%. And this, I believe, is the automotive division, not tractors. So bear that in mind as well. Commercial vehicles are just about flat. I wonder about the utility vehicle sales as well. Passenger vehicle sales about 18% higher. Tractor sales are also out, by the way, up about 13%. So it's a decent number that has come through. Exports about 1% higher, but really the primary market for Mahindra & Mahindra is in the domestic market. Utility vehicle sales seem to have done pretty well. I would be curious to find out what the share of electric vehicles are in that space. 18% higher is a pretty good run rate, especially in a scenario where the passenger vehicle companies are facing a little bit of a torrid time on demand. That brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Know Your Company. I'm Harsh Saita, your host, and today we're going to be talking about Fino Payments Bank. Why Fino Payments Bank? One, there is plenty of talk around technology and banking, and Fino has been at the somewhere at the periphery of it, or is it at the center of it? And that's what we'll try to understand better. But essentially, it's a bank where plenty is happening. They're converting from a payment bank to a small finance bank. They have applied for that license. How quickly does that license come will be the other big question. But it could well be a turning point in the way you look at the business as well. From the highs of the IPO price and the list price, the stock is trading now at a substantial discount, while profits over the last 3 years have compounded at a fairly healthy rate. And therefore, you want to start to understand whether this business has started looking interesting or not. So first question that I really want to know is that how much can the existing business grow by? You have your traditional business which they do at this point, and I'll explain that business to you. And thereafter, the kicker will likely be the small finance bank license, where they go into lending, and how that journey goes along will be completely different, and that will be a different lever both in terms of valuation and growth. The second piece is what's the outlook like on commission based income. What do they do in commission based income? One, they do remittances. These days for remittances, say for example you have a house help who you pay 20,000 rupees to. They have to remit some amount or some part of that amount to their village. Earlier they used to take the help of someone like a Fino to make that payment to their village, and their parents or family would collect it from an outlet of Fino. But not anymore. With UPI really well entrenched, you could well see that remittance number has come off, and which is what in some form or shape also impacts the business. Is there a substitute to that, or is lending the only thing? Then of course there's Aadhaar enabled payments. For example, all the government related subsidies and incentives are now done through Aadhaar related payments, all done over UPI. And then there's micro ATMs. Who uses ATMs anymore, or rather there's been a sharp reduction in the usage of ATMs, and therefore does that also impact the business? Competition in loan referrals. That's the other risk, right? So they've ventured into loan referrals, and then you have these large players, a Paytm, a Paisabazaar, who have come in and are disrupting, and they are all online. None of them are offline, and therefore is that business really seeing pressure? What changes with a small finance bank license? Now this is the big question, because you want to know whether the small finance bank license adds risk to the balance sheet in a substantial form, and if they are lending, what is that risk? Because if you are buying into the stock or you are already invested, you want to know what the risk will be of getting this license and how they intend to lend. Now the fifth question is, how quickly are you looking to get a small finance bank license? By one, I mean an SFB license. How quickly do they get it? How quickly does the strategy unwind as soon as they get it? Do they already have a strategy in place or not? And what happens to the promoter holding post the SFB license? Promoters currently hold around 75% through an entity, single entity. That structure may have to unwind at some point. Now, of course, that may take a year or two, but what's the thought process behind that? And the last question I want to ask them, where are you investing at this point? You're generating cash, you're a profitable business. Few businesses within the payments technology startup space are actually profitable, and this one is profitable. So where is it that they are investing that nearly 100 crore odd of profit that they are making? So all of that and more, but first let's understand what the business is all about. I'm going to start off with what Fino Payments Bank does as of today. The core business of Fino Payments Bank is digital and payments. That's what it essentially is based on. They've gone deep into rural, set up micro ATMs, and I'll explain this, and they have done digital through banking. So they do remittances and then they provide financial services. So basic banking, remittances, financial services. Within basic banking, they allow you to maintain a current and savings account. They enable fund transfers, and they help you check your bank account through their app, which is all digital, all UPI. They've linked that entire stack to UPI. But what Fino cannot do is they cannot lend. Because they are a payments bank, they have a payments bank license, they absolutely cannot lend. So that is where the small finance bank license comes into play. They've applied for it. Earlier, there was no intention to do that. When I spoke to them at the point of listing, they said, we don't intend to lend at all. But that seems to have changed over the last 3 years. What has changed there is what I'd want to know. How they operate through an asset-light model, and it's phygital in nature. So one, they attract the customer into what is called a micro ATM. You'll have Kirana stores which will have a simple micro ATM machine which allows you to insert your card, enter your PIN, and check your bank account balance. Once you check your bank account balance, you can withdraw from it. Say your balance is 10,000 rupees, you can withdraw 2,000 rupees. But there is no ATM machine there. It's actually the Kirana store owner who gets paid a fee, and 2,000 rupees is handed over by the Kirana store owner to the customer. So it's a very unique concept in that sense. And they have nearly 20 lakh touch points and merchants who they have tie-ups with. And therefore, they're one of the largest micro ATM players in the country at this point. I want to understand, can that continue to grow at the rate at which they've been growing? In terms of customers, well, they serve low-income individuals, migrants, small shop owners, and rural consumers. Basically, the target customers are customers with limited or no access to traditional banking and traditional bank branches and traditional banking channels. Once the customer is onboarded, then there is a simple app through which the customer can transact. So once that attraction is done, then the customer can transact through the application. So it's a phygital model. It's asset light because it does not require the company to open ATMs or open branches. That is not required given the way in which the model is structured. So where does it make money from? Let's understand it bottom up. Fino earns money mainly one through transaction based fee that's on your screen, then it's interest income. Mind you, these customers maintain balances. They may be very, very small balances, but they maintain balances nonetheless. And what happens is Fino has access to that money. That money gets parked with the RBI, and the RBI pays an interest out to Fino, which may be a very, very small or a thin interest, and therefore the net interest income may be very, very thin, but nonetheless that is income for Fino. So that's interest income they make, and then they make money on commissions. Any withdrawals, depending on the type of account you have with Fino, any withdrawals you make, any remittances you make, all of those get charged, and along with it, any loans you take. So the loan syndication that they do, any insurance products that get sold to you, all of those come through commission. So you have 85% of the revenue coming in from merchant commissions and fees on transactions. Then you have interest income from investing customers which invest in customer deposits in safe instruments, which Fino invests in safe instruments. And then there are commissions from selling insurance, referrals, value-added services and the like. And that's where all of the almost 85% of the top line essentially comes from. Let's talk about the exact services that they do. One, they do money transfers, and this is mainly domestic. Then they have Aadhaar enabled withdrawals that they do. They do UPI and bill payments for their customers, savings and current account maintenance for customers, micro ATMs, cash withdrawals, deposits, does both withdrawals as well as deposits. Debit cards and prepaid cards are issued by them or are enabled to be issued. Insurance and gold loan referrals are made. And then there is CMS, which is cash management services. Now, what is cash management services? And this is a new opportunity for them. Basically, if you are a store, if you are a Kirana store, you have lots of cash with you. What they provide to you as a service is they will pick up the cash from your shop, deposit it into your account for you. That makes life easier for you. And there are a few players in this cash management services business. It's a difficult business to do, but given the way in which Fino Payment has penetrated, it becomes easier for them to do this business. So cash management services is the other thing that they do. What does Fino spend on? One, interest payment on the deposits that they take from their customers, merchant payouts and agent commissions that they make, employee salaries, admin costs, the general, and then you have tech and platform expenses, which enables digital for their customers. Now, this is all with regard to Fino. So we hope we've given you a good coverage with regard to how Fino operates. Now let's talk about some numbers and let's break down all of the 8 metrics that we'll talk about today. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of these. Let's start off with the income statement. I'm going to start with the top line. 22% growth on the total income number over the last 3 years, which is very healthy compounding that we've seen. We'll look at EBITDA here because, mind you, this is not a bank. This is not your traditional bank where you will look at operating profit. You will look at EBITDA because what you want to judge from that number, or rather EBIT or earnings before taxes, what you want to judge from that number is compounding happening there. Because post expenses, you want to see whether the company is still making money. And what you are seeing therefore is profitable growth coming through. 26% 3-year CAGR. That profit which has fallen from FY24 to FY25 is largely related to taxes that they've paid. Mind you, it was a loss-making company earlier and therefore they had carried forward losses which could be offset against any profits which they made all the way through FY24. So they were paying zero tax till FY24. Now they've started paying taxes and that's why you're seeing that recalibration of profitability. But that likely to a significant extent is done. Now what we'll see in FY26 is a normalization. Hopefully there'll be growth from here, from this 86 crore number, and we'll quiz management on how that happens. But a 26% growth CAGR, not bad on a 3-year basis. So we've given this a thumbs up. Now let's look at the balance sheet. You look at the equity is at roughly 83 odd crore. It has retained earnings of roughly 600 odd crore and it has some amount of borrowing. But typically the capital adequacy is what is relevant if it converts to a small finance bank, and it has an 80% capital adequacy. So no requirement of a fundraise whatsoever, at least for the moment, unless they start taking on too much debt, which at the moment does not seem to be the case. So that's how the balance sheet is stacking up. We'll give that one a thumbs up also. It's a lean balance sheet for a 2,000 crore, 2,300 crore market cap company. So that's how it's shaping up. Now let's talk about cash flow. Now cash flow, very simple metric, right? I'll compare the cash flow from operations to the profit after tax. 86 crore was the profit after tax for FY25, 76 crore odd of operating cash flow, not looking bad. and therefore we'll give this a thumbs up as well. I want to understand one thing from cash flow. Where is it that they are investing? Is there substantial pockets where they are investing for the next leg of growth? That's the other thing I want to understand, and we'll understand that from the managing director and CEO as he joins us. Let's quickly look at return ratios now, because the cash which they are investing needs to have a healthy return profile. We've shown you the last 3 years ROE number. We've given it a neutral because it's just about in early teens. What you would want is a ramp up of this. But mind you, there's one thing you want to understand. As businesses achieve scale and size, the ROEs start to creep up automatically. This one is a small business. It's a 2300 crore market cap business. I want to understand whether it can achieve that scale and size, and ROEs can see a lift or not as a result of that. So we'll see how that plays out. Now let's look at shareholding pattern. So we've given this a neutral, more to be seen on the ROE front. Shareholding pattern, 75% is owned by promoters. Let me pull out that promoter holding. It's the promoters that hold this one are called Fino Paytech Limited. And Fino Paytech Limited is again owned by a clutch of companies, including the likes of an ICICI Bank as well. And then you have a BPCL as well, which has a holding in it. So it's got an interesting set of promoters with it. But this will be subject to a reverse merger as well. There will be some bit of overhang as that reverse merger plays out. But that is only post the small finance bank license being received. So a lot of restructuring will likely happen within this promoter holding group. There's very little DI or FI interest at this point. It's a small company as well. And therefore, you'll want to look out for some of these things. We'll give the shareholding pattern a neutral as well. Let's look at street cred now. The one thing that stood out for me, and those numbers flashing on your screen, is the fact that if you are an IPO investor, you've not made money on this one. And that's a possible problem, because as promoters, as management, you would want to leave some money on the table for the retail shareholder. That doesn't seem to have been the case. Maybe have been the intent, but wasn't the case. That's not played out. And therefore, what you want to see is some of that will likely either have to play out very, very quickly, or you've seen some bit of pain within that shareholder pocket, which have bought since the IPO and continue to hold. So I want to understand what's in it for them, right? Can we see a substantial ramp up in the numbers, and that likely might impact stock price? That's something, of course, that we'll understand better from management. But for the moment, we'll give this a neutral, because stock price performance not really outstanding, but just about average when you're looking at it the last 3 months or so. 24% returns is what it's given. Now let's look at how the street views this. There are 3 analysts that cover it. We'll be cautious about this one. 3 analysts that cover it with a return potential of 13%. While the returns are okay, but what really stands out for me is that there are just 3 analysts that cover it. It's a 2,000 crore company where 3 analysts cover it. So not bad in that sense. We'll give this one a cautious neutral as well. Let's talk about valuations last off. Now, 2 ways to value this, right? One is price to book, but this is not a traditional bank, and therefore price to earnings is the better way to look at this. And when I was looking at the price to earnings at 11 rupees a share, which is FY25 EPS, it's trading at roughly 25 times, so trailing 12 months. But 1 year forward is trading at 22 times, and 2 years forward it's trading at roughly 18 times. That's how the valuations are stacking up. We'll give this one a neutral as well, because not necessarily something which is very cheap, but is there an upside surprise to earnings is what I'd want to understand. Let's quickly pull up all of the ratings now, because we've summed it all up. Now let's quickly pull that up. That's what you have. No issues with regard to the first 3 metrics, and the other 4 are also a neutral. No thumbs down. If at all there's a negative bias, it's with regard to street cred. That's something you'll want to look at, because that's not helping its case at this point. But 5.5 on 8, very, very fair from a KYC ratings perspective. Let's go across. We're joined by Mr. Rishi Gupta, who's the MD and CEO at Fino Payments Bank, joining us live. Good morning, Mr. Gupta. Always good speaking with you. I want to start off by understanding where does growth go from here? You're currently at around 19 lakh merchants. Can that number continue to grow? Can you continue to penetrate? And how's the competition looking at this point? Sir, I believe you're on mute.
Yeah, can you hear me now?
Yes, I can, sir.
So, good morning to you and to your viewers. So, good update on the KYC, and 5.5 from my point of view looks a little low, but I leave it to you and your analyst. Coming to your specific questions on the merchant addition, I think that is an area we have been adding about 1.5 to 2 lakh numbers per annum. So we'll continue to add that number of merchants as such. The only thing which has changed over the last 3 years, I would say, is that Fino was largely, the revenue and the profit was largely coming from the physical network of our merchants and the products which we used to sell through those merchants. In the last 2 years, and specifically in the last 1.5 years, we have seen there's a large push because of the UPI ecosystem which has come up. And that is where we see a digital transaction also growing to a large substantial part. Roughly 49% of our transaction value is coming from digital now. So Fino has become both a physical and a digital company now. So we have become truly a phygital company. So not only the merchant growth, but the digital growth makes it even more robust and more avenues for us also to make revenue and profits.
And sir, how is the loan syndication business going for you? The loan referral business. Again, are you seeing competition there? How are take rates looking at this point? How is growth going for you?
On the lending part, we have applied for a small finance bank license. Yes. So internally, we have working with a couple of NBFCs on the lending side, largely around gold loans, micro lab, kind of affordable housing are the 3-4 products which we are focusing on. We do about, between us and the BC business, about 150 to 200 crores we do every month on the gold loan and other products, so to say. While we are growing that number, but I would still believe that with partnerships, you are dependent on the partners, whether it is for the rate of interest or the product configuration or the geographies which are there. Once we get a small finance bank license, at that point of time, this learning will definitely help us to get into those businesses in a more controlled fashion where we control the product per se. So it's been a good growth, but I think the opportunity and the demand is far more as such. So we are going along with that, and let's see how it spans out in the next 9 to 12 months.
So give us the outlook on top line. I'll reserve a couple of questions on small finance bank. Let's keep that out of the picture for the moment. The existing business on 1850 crore of top line, where does it go? Say in the next year, say in the next 2 to 3 years.
So for that, you will have to probably break up this entire business into 3 lines. One is the entire deposit base, which is the CASA number. That CASA number, we grew at about 40% plus last year. We expect the same growth around 35-40. The base has gone up. So from a CASA point of view, I think we'll see a good growth coming on that side. Digital also grew at a much higher pace for us in the last year, nearly 4x of 24 number vis-a-vis 25. So in that sense, we also believe that the digital number will grow, but may not be growing in X, maybe growing in some percentage as such. Our transaction business, which is the micro ATM, APS, and remittance, has seen a degrowth in the last 2-3 years, and specifically in the last 1 year, because some of that is due to regulatory changes, some of them is due to customer behavior changing or moving away from cash to digital. And also a lot of those customers who used to do this are now my own CASA customers. So we see a degrowth on that because there are a lot of moving parts in the business right now. As you understand, the government is also pushing a lot on the digital frauds and cyber frauds, mule accounts. So we are also taking a very risk calibrated approach. So giving a guidance at this stage looks a little difficult because of the moving parts within the 3 lines of businesses which we are having. But one thing which we are very sure is, as Fino has always been very bottom line focused. So I see a good healthy growth on the bottom line per se. on the revenue side, even if we have to compromise somewhere on the revenue, but the bottom line is something which we'll continue to focus on. But our approach in this 25-26 is to be a little cautious and take a more risk calibrated approach on the growth side, not to grow exponentially at the cost of the risk and the ecosystem which is currently we are facing in the country.
Sure. Okay. So non-committal on the top line, on the bottom line, focused. Yes. Would 100 crore plus kind of PAT run rate be something which is reasonable to expect?
So last year we had about 93 odd crores of PAT, where we had a 18% tax incidence. Because in the first quarter we didn't have tax. From the second quarter onwards we started to have tax. Our target is to cross maybe 100 crores of PAT this year with the full 25% tax incidence. So partly you are right in that way. So we'll be focused on the PAT numbers on the bottom line. And so we are working on some renegotiations, some working on other businesses, some new lines of businesses, some new products as we go down the year.
And sir, what is the where are you investing your surplus cash? You're doing 100 crore of PAT now, cash much more than that. So what's the kind of thought process behind where you investing?
So 2-3 things are largely 95 to 98% of our investments are into technology. In technology, there are two lines of investments. One is the investments on building capacities and also security systems and everything else. With the kind of tech focus which is there within the company and also the focus of the regulator is to build up a very scalable as well as secured technology ecosystem. So we continue to invest in building up that scalable speed as well as secured system as such. So that is where a large part of the BAU investments are going. On the other side, the large investment which we did in 24-25, which will get capitalized in 25-26, is the ecosystem around our core banking platform and some of the whole of the core projects which we have taken up in 24-25, which we'll see in 26. So these are projects in which we are moving out of core banking platform from FIS to Finacle. So that is going to get capitalized in this year. So that's where the large investment on cash side you mentioned in your KYC presentations also is going to happen. But that is only one of which happened in 24-25.
Sure.
In going forward, we don't expect that kind of large investment to happen on the technology side per se. We will continue to add more technology platforms, automation platforms. AI is something which we are working on.
Sure.
So that is moving away from, say, right now, the payment which we do to FIS is coming under OPEX as part of our operating cost above the EBITDA level. So once we capitalize this, a large part of that payment is going to come within the depreciation. So it will move from above EBITDA to below EBITDA to that extent. And but the benefit to the company with latest technologies, latest software systems will be much more than the current ecosystem which we are.
Got it. So is there an aspiration to grow PAT? Would late teens be a good number given that you're in any case a small company in relative terms?
So I think we spoke about PAT a few minutes back. So that is what I would leave at that. Our focus will be definitely to grow the PAT even with the higher incidence of tax in this year.
Sure. So completely out of time. Thank you so much for coming and speaking with us, giving us all of that perspective. For viewers, some quick perspective. In terms of the lending, I think what he gave us is that as the small finance bank license comes, they're already doing some amount of lending or enabling lending through their current existing customer base. So they'll probably use that data to kind of onward lend as well. So maybe that's something, that's another lever that one needs to look out for. But not particularly positive with regard to growth, which was something I was anticipating or hopeful for. Completely out of time on this edition of KYC. Thanks for tuning in.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Markets trade as flat as a pancake, Nifty above 25,500. All sectors barring oil and gas and defense trade in the red, advanced decline ratio in the favor of declines. Meanwhile, Apollo Hospitals is one of the top 50 Nifty 50 gainers. The healthcare company will spin off 3 of its businesses into a separate company. The new company will be clocking in revenues to the tune of about 25,000 crores by financial year 27 as per the management. And it's Gabriel India that hit a 20% upper circuit after the company unveils major restructuring plan to transform into diversified mobility solution provider. And 4 new entrants on Dalal Street, Ellenberry, Globe Civil see strong listing, while Kalpataru and Raymond Realty see a muted listing. SBI plans to become a financial superstore. That's the word coming in from SBI Chairman CS Sethi. Adds private capex boom is some time away. An NDTV Profit exclusive lined up on the show. Hi there, you're watching Markets at 12 with me, Shreyanshi Singh. Let's take a look at what the sectors as well as the stocks at this point are doing. Of course, there's a range-bound trade that you're looking at. So it's just a couple of sectors that are holding on to a tinge of green as we speak. So oil and gas, defense are the sectors in green. But on the flip side, there's a whole host of sectors that are holding on to a tinge of red at this point. Media, realty, pharma, PSU Bank, as well as metal and FMCG, exactly in that order. Those are your top sectoral losers as well. But with that in mind, let's also take a look at some of the counters that are holding on to a little bit of resilience from within the Nifty 50 pack. So it's an Apollo Hospitals, BEL, RIL as well, Asian Paints, Geo Financial Services, Eicher Motors. Those are some of the counters that are gaining in trade. Of course, for BEL, it is an order win boost coming in. Apollo Hospitals, you do have brokerages also quite bullish on this particular counter, but on the flip side, there's a few banking counters, the likes of Axis Bank, that are on the back foot, Nestle India, Eternal, Trent, Shriram Finance as well. Those are some of the counters from within the Nifty 50 pack that are holding on to a tinge of red as we speak. But tell you what, let's take a look at Apollo Hospitals, because that one is in focus on the back of the healthcare company deciding to spin off its 3 businesses. So let's take a look at the key details when it comes to this particular spin-off, as well as what the brokerages have to say. In fact, Varsha is joining in with just that.
Yeah, thank you for that. So, so they're gonna
the three business will be hived off into new company, and that new company will be listed. The three business will be omni-channel pharmacy, digital health business, and wholesale pharma distribution, which will be hived off. Now the new company will be listed directly on the stock exchange, and the transaction will be done in next 18 to 21 months. Over what's the key interesting part is what's in for Apollo Hospital Enterprises. Now the valuation gap will narrow down as the loss-making entities are being hived off, and the Apollo Hospital business, if you see, is trading at a discount of 25 to 30% to some of its peers like Max. Now the potential for hospital business EBITDA margin is also will also expand. So these are the three key interesting points what's in for Apollo Hospitals, and that's the reason why the company has been buzzing. The standalone EBITDA margin, if you see, for hospitals stand at around 24%, and the consolidated EBITDA margin is at 14%. So you know that these loss-making businesses are dragging down the EBITDA margin, which now in the future won't be. If I talk about the financial projections of the new company, in FY25, the revenue for all the three companies stand at around 16,000 crore, which is expected to go up to 25,000 crore, and EBITDA is expected to go up from 576 crore to 1,750 crores, and the margin is expected to go up from 3.5% to 7%. Now let's see what brokerages are saying on this. MS had maintained overweight on the company. They say that value and unlocking could re-rate hospital business, and the hospital business trade at discount to some of its peers. Now new company will be India's largest omni-channel pharmacy distribution, and Citi has also maintained buy with target price of 8,260. What they say is that development is positive for Apollo shares, and with separate listing and a lean business structure, they expect the discount to narrow down.
Alright, and so that's the counter to look at. Apollo Hospitals is the one that we're talking about. But tell you what, let's also shift focus, take a look at Gabriel India, because that particular counter has hit upper circuit, 20% upper circuit is what we're talking about, and it's also hit a 52-week high. Let's take a look at their major restructuring plans. In fact, Puneet is standing by with some more details on that.
Well, essentially, Gabriel India is a listed company within the larger Anand Group, which operates in the auto space, auto component space essentially. And the company also had a lot of unlisted verticals, which are not part of the listed entity within the auto space. So they had 3 joint ventures as well as investment in one other company, which was not part of the listed entity. Now, with the restructuring happening, all the 4 verticals and the existing auto business come under the listed entity Gabriel India, and essentially from a one product company they will become a multi-product company going forward, and this essentially would come not at too much of a cost. So in terms of valuations, it were getting pricey, but now with newer businesses coming in, newer verticals coming in, and a ready-made revenue which will be added in the company over the next 12 to 18 months is giving that kind of positive pivot and a next jump which could take a while for the company. So the company largely operated in the suspension space, so it was one product, and they had diversified into sunroofs. But now with the 3 new joint ventures that will come as part of the listed entity, it becomes a key offering, and the company's market cap it hovers between 10,000 odd crores. So it's essentially giving that big push to Gabriel India in that aspect. And as I mentioned about the multi-product aspect, what they will now do essentially is 3 key steps. One will be, of course, to the merger of a couple of companies with the investment company AIL. The demerger will be happening of one of the key verticals which is not related to auto, but because of this, it could add revenues of almost 600 to 700 crores once this merger and this restructuring is complete. So the analyst call today is scheduled at 11 a.m. and a little more detail on how the payment structure will happen, because right now all they have mentioned specifically is that 1100 shares of Gabriel will be issued to the investment promoter investment company. Looks like the market is taking that positively, but the stake will come down to 55%. So essentially it's that the unlisted business is coming into the listed entity, and the growth pivot has come much faster than what analysts had estimated.
Well, absolutely, Puneet, and that growth pivot, in fact, is quite the pivot for the stock as well, holding on to those gains of about 20%. That's Gabriel India that we're talking about. But moving on from a big push to some big relief coming in for Yatharth Hospital, because you do have Madhya Pradesh government that has resolved Ram Raja Hospital's land dispute conclusively. We have Varsha joining in with those important details.
Yes, so as you rightly said, the Ram Raja's Hospital's land dispute has now been resolved, and the company's rightful claim to the land is confirmed. The original problem, if I were to talk about, an order was received from Sagar Sambhag, Madhya Pradesh, and it directed a takeover of Ram Raja Hospital premises, stating that the land belonged to the government. But now that problem is solved, and the company previously had filed a case in the Madhya Pradesh High Court, which ordered the commissionerate to revisit the decision. The resolution today, if you see, the commissionerate has officially set aside their earlier order, and no further action or proceedings are pending. So this means that the operations, the day-to-day operation at Ram Raja Hospital will be continued uninterrupted throughout. So because of this, land resolve, the Yatharth Hospital is actually buzzing in there, and also the company, if you see the overall growth outlook of the company is expecting 25 to 30% of revenue CAGR growth in the next few years.
Absolutely. So that's Yatharth Hospitals that we're talking about. But tell you what, another counter that is buzzing away in trade is IDFC First Bank, on the back of up almost 3% thereabout. Investec is quite bullish on this particular counter. Upgraded the counter, in fact, to a buy, and we have Harsh standing by with their key takeaways.
Such a large increase in terms of target price. They've gone up from 65 rupee target price to a 90 rupee target price. Gives a 24% potential upside to an IDFC First Bank. What they're saying is that core operating profit will grow 29% CAGR over FY25 to 28. So very, very strong growth on core operating profit. What's going to aid that number is obviously the OPEX number. They're expecting an 80 basis point reduction in the OPEX to assets ratio, which is extremely large, and they're seeing a tapering down with regard to OPEX. They're seeing OPEX growth of just 13% CAGR from FY25 to 28, while loan book will grow at 20% CAGR FY25 to 28. And therefore, you'll likely see operational efficiencies play out. That's the one big point they're making. The other point they're making is with regard to credit cost. Credit cost will come down by 90 basis points FY25 to 28. Both of those levers to aid the ROA number. The ROA number will go from 0.5% to nearly 1.5%. And that is what the re-rating will likely be, is what they are saying. In fact, they're expecting an ROA 1.3%, to be absolutely precise, FY28. EPS CAGR to be 57% FY25 to 28. They see operating leverage play out, loan book CAGR of 20%. I spoke about that. And valuation, they're valuing it at 1.4 times FY27 book at this point versus the 1 time which they had attributed to it FY27 a few months ago. So they are seeing a large upside because of this upgrade.
Well, absolutely looks quite positive for the stock as well. So that's IDFC First Bank that we're talking about. We'll try and get you some more details when it comes to the India-US trade deal, because sources are telling us that there's no relief that is expected on auto and auto components. But in the meantime, let's go across and listen in to what Prateek Agarwal, who's the MD and CEO of Motilal Oswal AMC, had to say about his top sectoral bets.
Our house would be expected to be invested into something like NBFCs. But a lot of these new spaces and all of them happening together at the same time, to our mind, never happened before, are these spaces which offer growth in earnings significantly higher than that of the index. I mean, a lot of these spaces are small, so they are not held back by the size of the economy and the economic growth. These are the spaces which are driving the next $1 trillion expansion of the economy. And we believe these spaces held for a long period of time in a portfolio, not space per se, could deliver good outcomes for the investors. Frankly, we have been doing this for now 2.5 years.
All right, then let's take a very quick look at some of the listings on Dalal Street today. So when you take a look at Ellenberry, that was quite a healthy listing coming in for them. Kalpatru, that's the one that's got a slightly muted, weak listing coming in for this particular IPO. Other than that, there's also Globe Civil listed at a 27% premium there. So quite a strong listing coming in as far as this particular company is also concerned. But tell you what, let's also get you a very important story. And just as we told you, just as we promised you, we're getting you an NDTV Profit exclusive US-India deal. May also be offering only limited tariff cuts. We have Rishabh standing by with those very important details.
Right. What we've picked up from sources is the fact that this deal that is being talked about, an interim trade deal before July 9, may only feature cuts to the reciprocal tariffs that were imposed by the Trump administration. This limited trade deal may not have any mention of the sectoral tariffs. Evidently, the three sectoral tariffs being, of course, the auto components, steel, as well as aluminium tariffs. Those are the three that have been
and so those are the three tariffs that we're looking at. Very important details coming in when it comes to the India-US trade deal, and we'll keep trying to get all of those important details. But in the meantime, let's also cut into the press conference of JSW Paints. Earlier, it was announced that it will acquire Axo Global. Let's go across and listen into what the management has to say.
We're also staying as the technology partner of JSW for all the coating businesses. And who knows, maybe down the road there's other opportunities to work more together and to combine the two very complementary benefits of JSW's incredible firepower and drive on the ground in India, and AkzoNobel's product development, which we've tried and tested around the world, and which we look forward to increasingly bring to the Indian market by working with JSW and Parth. So exciting times, and beyond that, I'm willing to take any question you may have. If the questions are tough, I'll ask Parth to answer because.
Right. So the first obvious question, Parth, is what exactly is the mode of funding for this deal from Jindal Group? That's point number one. And secondly, what kind of milestones you have set yourself? We recently had a disruptor say that they are targeting 10,000 crores in sales and EBITDA break-even by the third year of complete operation. So as a combined, what are the milestones you've set for yourself and the breakup of the funding of this?
Sure. Thank you. I think the funding is a mix of internal accruals, leverage at JSW Paints, as well as getting some support from financial creditors through private equity. And we have tied up the entire funding for not only the open offer but also the stake sale. In terms of our targets, I think we become the second largest player in industrial coatings after this coming together. And in decorative, we become a close, very, very close number 4 player with number 3 very close to our grasp. I think it would be a bit premature to set any targets. We obviously still need Competition Commission of India approval and other regulatory approvals to come in. But I think the power of JSW and Dulux and coming together, I think no target is insurmountable. And unlike others, we have a profitable business. We don't need to burn our way through getting to the numbers that we need to reach. So I think doubling down from here over the next 3 years is something that we should be as a combined entity targeting, and I think those targets should be reached in a very sustainable manner, not at the expense of the bottom line.
What's the exact quantum of funding that you will get from banks? How much from private equity, your own group internal accruals? To break that up?
It'll pan out, but you can just top of mind look at 1/3, 1/3, 1/3 as the ratio between the three.
Other than some very important commentary coming in from the management of JSW Paints, they're talking about how they were missing local firepower in the country, and that's something that they're looking at, very ambitious growth targets as well. So we'll keep an eye on what are the latest developments when it comes to the paints industry. But in the meantime, let's take a look at Ellenberry Industrial Gases, because you do have that particular counter making a strong stock market debut, listed at 492 rupees per share and registered also a premium of 23%. Let's go across and listen into what the management then had to say when it comes to the company's key focus areas as well as plans for expansion.
We have doubled our capacity, rather more than doubled in the last 3 years, and definitely it would be our endeavor to do better than that in the coming years. Definitely, we would like to go for both merchant and on-site in the days to come. That will be more on opportunity based.
We expect the on-site business to contribute, a little bit larger, maybe about 25% in the years to come, just because, our strategy is going to be expanding into both these segments. And while on-site has a higher EBITDA margin, merchant actually allows us to reach a wide number of customers, and so both of these businesses will continue to be important to us.
All right, then moving on from one listing to another, then let's go across and listen into a conversation that my colleague Charu then had with the CEO of Raymond Realty discussing how a land dispute was resolved. Let's go across and listen it.
Hello viewers, today we have with us Mr. Harmohan K. Sahani, the CEO and MD of Raymond Realty, and it is an honor that he has agreed to speak to NDTV Profit today on the listing day. Hello sir, thank you and welcome to NDTV Profit.
Thank you for having me over.
So, sir, tell us more about, the journey that you have seen now that you are, getting listed at the oldest bourse in the country today. You are, you must have woken up, you must have thought that today is a big day. How do you feel today?
It's of course very exciting. I'm extremely happy. It's also a very emotional moment because all the work that you put in, the organization has been around for 6 years. There's been a lot of hard work put in by everybody. I have been involved almost from the beginning, and yeah, it is a very emotional moment. It's been a roller coaster ride, more ups than downs, but yeah.
So, sir, coming on to how the business is doing, what new exciting projects do you have lined up for Mumbai market?
So, in fact, all our projects are very exciting, and I would actually urge everybody to have a look at anybody who's thinking of making a purchase in Bombay should look at our projects before they decide, because there's a lot of focus we provide on the consumer in terms of the amenities we provide, how we design space, how the entire lifestyle is crafted so that there is community building which happens. And we are focused on essentially large markets, deep markets in and around BKC, and that's where most of our projects are going to be. Of course, our Thana legacy land is there, which is the most prime location in Thana that you can find. I don't think anybody can today look at buying in Thana without considering our project first. They have to visit us. Of course, I mean, the choice is theirs whether they buy or not, but it will be very difficult for them to move away from our projects. Apart from that, we have 2 projects in Bandra, we have 2 projects in Mahim, 1 in Sion, 1 in Wadala, which is essentially forming a ring around BKC. And we have a product to cater to every budget, every need, or depending on your stage in life. If you're starting out, we have something to offer. If you are late stage and you have older kids and you want more space or you use space differently, we have something to offer.
So if I ask you about the amenities, as you mentioned, what do you think makes you different from any other player in the market?
So, see, we are not as focused on maximizing the FSI. Today, I've been almost 30 years in the industry. And one common trend that I have seen in the industry is that there is a tendency to over-optimize on account of the players, whether it is FSI, whether it is pricing, whether it is their profitability. Our sharp focus is on the consumer experience, and there is a certain cost that we are willing to incur for creating that consumer experience. And there are many reasons for that. One is, of course, we are customer focused. Second is we are trying to build a brand in a market which everybody says is highly competitive, oversaturated. So how do you create a differentiation? So for us, that is a point of differentiation. It is also a part of community building that we have taken on. So to answer your question squarely, the size of the amenities, the type of amenities that we provide are always going to be plus compared to other players, because we don't have this over-optimization approach to the business. We are happy with normal profits and we are making good money, so there is no reason for us to over-optimize and squeeze every last penny at the cost of the consumer experience.
All right, and that right there was a word coming in from the CEO of Raymond Realty. Now, do remember that the stock, in fact, has hit 5% upper circuit after a rather not very exciting listing. But moving on, an important update coming in from the economic front. The centre has posted a strong start to financial year 26, with tax revenues rising 12% in April to May. We have Shrimu standing by with those very important updates.
Goods and Services Tax, which was rolled out on July 1st, 2017, exactly 8 years ago, mark a significant tax reform in the independent India's history. In fact, it replaces several taxation system levied then by both center and state into one unified tax structure as far as indirect taxation goes. In fact, it's pretty evident and reflected on the tax collection figure as well. If you see the revenue collection from GST in FY25, it crosses 22 lakh crore on an annual basis compared to 11.37 lakh crore in FY 2021. In fact, on the monthly average as well, it reaches 1.85 lakh crore compared to 95,000 crore. The run rate is also has been steady and in the range of 9 to 10%, which is quite impressive, being a relatively new taxation system. In fact, as far as registration numbers goes, the number of companies getting registered with and under GST regime is now 1.5 crore, which is again a very significant number. However, the experts pointed out that since the tax compliance have improved over the years, there are certain structural reforms, the challenges regarding to those that still persist. For example, the rate rationalization, the time is now to reject the rate, the current rate structure, which is 5%, 12%, 18% and 28%. And in fact, they're saying that has to be some changes to correct the inverted duty structure. The another one is with respect to compensation cess. All eye on the decision of the future of the cess, which is getting ended by March 31st, 2026. It will have an impact on certain commodities, including aerated drinks, tobacco, and high-end automobiles. So the future of compensation cess is, of course, one of the important agenda of GST Council, and we will see some action coming there as well, apart from the rate rationalization. And the third important point in terms of dispute resolution, certain framework has been finalized with respect to that, but it's yet to be operationalized, and that that bit also is expected to come this year itself. In fact, sources tells us that if you want to make the GST 2.0 more efficient, more tax friendly, and to rise as an important and the strong indicator of the economy, we need to have these reforms in place. And with GST entering the 9th year, we are expecting the GST Council will take some very important decision in this fiscal itself.
Well, absolutely lots of updates to watch out for on the GST front. But with that, we're completely timed out on this edition of Markets at 12. Thank you so much for tuning in.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. I'm Hiral Dadia, and with me is Anushi Vakharia. Anushi, good afternoon. An interesting day of trade. A lot of stock-specific action is what you're seeing in the markets today. You know, probably when the day started, it looked like a somber day, but now you're seeing that action which is picking up midday, and that's what makes our day interesting as well. If you see Nifty 50 as well as Bank Nifty, if you can pull up that one on the screens, that will tell you the story. Bank Nifty pretty much somber right now. Nifty 50 again seeing a recovery from the day's lowest levels. We hit a low of around 25,500, and from there some bit of a recovery that has come in yet so far. Whether we manage to reach that 25,593, which is the intraday high, is what we need to wait and watch and see. Let's quickly pull up Bank Nifty and see the trend between the PSU Bank Index and the Private Banking Index as well, because that's where the divergence was in yesterday's session as well. You are seeing that uptick that's coming in the Bank Nifty as well. It's flat right now, but not in the red. The PSU Bank Index is trying to make some strong strides right now, gains of around 0.1% coming in there. It's almost at the day's highest levels, but you have the private banking space which has been ruling under pressure, and this was the trend that we saw yesterday midday as well. Let's quickly look at the sectoral heat map, and then we'll see the heat map in terms of Nifty 50. Defense continues to be an outlier once again today with gains of 0.7%. Oil and gas is doing pretty well. Metals is seeing some smart moves. What's ruling under pressure is media, FMCG, second to the third consecutive session where the pressure has continued. Pharma is trading under pressure in today's session as well. Real estate, healthcare down in trade. IT as well, seeing cuts of around 0.3%. Let's also look at the heat map in terms of Nifty 50, and then we'll see what's happening on that front. Again, you know, I mean, you see the breath is in favor of the bears. That's what Nifty 50 is telling you. But Apollo Hospitals, on the back of the reorganization that they've undertaken, is the top gainer today. BEL is another one on the back of an order win, is up in trade. Reliance Industries, Jio Financial Services, both trading in the positive. IndusInd Bank is seeing some good strides, has been positive in the last 1 to 2 trading sessions. Nestle, Axis Bank, Eternal, Shriram Finance, Trent, Tech Mahindra are the ones which have been trading under pressure. VIX as well, what's interesting is it's remaining in that range of around 12 to 13, which is giving that comfort to the investors and the traders. So that's an interesting point that we continue need to monitor. But 12.5%, not a bad level.
Absolutely, Hiral. But it's the broader markets where we are seeing some bit of that pressure building on in terms of what's happening with the mid cap and the small cap indices. So, firstly, if we bring out the mid cap indices, now over here we are seeing cuts of over 0.38%, some bit of recovery from the day's low that we are looking at. Similarly, we can speak the same for the small cap 250, seeing that cuts of around 0.35%. But let's pull up the BSE 500 index to get a sense on some of these stocks which are in focus. So, if you see that we have Blue Dart right at the top, seeing gains of over 8%. Something like a Raymond is buzzing in trade, up over 6%, and this is on the back of the demerger of the Raymond Realty that is happening. The company just got listed on exchanges today. Some of the other stocks which are buzzing includes the likes of IDFC First. Now this is buzzing on the back of a brokerage note from Investec, while what is not working out so well is something like Coromandel International, along with even Borosil Renewables and Home First Finance, which are seeing cuts of over 4 to 5% that we are looking at. In fact, let's pull the advanced decline ratio just to get a sense on overall breadth of the broader market as well. So what we are looking at is advances of over 1,000 while declines in 1,181. So 1:1 is the kind of ratio that we are looking at, Hiral. So overall, it's not a pretty picture for the broader markets in comparison with the benchmark indices that we are seeing.
Absolutely, because in terms of where large caps go, the breadth is in favor of the bears.
Absolutely.
Whereas if you see in terms of the broader markets, as you highlighted, it's a pretty 50-50 scenario.
Yeah.
So more of newsmakers that are making it to that list as well in terms of today's session. However, one big story that everyone has been tracking is India-US deal. In fact, an NDTV Profit exclusive where the mini deal being worked out by the US and India may offer only limited tariff cuts. In fact, Rishabh brings us the exclusive development so far. Rishabh, over to you.
Right, what we're picking up from this US-India trade deal that is on the horizon is the fact that only reciprocal tariffs are in focus. The elimination of reciprocal tariffs, so the reduction of those tariffs is in focus. What's not in focus is the sectoral tariffs. The sectoral tariffs that have haunted and that were imposed by the Trump administration on auto as well as auto components, steel and aluminium. Now, what we're hearing is that these three sectoral tariffs might remain untouched in this interim trade deal that is being pursued by Indian negotiators in the US currently, in Washington currently. What we've also picked up from sources is that India is concerned about the fact that though this BTA or this bilateral trade agreement aims to double the bilateral trade from the current around 200 billion levels to about 500 billion by 2030, it will not be possible if tariffs are not reduced in a broad manner. What we're also picking up is that both nations have called that lower tariffs should be a shared endeavor of both the countries. This is what we are picking up on this trade deal. The next couple of days or the next week or so is going to be very, very crucial with regards to this as the July 9 tariff pause deadline comes near.
Okay, very interesting. So that's an NDTV Profit exclusive for you. Thanks for that, Rishabh. But let's take a look at some of the order wins which are in focus. And the first one on the list is Bharat Electronics. And this is an interesting one. The stock has been a big gainer in the last 5 sessions. Also, if you look at the stock, almost up over 12% in the last 1 week or so. Now, if you have seen what's in focus, now they've secured additional orders worth about 528 crore, and this is since its last disclosure since June 20 that we are looking at. Major orders includes in radars, communication equipment, electronic voting machines, jammers, shelters, etc. So now this is in line with Bharat Electronics guidance of order inflows of around 27,000 crore. This is excluding the big QRSAM order that we are seeing of 30,000 crore. So with that, the overall expectation is of a 57,000 crore. Along with that, the diffusion engineers is another stock in focus. Now that is also up in trade, and this is on the back of a 48 crore of an order win. And this is for supply of high pressure grinding rolls for the cement industry that we are seeing. If you look at the last orders in hand positioning, that stood at 103 crores. So these are the two stocks. We are seeing some 2 to 3% of gains on both of these counters. But to talk to us more about these counters, we are joined in by our guest for today, Raghavendra Kedia, founder of Prosperity Advisors, joins us now. Raghavendra, hi, welcome to the show. First of all, Bharat Electronics has been one counter in focus, in particularly what's happening with the overall defense space, along with the orders that it is coming out with. Want to understand your outlook on this one, and if you also have coverage on something like a diffusion engineers, which is in the small cap space that we're looking at.
Good afternoon, Anushri. So let me start with Bharat Electronics. As far as we have the overall theme, macro theme of Make in India and defense focus, this stock would continue to do well. And the recent Iran-Israel war or the Operation Sindoor has actually just stamped the narrative that it will be a more digital warfare led by drones and avionics and the chip intel rather than a ground warfare in the years ahead, if at all that anytime happens. So we do believe that Bharat Electronics would be a significant defense stock one can look at from a core portfolio point of view. In terms of the valuation metrics, the stock still looks attractive. We see that the full year EPS, earning per share, comes at around 11 rupees, and at current price of 430, you are looking at a P multiple of around 41, which is still moderate considering the huge run up the price run up the stock has gone in the last few weeks. So we do believe that valuations are still attractive, and if at all there is any price correction in the stock led by a defense theme profit booking or overall market correction, Bharat Electronics can be a very good buy at levels of 380, 400, but even at levels of 430, considering a moderate P multiple of 40 times and an order book which is 4 times its annual revenue. So there is a huge business visibility for the next 3-4 years. That comforts us. Government holding is at 51%. So we think that there won't be any further dilution or offer for sale from the government. So that would not give any further supply in the stock. So broadly, the matrix looks attractive for Bharat Electronics at 430 price.
Right, so that's with regards to Bharat Electronics. But, staying with the defense theme, you have Bharat Forge. In fact, they've gone ahead and transferred their defense business to subsidiary, which is KSSL. The stock is trading under pressure to the tune of around 2%, and that's probably that readjustment which is happening on the back of the defense business moving out. Puneet, over to you. How are you looking at this entire transfer that's happening with regards to where the defense business goes, and anything that the company has highlighted with whether the plan will be listing the defense arm separately, or how is it panning out?
Well, thank you for that. So definitely the focus will be on the defense arm. We've seen already the company get roughly about an order for 307 ATAGS machines. So the focus will definitely be on the company. Now they've decided to transfer the defense business to Kalyani Strategic Systems Limited, or KSSL. Now this subsidiary was already in the works. They had recorded revenue of about 1200 odd crores in FY25. So there was some business housed under this under this subsidiary KSSL. But some of the business was still under Bharat Forge. So they've now gone in, tried to simplify the structure a little bit. KSSL, of course, will set up to drive the defense business going forward as well. And the key aspect is how will this restructuring actually happen? Now, the internal restructuring and the assets will likely be identified and sold to KSSL on a specific basis. So it will be on an itemized sale basis so as to get higher value of them. The other aspect is that it will be done at a fair value assumption. So we'll be looking out for more information post Q1 earnings as well on this. This will of course be the fair value will be determined by an independent valuing agency, and thus we will be looking out for some key takeaways from the report as such. They've also mentioned that KSSL will be issuing optionally convertible redeemable preference shares as payment for the business that they're taking it. What this essentially will do is simplify the structure, one, but also put higher focus on KSSL, likely will improve margins of that business, while on the other hand, as you rightly mentioned, could have strategic focus or either spinning off this vertical completely and can list it separately as well. So there are multiple takeaways, but housing all the defense business together is definitely a move in the right direction.
A move in the right direction, and KSSL is basically Kalyani Strategic Systems, which actually is the business of Bharat Forge Group, where they have the entire defense arm under that space. Raghavendra, how are you looking at this move, and do you think this will be value unlocking as well when they are having the defense arm, and do you see any listing possibility?
Good afternoon, Ian. Broadly for Bharat Forge and this recent development in terms of any listing of its subsidiary down the line, well, that's a possibility, but we don't think it happening anytime soon. Maybe they will ramp up the business in this subsidiary as the narrative has come out, where they will be more focusing on the defense arm and the defense business vertical. So listing down the line is a possibility and could be a positive catalyst. Overall, Bharat Forge has a good corporate governance, so we believe that the spin-off and this corporate action would have a fair value in terms of keeping in mind the shareholders, minority shareholders' interest. Now, moving on to the valuations, we see that Bharat Forge has been a very steady EPS of around 30 rupees on an annual full year basis. So at current price of 1280, the valuations come at around 42-43 times P multiple, which is slightly expensive. So we are looking at price levels of around 1180, 1200 for better entry levels, where we could actually have some comfort in terms of the price, in terms of the valuation metrics for Bharat Forge. So it could be a buy on dip stock at current price, and at 1280, if someone is holding, they might continue to hold, considering it's a good corporate governance, defense focus, and the management has been very proactively and aggressively expanding its foray into the defense business, which is a high margin business. So Bharat Forge, again, continue to hold, and if you're looking for fresh buying, maybe levels of 1200 could be kept in mind.
Buy on dips is the view that we are seeing for Bharat Forge, so that's the stock in focus. But also want to address something like Ambuja Cements, and this is after its analyst day takeaways, wherein the management laid out a plan to sharpen its focus on cost savings. In fact, Jefferies and Investex have maintained a buy on these counters. Puneet, talk to us about Ambuja Cements as well.
Well, thanks so much for that. So they've held an analyst meet yesterday, and the key takeaways, apart from cost savings, have also been looking to stabilize and simplify the structure, as well as have more margin efficient products going forward. So let's look at what they've mentioned. Now, Jefferies actually has a target price of roughly 700 rupees per share, but they've said that the company is ripe for comeback now after FY25 was a lean year for both the cement maker as well as for the industry as a whole. They've gone on to say that the strategic focus areas have been laid out by the management in this particular conversation. The key aspect will also be to stabilize the mergers and acquisitions that the company has done over the last 18 to 24 months. Key aspect, of course, will be cost optimization, but also be on capital expansion and use of technology in the business. The key aspect also is that the management has sounded confident on the turnaround which was seen in quarter 4 to sustain going forward into FY26 as well. And Jefferies also highlighted a very interesting point that they've come out enthused post this particular meeting and reaffirmed Ambuja as the top pick in the cement sector. Investec as well held a target price of 836 rupees per share. They made a couple of very interesting points that the cost efficiencies will help the company achieve target of 1500 rupees EBITDA per ton by FY28. And finally, they've said that the cost savings which are highlighted, 19% is already done, and another 12% can be achieved in the near term. So they've laid out broader building blocks for the same, and hence both brokerages positive on Ambuja Cement.
Okay, thank you for that view, Puneet. So, Raghavendra, coming to you on the cement sector, now, the main emphasis on both the notes is on the cost saving part, which would help the margins going forward. Along with that, there was also consideration of price hikes in the future. Just want to get your overall perspective on the cement space, and if Ambuja is your top pick as well in the space.
So let me talk the global sectoral view first. So there could be price hikes, considering the last year was a lean period in terms of the demand, which seeing some uptick in this year. So that could be a positive catalyst. Overall, we see the capacity utilization for the cement companies to go up in this year. So that would also add up to the revenue and the top line in the quarters ahead. So we have a broader positive outlook for the cement sector for the next 2 to 4 quarters. Specific to Ambuja Cement, few positives of this company. Company has been a debt-free company, so that is very comforting. Adani Group backing, so that again helps us in terms of promoter holding. There is a significant promoter holding, so any positive news could have a significant price impact on the upside. So these few points actually augur very well for a long-term investment at Ambuja. At levels of 583, we believe that it is very significantly cheaply valued versus its peers of like an Ultratech, JK Cement or Shri Cement, which might be trading at P multiples as much as 50, 60 or 70 north of that. So that is
Valuations,
positive
Raghvendra, you're
outlook on
saying are cheaper as compared to peers, so that becomes a compelling bet as well. That's the word coming in from Raghvendra with regards to Ambuja Cement. And just a quick disclaimer as well, NDTV is a subsidiary of AMG Media Networks and Adani Group company as well. But moving on, Sigachi Industries, that's a stock that has been in focus. Yesterday was under pressure, today as well, seeing cuts of over 7%. And that's because the death toll at Sigachi has actually climbed to 34. Search and rescue operations are still underway at the factory in Telangana. My colleague Uma Sudhir is at the location. Uma, over to you.
Huge numbers of people still reported missing, and the list of how many people were in attendance yesterday, that register is obviously gone in the fire, and the people who are maintaining the register also not available to give any answers. What the women are telling us, this lady, a pregnant lady with 8 months pregnancy. She has a baby who is 1.5 years old. That is the baby who is 1.5 years old, and she has come here just 3 months ago with her baby to live with her husband. And in this family there are 4 people: her husband, her brother, and also their uncle who has gone missing. And all of them now people are looking for answers, and that's something that the administration is not able to provide yet, because they have many questions, and that is something that the administration is trying to give answers for. The search operations are still going on. It happened all through the night yesterday when we spoke about 15 deaths and 17 deaths by the end of the day. By early morning, then it had become 34 deaths, and now we heard the company officer saying that there are 42 people who have died in this particular mishap.
Thank you, Uba, for that. In fact, this has been a tragic incident in Telangana. And, from an investor perspective as well, Raghvendra, how would you advise investors to deal with the Sigachi? Because the plant will be shut at least for the next 90 days is what they had indicated, unless there is an update post that. But clearly, someone who's holding the stock versus the business.
So Sigachi Industries, definitely it's a tragic incident, but in terms of very specific to the business, the management's 90-day expected closure would have impact on 2 quarters at least for the stock. But this story could be a long-term stock where the Sigachi has for its product around 35% or 45% market share in pan-India. And their export business is also significantly growing. So this price correction could be taken as a buying opportunity. We have seen something similar of a lesser magnitude happening with solar industries. Last year, stock corrected significantly, but has come out very well post that tragic event. So we believe that from a very specific business point of view or a stock investment point of view, at levels of 45, Sigachi Industries looks like an attractive buy.
Certainly a tragic incident that we are looking at in terms of what happened with the Sigachi Industries factory. But stock down over 7%. It's the second straight day wherein we are seeing deep cuts for the rest. But Raghvendra, with the view that 45 is the level for good buying opportunity for this stock. But let's talk about something like Lloyd's Engineering as well, which is up over 4% in trade today. And this is on the back of news that it plans to buy an additional 11% stake in Techno Industries. Let me get across to Vansh for more details on this one.
Right, so the stock is up 20% this month. The company has approved acquisition of additional 11% stake in Techno Industries for a total cash consideration of about 25 odd crores. Post acquisition, Lloyd Engineering will hold 88% stake in Techno Industries, and the indicative time period for the same is 3 years. Techno Industries is engaged in the business of manufacturing and marketing of pumps, motors and elevators, and this is a strategic move by the company to expand its product offerings. So this is what the overall picture is looking for Lloyd Engineering.
So that's interesting. In fact, what's interesting is if you could tell us, Vansh, if you have to look at Techno Industries, what is it that Techno Industries does and how do you think it will benefit Lloyd's?
So Techno Industries basically engaged in marketing of pumps, motors and elevators, which very much aligns with the goals of Lloyd Engineering. They are looking forward to expand into these product verticals. So this would be a strategic move by the company to expand their product portfolio.
Okay, so that's the reason why the stock is also reacting positively, 4.5%. And that you're with us. NMDC is another stock from the metal space which has been trading under pressure. It's mainly on the back of the way iron ore prices have panned out. If you could tell us more about it as to what has the company done and what and how it will impact financials?
So basically NMDC have come up with their recent iron ore prices today itself. The company have lowered the iron ore prices by 9.5% this month. So let's understand the entire picture. There are two types of iron ore, Bella lump and Bella fines. So the company has reduced the prices by 9.5% for Bella lump to rupees 5,700 rupees per ton, and for Bella fines the prices have been reduced by 9.3% to 4850 rupees per ton. And let's understand the average pricing for these in FY24 to FY25. The average prices for Bella lump stood at 6,094 rupees per ton, and for Bella fines it stood for 4,600 rupees per ton. So it's important to note that the impact on the iron ore prices will be significant on NMDC, and the stock is reacting on the same. The company is expected to hit, the company will expect a hit in the revenue and profitability, and we can see a negative impact on the Q1 and Q2 FY26 figures. Also, let's see what the brokerages have to say for this. JP Morgan has remained underweight on NMDC. They expect iron ore prices to face increased pressure from 2027, which is further backed by ramping of production at Simandou project. So this is a project in Geneva that will put further pressure on the iron ore prices amid increased production and exports, which could lead to oversupply of iron ore globally.
Right, so that's interesting, you know, I mean, pressure is already mounting right now, and it is expected to continue with the new facility or new project, that's Simandou, that will come up in Guinea, and that will impact prices further as well. Raghavendra, two stocks, NMDC as well as if you have to look at Lloyd Steel on the back of the acquisition, what is your view?
So NMDC, it's a muted demand locally and huge supply globally. And that can be seen in the iron ore reduction of prices. So we will have a bad Q1 and Q2 for NMDC. So we would avoid any fresh long positions in this metal mining stock currently. Moving on to Lloyd's Engineering, the stock already has been at P multiples of more than 90. And this acquisition works well in terms of the synergies, in terms of the resonance it would create in the product forward and backward integration. But on the valuation metrics, it is discomforting P multiples. So we would avoid considering the frothy valuations on Lloyd's Engineering. So just to sum up, avoid on NMDC and avoid on Lloyd's Engineering at current levels.
And avoid that, we are looking for both of these counters, that's Lloyd Engineering along with NMDC. But let's just focus to the real estate space. In fact, let's see how the Nifty Realty is doing in trade today. The stock in focus here remains Keystone Realtors, and this is on the back of a letter of acceptance for a redevelopment project that we are looking in the Sion region. Overall, if we see this redevelopment potential that it could give for the companies is the likes of 4,521 crores. That's the kind of gross development value that we are seeing from this project. And do note that this project is spread across a plot area of 11 acres. So that's the kind of potential size that we are looking at. Do note that in FY26, the company did say that it is targeting a 33% of a growth in terms of where the pre-sales are concerned, and are expecting a 40% of a growth in terms of where the launches are concerned. So project additions are expected to be greater than 4,000 crores. So it's a big project win that we are looking for Keystone Realtors. The stock up over 4% in trade currently. Raghavendra, let me come to you on this counter. What's your view for Keystone?
So Keystone, if you see the shareholding pattern, the promoter sits at around 78%, which they might have to bring down to below 75. So we expect some supply in there where the equity dilution could happen. So that could have some negative overhang. Now, specific to that business, Keystone Realtors or Rustomjee Developers, they have been largely focused in the Mumbai metropolitan luxury area, but at the same time, their major projects have been for redevelopment, where the margins are less. And if you have even 5 to 10% of unsold inventory, that's where the entire project profits get stuck. Hence, the stock has been a laggard in terms of price performance versus similar stocks in the similar geography, like a Lodha Macrotech or a DLF or an Oberoi Realty. Even on valuations, the stock actually is trading at premium valuations versus its peers. So in spite of this expansion and new project of Keystone Realtors, Rustomjee in the current week, we would still avoid at levels of 635. The other realty companies are better placed. Oberoi Realty, Macrotech and DLF, Prestige Estates are better stocks across different geographies in this same sector. So Rustomjee we would avoid at current levels.
Okay. So, you know, a few of the names that Raghavendra mentioned, are better placed as well in terms of where the real estate space is concerned. But let's quickly slip into a short break, and before we get into that, let's hear a short snippet in the chat with none other than SBI Chairman C.S. Setty addressing key concerns about the rate cut and the margin impact. He reveals how the recent CRR cut will ease the reserve costs and signals margin improvements from September. Let's quickly listen in.
The question of the margin is always something that is bothering a lot of people, especially in the rate cut cycle that we're in. And we're closing to the fag end is what we all understand that. But is that at all a worry for State Bank or for the Chairman of the State Bank of India?
So the net interest margin trajectory is, in my view, would be a U-shaped curve, in the sense that in a couple of quarters we see the margins getting compressed.
Yeah.
Obviously, the front loading of repo rate has accelerated the repricing of some of the retail portfolio. For us, the benefit is that we don't have much of that repo-linked portfolio. Our portfolio is broadly either fixed or MCLR. But we want to give the benefit of MCLR reduction also to our customers, right? So which means that you need to calibrate your deposit rates. This is precisely what we have done. So going forward, I believe there are two things. One is the margins get adjusted, and number two, the September onwards, again an unexpected pleasant surprise from the regulator is to cut the CRR by 1%.
Yes.
So that will add, one is it will immediately reduce the cost of maintaining that reserve, and number two, ability to deploy those funds. So September onwards, I think there will be a addition to the margins. So we need to look at the exit margins of Q4.
Correct.
I think
Mid-year.
broadly most of us would be better positioned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Do you really know the company you invest in?
The mini trade deal between India and the US is likely to have limited tariff cuts. That's an NDTV Profit exclusive.
Markets currently trading flat, Nifty above the levels of 25,500. All sectors barring oil and gas and defense trade in red. Advanced decline ratio in favor of the declines.
Apollo Hospitals, one of the top Nifty 50 gainers, will spin off 3 of its businesses into separate companies. The new company will clock revenues of 25,000 crores by FY27, as mentioned by Apollo.
Gabriel, India hits 20% upper circuit after the company unveils major restructuring plan to transform into diversified mobility solution provider.
4 new entrants on the Dalal Street. Ellenberry and Globe Civil see strong listing, while Kalpataru and Raymond Realty see a muted listing.
SBI plans to become a financial superstore. That's the word coming in from SBI chairman C.S. Shetty. He adds that private capex boom is some time away. One more NDTV Profit exclusive lined up on the show.
Back, you're watching Profit Buzzers on NDTV Profit. Let's quickly pull up the markets. Though you're seeing that pressure, Anushi, in terms of broader markets, some bit of recovery that's coming in with regards to the mid-cap. In terms of the Nifty as well as Bank Nifty as well. From the day's lowest levels, you have seen a 30-35 points up move. So pretty stable so far. Now, whether we end in the positive or negative is what we need to wait and see. But staying with the markets, overall, if you talk about the sectors that could be growth drivers from here on, because valuations are looking reasonable, we did speak to Pratik Agarwal, MD and CEO of Motilal Oswal. Let's quickly listen in to what he had to say.
Our house would be expected to be invested into something like NBFCs, but a lot of these new spaces and all of them happening together at the same time, to our mind never happened before, are these spaces which offer growth in earnings significantly higher than that of the index. A lot of these spaces are small, so they are not held back by the size of the economy and the economic growth. These are the spaces which are driving the next $1 trillion expansion of the economy. And we believe these spaces held for a long period of time in a portfolio, not space per se, could deliver good outcomes for the investors. Frankly, we have been doing this for now 2.5 years.
Okay, so that's the view that we are seeing in terms of what the markets are saying. But let's also talk about something like Apollo Tubes. Now, the verdict over here is that it may miss its guidance that is given. Now, the sales volume, if you are seeing, they are up over 10% on a year-on-year basis. Company has given out 20% of a growth guidance in terms of where the volumes are concerned. This implies a required run rate of almost 1 million ton per quarter that we are looking at. So this is the verdict that is coming now. As per what the analysts are saying, they expect to maintain the high volume growth is given, but this would be on account of discounts, which would put some pressure on the margin. So that's the view for Apollo Tubes that we are looking at. But joining us now in the show is Gaurav Sharma, the Associate VP and Head of Research, Equity, Commodity and Currency of Globe Capital, along with Raghavendra, who is already with us. So firstly, let me come to you, Raghavendra, on this guidance miss that we are looking at for this company. What's your view on the stock?
So for APL Apollo Tubes, we believe that the stock has been under the price pressure, and this guidance miss has been even in the last quarter. So overall, the business outlook looks pretty negative at current levels. So we would wait and watch for APL Apollo Tubes until there is some uptick in both the revenue and the bottom line in terms of the EBITDA. But at levels of 740, it's an avoid. We would rather wait for levels of 1600, where we would review the stock in terms of valuations and how have been the performance and whether the commentary is slightly bullish. But so far at current levels, it's an avoid.
Word that we are looking for APL Apollo Tubes. Now that's the word coming up. But let's shift focus. Let's see something like what's happening with the healthcare space and the hospitals, right, Hiral?
Right, so that's with regards to two stocks that we should be looking out for is Apollo Hospitals as well as Yatharth. In fact, Apollo Hospitals did have a conference call as well. So apart from the deal dynamics, a lot of conversations that could have happened there, information that could have come in from there as well. The stock has remained at that 3% up move. Varsha is with us to tell us more. Varsha, firstly, what are the key con call highlights that you've picked up right now? And two, the way Apollo has been reacting, if you could tell us, give us a further update on that front.
Yeah, sure. So as everyone knows about the scheme deals that company is gonna hype of their 3 businesses and merge into a new company which will be listing on the stock market. Now, what's in for Apollo Hospitals and why Apollo Hospital is buzzing? One is the valuation gap that you're seeing will narrow down as loss-making entities are hyped off. So Apollo Hospital business is trading at around 25 to 30% of discount to some of its peers like Max Healthcare. Now the potential, so now this valuation will be narrowed off because of the loss-making entities will be gone off. Now there's also a potential for Apollo Hospitals EBITDA margin to expand. So the EBITDA margin, if you see, the hospital business has an EBITDA margin of 24%, but the consolidated EBITDA margin stand at around 14% because of the losses of some of these subsidiaries. Now because of the subsidiaries going out of the business, we can see this EBITDA margin back to about 20%. Now on the con call highlights though, so they're expecting a listing of new companies, that new company in 18 to 21 months, and healthcare services will remain in AHLL. Now the new company will have a revenue of around 25,000 crore by FY27 with EBITDA margin of 7%. The uptick in EBITDA margin will be from 3.5% currently to 7%. They are also looking to grow 22 to 24% on year-on-year basis when it comes to their Apollo Healthco and KMET on the back of good growth in pharmacy business, and the insurance business will also contribute to growth, and they're going to achieve break even in EBITDA when it comes to their Apollo Digital by FY26. And also on the hospital business per se, they're going to add 4,000 beds and they are on track to add 4 hospitals in FY26, and the focus will be on hospitals. Also they're also committed when it comes to growth of their diagnostic portfolio of AHLL.
Okay, thanks for that, Varsha. But another stock in focus is something like a Yatharth Hospital as well. Now, Madhya Pradesh government has resolved the Ram Raja Hospital's land dispute conclusively. Talk to us about this also. Now, we do see that the stock is reacting in trade as well. It's up over 2%. Varsha, talk to us about what's happening here.
Yeah, so the Ram Raja Hospital's land dispute has been now resolved and the company's rightful claim to the land is confirmed. The problem here was an order was received from Sagar Sambhag, Madhya Pradesh and it directed to take over Ram Raja Hospital premises, and the claim was that this land belongs to government. But now, so because of that, the company had filed a case in the Madhya Pradesh High Court, and High Court ordered the commissionerate to revisit the decision, and that's what the verdict is coming. Now the commissionerate has officially set aside their earlier order and no further action of proceedings are pending. That means that the day-to-day operations of the Ram Raja Hospital will be continued with uninterrupted throughout. And also, if you see overall, when it comes to Yatharth business, they are expecting almost 25 to 30% of CAGR growth when it comes to in next 2 to 3 years. This will be driven by, of course, the higher RPOP and the capex that they are doing.
Okay, thank you for that, Varsha. Gaurav, let me come to you on these two counters in the healthcare space. What's your view? If you have to pick amongst the two, Yatharth or Apollo, what's your pick over here?
I think from a trading perspective, both the stocks are pretty high, trading very high. First, I'll talk about Yatharth now. I'll prefer to wait for some time and pick the stock somewhere around 500 to 480 zones on a dip. And when I look at Apollo Hospitals, it is completely trading at its highest point after today's news. A huge gap up opening was witnessed, and it is still at high. So none of them are fit into the criteria of buying right now for a trading perspective. But yes, from a long-term investment perspective, they can be considered.
So that's the view you're seeing from a technical standpoint. But Raghavendra, let me come to you as well on the restructuring news that we are seeing for Apollo. It's a positive development across the street. What we are seeing, what's your view on this?
So definitely this demerger plan broadly is a positive catalyst where the sum of the parts SOTP valuation comes into play and there is a significant value unlocking. What we are very closely looking at is this timeline provided for this entire demerger to happen is around 18 to 21 months. So that's around 1.5 years at least in a good case scenario. At current valuations for Apollo Hospital, it looks expensive, almost at its life high levels. So we would rather wait for the entire demerger process to happen and then pick up the hospital business, which actually is untangled from the other loss-making businesses. But that's a trade 1 year down the line. At current valuations, it's an avoid for Apollo Hospitals. But moving to the second stock, we do like Yatharth Hospitals, considering it is cheaply valued, and expect a 25% uptick in the price for a 12-month investment horizon and a price target of around 680 to 700 for Yatharth Hospitals. So we would prefer Yatharth over Apollo, and actually it's a buy on Yatharth and avoid on Apollo Hospitals at current valuations.
So that's with regards to Yatharth. It's a big relief coming in. Their stock now seeing gains of 2.5%. Opened up really strong, hit a high of around 574, has cooled off from there on. But another stock which is in focus is a Gabriel India. They have also announced strategic restructuring, on the back of which the stock is up around 20%. Puneet, a quick update on how this would benefit.
Well, thank you for that. So, Gabriel India is part of the larger Anand Group, which is in the auto component space. Now, there's only a few businesses that are listed, which is the suspension business mainly that's listed currently. And now, what the company is actually doing, and as a group, they've decided to take some unlisted businesses within the auto component space and include those within the listed entity. Now, what will that do is, of course, increase the focus of Gabriel India from just one product to multi-product, and increase the revenue potential as well. Just for some context, Gabriel did about 4,000 crores in terms of revenue in FY25. They are adding businesses which did revenue of almost a similar amount, and that will reflect over the next 12 to 18 months. So it will make Gabriel India into a multi-product auto component company, and hence once the procedure is done, that could make Gabriel's and the focus much larger and much higher as well with the OEMs as well. So it's a key business update coming in. It could be a multi-year re-rating trigger going forward as well, and that's what was discussed as well in the company's conference call. But it's a huge update for Gabriel, and it's going to be one of the key stocks to watch and focus post Q1 earnings as well, if there was in terms of scope as well as completion of timeline going forward.
Okay, thank you, Puneet, for all of that. In fact, if you see in terms of a couple of auto numbers also that have come in, to start off with, you can look at Eicher and Bajaj Auto in the two-wheeler space. Eicher has seen a good growth of around 22%. The numbers have been above their estimates. Bajaj Auto also has been above estimates as well. In terms of the passenger vehicle segment, you have M&M, where the numbers are slightly in line, though you have Bajaj Auto, which is at the day's highs. M&M tractors, again, the numbers are above what the street was estimating. Escorts as well, pretty much in line. Raghvendra, coming to you, if you have to look at the auto sales numbers that have trickled in so far, and a Gabriel from the component space, what would your view be?
So, Gabriel, this overall merging of subsidiary businesses into it actually would augur very well for both the top line going significantly up, and eventually the economy of scale would kick in, where we would see the expansion in margins. So, as the analyst rightly said, it will be a multi-year, multi-quarter re-rating happening right now, in slow and steady for Gabriel. So it's a buy at current levels. It's a 12,000 crore market cap company, and as auto ancillary business picks up, this could be a very good stock to play this theme for a longer term horizon. So it's a buy on Gabriel India. Moving on to the broader auto sales numbers, they have their share of pain and positives in the last few months on a monthly reporting. But we do like the two-wheeler space at current juncture, and TVS Motors and Hero Honda continue to be our top picks in this space. Broadly, with a good monsoon and the more disposable income coming out, we believe that a two-wheeler space could outperform the four-wheeler, and a slightly bullish undercurrent in the overall two-wheeler space from current levels.
Okay, so the focus would remain on the two-wheeler space in comparison with where the four-wheelers are concerned in the auto industry. So that's the view that we are looking for the Nifty auto overall. But let's talk about something like a KRN heat exchanger. Now, big capacity plans that we are looking by the company over here. The CMD of the company, Santosh Kumar Yadav, told NDTV Profits that margins will face pressure from their new facility for the next 2 quarters. But if we look at the overall capacity expansion plans that are expected to be 6 times over April 25 that we are looking at, and after that, it would be smooth sailing. So do listen into that as well.
In new facility, we added 5 to 6 new product,
as well as existing product. So existing product, you can say we can get the same percentage of revenue. But from new products, first we have to enter in like some aftermarket, especially for refrigerator parts. And for railway, we will get like slowly growth. So you can say in next 2 quarters we will have pressure on margin from new facility, but existing we can get the same. And then after 2 quarters, we can also get same revenue or same EBITDA from new facility as well.
Okay, so that's the overall picture that we are seeing for KRN Heat Exchanger. It has been in focus on the back of the MOU it has signed with the Rajasthan government. Gaurav, let me come to you on this counter. What's your view for this?
To me,
KRN is well placed on its short as well as medium term charts. As of now, it is looking pretty much upbeat at a level of 860. One can take a short-term trading position here, keeping a stop just below 800 levels, and we can expect targets close to 1000s coming in the 1 to 2 months.
Okay, so that's with regards to KRR heat exchangers, but let's quickly look at few of the volume buzzers in trade today. Blue Tarts, strong volumes, and if you see in terms of buyer recommendations, 6 of them, no major upside potential coming in on that one. The stock is seeing gains of around 7%. Raymond, we've already spoken about, in fact, 2 consecutive sessions where the moves have been absolutely strong with regards to Raymond Limited, and you have a Raymond Realty which has had a muted listing. VST Tillers as well, the volumes are up almost 11 times. Grindwell Norton volumes are up around 8 to 9 times, and a Carborundum Universal, that's another one where the volumes are up around 4 times. If you look at all the stock prices as well of all of them, strong moves coming in terms of today's session. Gaurav, from the names that we mentioned, let's break it up into 2. Firstly, Blue Dart, Raymond, and VST Tillers. What would your advice be, and what for viewers?
Let's talk about Blue Dart first. I'll prefer to wait for the end of the day for Blue Dart and see whether it is able to hold on to these levels or not, because it has today only managed to surpass its 200 period exponential moving average, which is a positive sign. And if this thing continues on the back of heavy volumes that we are witnessing today, this would likely be the beginning of a new U-turn for this stock, and would probably take it to much higher levels towards 72 or 7500 zones.
Okay, and Gaurav, the other 3 stocks that we're looking at in terms of Grindwell Norton, Carborundum Universal, how are you looking at both these names as well?
Yes.
Yes, Gaurav.
So, Grindwell Norton is also giving a muted session so far, but on charts, little bit confusing as of now. I'll prefer to wait for a further up move. If the stock manages to go past 1800, then only I'll consider a buying position on this particular counter. Until then, it is a void.
Okay, so that's the view for these other 3 counters that we're looking at, in terms of which are buzzing in terms of volumes. But interesting story now, will Mahindra Electric head for an IPO soon? Now the annual report of the Mahindra Group gives a hint as to how this could happen. Sajid Mangat has all the details on this one.
That's right, Mahindra & Mahindra has given a timeline for the listing of its electric vehicle arm, Mahindra Electric Automobile. As per the details available in the annual report, the group has said that it will provide an exit to 2 of its investors, BII, which is British Investment International, and Temasek, in the year between the year FY28 to FY31. Now remember, these 2 entities have invested close to 3,050 crores in Mahindra Electric, which will give them equity stake for BII between 2.64% to 4.58%, and for Temasek equity stake between 1.49 to 2.97%. So together these stakes value the company between 40,000 crores to 80,000 crores. That's a kind of wide range of valuation which has been earmarked because the entire investments has been made through a CCPS route, and it will be converted closer to the event, which is an exit event, which includes an IPO or other options which are available. While BII would be given an option for exit through an IPO or through sale to an affiliate or a third party, Temasek has a wider exit option with respect to exit to an IPO, or it could get a cash exit, or it could also look at a swap of shares, which basically means that Mahindra can look at swapping Mahindra & Mahindra Mahindra shares for the shares of Mahindra Electric at some point in time in the future if the IPO does not materialize. Mahindra has already guided for 12,000 crores of investment in Mahindra Electric Automobile. It has invested over 5,400 crores with over 2,200 crores of new investment that came in FY25. Mahindra Electric had a top line of nearly 2,200 crores and a loss of 210 crores in the last financial year.
Okay, so thank you for that, Sajid. So that's the view that we are seeing for Mahindra Electric IPO coming up soon. But a couple of other names that are in focus in the primary markets, that includes the likes of Elanpari, Industrial Gas, which got listed today, along with something like Kalpataru and Globe Civil Project. So a lot of focus in terms of where the infra space is concerned. In fact, if we see Elanpari, it made a strong debut along with Globe Civil, up over 33%, while Kalpataru, more of a muted listing that we are seeing. It's up over 3% in trade today. We also had Raymond Realty, which is down about 5%. It got listed on exchanges today. If you're seeing the issue details that are flashing right on your screen. So Hiral, that's some couple of IPOs which are there in focus. But let me take this across to Raghavendra for a more detailed outlook in consideration with the new listings, along with the M&M outlook that Sajid was just talking about. Raghavendra, your view?
So we believe well begun is half done, and actually Elanpari and Global Civil fabulous listings today actually could augur well, and the stocks could go for a slow and steady upmarch in the days ahead. And a similar approach, but on the negative side, we would have for Raymond Realty and Kalpataru, where we are not very upbeat about the valuations, and this has been reflected in the listing prices. So it would be not attractive to buy Kalpataru even at current valuations, or Raymond Realty if it is available at cheaper prices. So that's the overall take on the fresh entrants in the from the primary market to the secondary market in the IPO space. But we have been active and would remain active in terms of applying for these IPOs for listing gains in the days ahead, as it's a very healthy pipeline and very active pipeline for the next 1 month or so. So for listing gains, we would be slightly proactive in the IPO space. Moving to the Mahindra Electric stake sale or an IPO commentary, which the management has mentioned, if it's purely giving for an exit of an already existing investor, the fund raised with this IPO might not go for the business growth and the overall expansion of the company's revenue. So this, if that happens, we would take it as a negative. This IPO might just be an platform to give exit to the pre-IPO investors. So that is not great as in terms of we augur as an investment or applying for the IPO of Mahindra Electric down the line whenever it comes. So this development would be slightly negative, but broadly, overall IPO market is vibrant, and we would say apply for listing gains as the pipeline is pretty healthy in the next 4 to 8 weeks.
Okay, so the pipeline looks pretty healthy in the IPO market as well. But thank you, Raghavendra. Thank you, Gaurav, so much for joining us on the show and sharing your views and recommendations as well. But moving on, Boeing CFO Brian West has resigned. In fact, he has been replaced by former Lockheed Martin executive Jesus J. Malave as the plane maker's new CFO. Malave will take charge on the 15th of August, and Brian West will stay on in an advisory role, according to Boeing. In fact, this exit has sparked speculation that it could be a ripple effect of the Air India crash in Ahmedabad, which killed over 250 people. So that's the latest update coming in from Boeing as well. In fact, completely out of time. With that, it's a wrap on this edition of Profit Buzzers from Anushi, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. Well, if you look at the markets, the Nifty is largely flat. Yesterday, it had snapped its 4-day gaining streak, and since then, we have not seen any big move coming into the markets. When it comes to the sectoral indices, the Nifty PSU Bank, Nifty Bank Index, which have been trading in green, while all the other sectoral indices are in red. In fact, the top sectoral loser is Nifty Media. It's down around 1%, followed by Nifty Real Estate, down around 0.9%, FMCG down 0.6%. When it comes to the banking names, other than Axis Bank, all other banks are largely, other than Axis, Bank of Baroda and ICICI Bank, all other banks are largely trading in green. Axis Bank is the top loser, down around 2.5% in trade. While on the gaining side, we are seeing IDFC First Bank up around 5.4% on the back of the upgrade that had come in from Investec, where they had upgraded the rating to buy. Any other inputs on the market check, Varsha?
Yeah, so Somit, I wanted to talk about broader markets. Let's see what broader markets are doing. If you see, they are under pressure. If you see Nifty Midcap 150 is down 0.53%. Let's see who are the losers when it comes to Nifty Midcap 150. You have Coromandel International, you have Dixon Tech, you have KPR Mill, NMDC and Ajanta Pharma, which are on the loser side when it comes to Nifty Midcap 150. While on the gainer side though, let's see who are the gainers. You have IDFC First, you have Endurance, you have Bharat Dynamics, you have UPL and AU Small Finance Bank, which are on the gaining side when it comes to Midcap 150. Let's see what Small Cap 250 is doing. It's of course under pressure. It's down almost 0.49%. On the losers side though, you have Borosil Renewables, you have Home First, you have Alembic Pharma, Narayana Health on the losers side. While on the gainers side though, you have Blue Dart, you have Raymond, you have JK Lakshmi, Equitas, SFB and Electra Green on the loser side. So overall, if you see, broader markets are under pressure, Somit. So I mean, not much when it comes to broader markets too.
Well, there's not much of an action in markets, but then when it comes to small cap, there's always action. In the last 5 trading sessions, we have seen Indraprastha Medical gaining around 20% in trade. Now, recently, Anand Rathi had come out with a report. They met with the management and they have given some sort of guidance of what's the growth outlook going forward. But what's more with Indraprastha Medical, Varsha, what has been buzzing? Why the stock has been gaining for the last 5 sessions? It's up 20% in trade. Anything that you have picked up? Yeah, so the primary trigger on this buzz is, Somit, is the Delhi government stake sale. So if you see, this is a key re-rating trigger. The promoters are discussing buying a part or the entire stake of government. The Delhi government, if you see, currently holds around 26%, and if it goes through, it
opens growth avenues when it comes to Indraprastha Medical. Now let's see what are the plans or outlook when it comes for the company. So if you see, currently they have almost 802 beds, and they're going to add 350 beds at their current site, which is Sarita Vihar site. The total beds by mid calendar year 2028 would be around 1,150 beds, and they intend to reach 1,800 beds at a single site, and this would make it potentially the biggest single site hospital. So they also had some EWS obligation. So Supreme Court ordered scrutiny in March 2025, and so the team is going to inspect records for last 5 years to check commitment for the free treatment, and management had provided details pleading for lower obligation. If approved, significant margin expansion would be seen, and the next hearing, but for this, is on July 30th, 2025. Now, if I were to talk about what is the outlook and valuation, what FY26 and FY27 numbers could look like on the revenue side. If you see, FY27 can have almost 1,717 crore with EBITDA margin of 18%. If you see, the EPS comes out at 22.4 rupees. So if you see the forward PE basis, FY27 stands at around 21x, and the current PE for the stock, if you see, it's almost 20.3. Now if the current P, if you see, is almost 27, and forward P basis FY27 stand at around 21. Now on the risk side, though, we have to talk about the risk also. There's a high dependence on the present unit. This is one of the risks that the company has, and there's also challenges with commissioning and ramping up the new tower that the company had. A potential adverse court filings is also one of the risks that all the analysts have highlighted, and the challenges in expanding the adjacent regions is also again the risk that the analysts have taken care of. And slower bed addition is also one of the reasons, because they're going for a huge capacity expansion. If that doesn't comes out, then we may have the value, there may be a derating when it comes to valuation. So overall, this government stake sale is one of the biggest trigger that has moved up to the stock, and of course the capacity expansion that the company has been doing.
Right, I believe also they're doing this capex announcement that has come in. That is coming after a very long period of time. For a very long period, their bed capacity.
Doubling their capacity is actually a bigger.
And also, if you look at the Q4 numbers, they were not that bad too. It was pretty much decent set of numbers. Revenue, EBITDA and PAT was up around in the range of around 6 to 12 odd %. Margins expanded by around 100 basis points. The company's average revenue per bed, that came in at close to 68,166, and overall occupancy improved to around 73% in the fourth quarter, as against 68% that we had seen last year. Well, to discuss more on this, let's also welcome in our guest for the show today, Vinit Bolinchkar, the head of research with Ventura Securities. Vinit, coming to you on Indraprastha Medical, have you looked into this counter? What could have perked up this recent up move that we have seen in the last 5 trading sessions? The stock is up nearly 20 odd %.
So, it's a PPP partnership in Delhi, and with the Delhi government looking to, exercise liquidity on this stock by selling its stake, I think it ups the ante on the stock, and we believe that this is going to be one of the reasons that will drive the stock up.
Right. The other stock which I wanted to highlight is Solara Active Pharma Sciences. Now, if you see in last 5 days, the stock is up almost 11%, and in last 1 month, the stock is up 32%. Let's see why a sudden spike in stock price. If you see why the buzz in this particular counter. So one of the reasons is that they are actually moving from low margin, non-regulated market, and they're shifting to high margin and regulated markets. So the margins for the companies will likely improve in next 2 to 3 years. The regulated market, if you see now, forms almost 76% of their business, and their reliance on ibuprofen, which is a pain relief medication, is decreasing. Now, because we all know that in FY24 and 25 especially, the company did not have much good of financials because of the falling prices of their end product, that is ibuprofen, which impacted their sales and margins. And now they are going into ibuprofen derivatives, which we call as a value added products, which will actually help them in their top line and especially in margins. And they're also expanding into non-ibuprofen products. Now overall, if I were to talk about what this company does, just for the benefit of viewers, they make API for various therapeutic areas. They have over 60 commercial APIs. APIs is nothing but the main ingredient in your medicine, and they are also a major global supplier of ibuprofen, and they also provide other specialized services to pharmaceutical companies under CRAMS. Now they're going to demerger their CRAMS business, which is also one of the reasons why the stock is buzzing, because of the value unlocking that the company will hold. A new entity will be called Synthex Global Pharma, and CRAMS business is currently at a very small number, that is 100 crores, but this can triple out. This business can grow 4 times, and they're expecting 500 crores of turnovers in next 3 to 4 years. Lastly, if I were to talk about the FY26 outlook for this company, the revenue is expected to grow 10% year on year, and EBITDA is expected to grow to 15 to 20% because of going into non-ibuprofen and of course the derivatives products. And lastly, all this will be driven by gross margin expansion and operating leverage. So overall, the good vision of Arun Kumar, who is a man behind this company, then going into regulated markets and margin expansion, and the demerger of CRAM business are some of the reasons why some of this stock is buzzing. But Vinit, let me come to you on this. Are you tracking Solara Active Pharma Sciences? Because I mean, a lot of good things are happening when it comes to this company.
Yeah, so it has been the strategy across the group. Even in Strides, similar things are happening where they are getting into regulated markets and only focusing on molecules which have got very high margins. So what it does is it gives you a certain kind of exclusivity. When you are dealing with complex molecules, the competition is less, and hence the price erosion also is substantially less. So with this kind of strategy now at the forefront of the group, I think that this stock can do reasonably well going ahead.
Right. Vinit, one more point that I would want to highlight when it comes to Solara Active is the fact that the promoter has been buying. In the month of July alone, if you see, the promoter has bought nearly 20 lakh or more than 20 lakh shares from open market. Do you see that as a good sign for the company?
See, when you're buying stock from the market and 20 lakh shares at the price that it prevails, you're putting in quite a lot of money to work, right? So that a promoter will buy his stock only when he sees that over the next 5-10 years, that the company is going to do extremely well. And this promoter buying bolsters the confidence among investors that there is something active happening out here, and hence the bullish outlook.
Right. Another stock that has been in focus is Swan Defence. Now, if you look at what Swan Defence has done as a share price, it's up around 5% today. It has been up around 500% since it again started listing on the exchanges. Volumes are not doing much, but then again, this is the Reliance naval arm, which was bought by Swan Group and then renamed as Swan Defence. And if you look at their performance of late, there's no performance as such because it is just a company that Swan Group has bought out of NCLT, but this company is into naval shipbuilding. They repair oil and gas rigs and upgrade them. They're also into commercial shipbuilding and heavy engineering. Now they have India's largest integrated shipbuilding facility. They can accommodate vessels of up to 4 lakh deadweight tonnage, and they also house the only modular shipbuilding facility in India. Vinit, coming to you on this, I believe you have been tracking the Swan Group closely. I know that, and Swan Defence was a good buy for Swan Energy. When do you see that turnaround will start showing results in the financials, on the financial side?
So, I think they're very much on the verge of, commercializing operations in a veritable way where, there will be enough volume to talk about. They already have a few ships which they can build and sell immediately, clear their inventory. They've got some very large berthing facilities, so they can accommodate ships of various sizes. And what supports this venture more is the kind of capacities that they have and the new defense policy on naval shipping and even the shipbuilding policies that have come in. are very, very progressive for this company. Swan Defense adds the bulk of the the valuation game that is going to play out over the next 5 years in the stock of Swan Energy is going to come from Swan Defense.
Right, but would it be advisable for any retail investors to enter Swan Defense at the current level?
See, if you're buying today, you should get the stock now. The stock is trading up circuit. The circuits have not opened up and very thinly traded. So just 77 shares, right? So I think a better way to play for this stock is to wait for this. You can try your luck on a daily basis, maybe for another 30-40 rupees. But once it cools off from there, that is when you should look to get into the stock.
Right, got that view, Vinit. Well, let's pull up a chart of Best Agro. The stock is up almost 7% if I'm not talking today. Yeah, and in last 5 years, in last 5 days, the stock was up almost 16%. Now, let's bring on Jasmeet to give us details on why Best Agro is in spotlight today. Jasmeet, over to you.
Well, yes, rightly said. The stock is trading at 7.5% up in trade today, while in last 5 days is trading at 17% top. While the company's average trading 30-day cycle is at 8.74 times, while the volume has been traded at 8.74 times. And this company is into agrochemical manufacturers, while in India as well as international markets, one among the top 15 companies which deal in the agro. While this company aims to offer crop protection and food safety solutions in the coming time, and the current market cap of this company is 902 crore. So it'll be interesting to watch out how the falling day turns out for this particular company.
When it comes to Best Agro, you also need to look at the financials. For FY25, they have significantly reduced their losses compared to FY24 due to policy changes and reduced operating expense as well. And in a recent conference, the management also guided that for FY26, they're expecting gross margins to be much better. They're expecting their working capital cycle to improve in the coming quarters. And they're also saying that 70% of the sales are concentrated in the monsoon season. So given the fact that monsoon is expected to be normal or above, this could be also one of the reasons why the share prices have been gaining, and they have not planned any new capital expenditure for FY26, and they will start looking at exports as well from FY26 is what the management has guided. Vinit, coming to you on Best Agro, have you tracked this counter? Any views on what could be the performance going forward for Best Agro, and should any retail investor look to invest at this point?
So we are very positive on this sector, number one, especially given the very good monsoon. And we think that, the fertilizer and the agrochemical spaces are the best stocks to buy currently, given that, they've not had a very great run last year. So I believe that this stock should perform very well in the coming days.
The next stock in focus is Raymond. Now, recently, there was a demerger, and the Raymond real estate business also listed on the stock exchanges, but Raymond is a completely different company, and it was already listed. And if you look at Raymond, this company now holds the engineering business. The stock has been gaining in trade. Coming to you, Vinit, on this, have you tracked this counter? What is the growth outlook now going forward for Raymond, given the fact that all the triggers are now done with, all the listings are now done with?
So, you're getting a very focused manufacturing play out here. Earlier, there were too many parts to it. Earlier, you had suitings, now you had realty. Now, with both demerged, I think the management can build a very focused business out here. Expecting a 15 to 20% growth in this stock over the next couple of years is not very difficult to achieve.
Got that view, Vinit. Thank you for that. Well, next stock which is in focus is IPO Tech, which stock is up almost 6% in today's trade. Well, Jasmeet still with us comes in with more details.
Well, yes, rightly said, the stock is trading at 6% top today, while the 30-day volume average stands at 9.2 times on today's date. While the company is into ODM manufacturers, they have their own original design manufacturer, and they provide LED lighting solutions and switches services. While the market cap of this company is 1700 odd crores, it'll be interesting to watch how the stock turns out in the following day. While if we talk about the margins have considerably fallen compared to the last quarter. So it'll be interesting to see how the stock reacts in the coming day.
Right, just to add more few details on that, a company is actually, diversifying or shifting from light-centric business to a broader technology-driven manufacturing model. Even they are entering into wearables, hearables, and non-lightning technology products like fire panels and sensors. And they've also got Honeywell engagement order, which is progressing to commercial scale, and multiple categories are under development. Though there was a short-term margin pressure, but structurally, if you see, the margin should come back to normal level. But Vineet, any view on this counter? How are you seeing this?
Actually, we don't track this stock, so I would refrain from commenting on that.
All right, got that view.
And Vineet, coming to you on Signpost, yesterday there was a big block deal that happened in the counter and the stock has been buzzing in trade. Have you looked into this counter?
Yeah, fair bit.
So any views on what could be the outlook when it comes to Signpost, and should a retail investor consider getting into this counter right now?
So right now the counter is up quite a bit. So I would advise buying this stock at slightly buy it on dips. I am sure that during this month, with the next week being ruled by Trump's antics, we could see volatility around that time. And that is when you should look to buy it on dips in this stock.
Let's move our focus to prime focus. Now, after the stock price is up and 9% in trade today, Jasmeet still with us, will give us more details on the same.
Well, yes, rightly said, the stock is trading at 9% tops today, and while the 30-day average volume is at 3.38 times, let's understand a little about what the company does. The company is basically into broad media services. They deal in post-production activities and digital intermediary, while with then visual effect to 2D and 3D screening. While the board meeting is supposed to be held on July 3rd in the coming time to discuss the proposal for preferential issues. It will be interesting to watch out how the board discusses the further proposal and the stock turns out in trade, as it's already 9% up in trade.
Thank you so much, Jasmeet, for that. Vineet, do you track Prime Focus? Vineet, I guess you are on mute.
So the media sector is something that, we are not looking to invest in aggressively, given the fact that, it is out of favor globally. So we would not be advising to buy into this stock.
All right, got that view. Well, next stock which is in focus is Apollo Hospitals. Let's pull that chart up. The stock is up almost 3.2%. Now, because there's been deal announced by Apollo Hospital. Now, 3 businesses will be hived off into a new company. The 3 businesses are omni-channel pharmacy, digital health business, and wholesale pharma distribution, which will be hived off, and they'll form a new company which will be listed on stock exchange. The transaction will be done within 18 to 21 months. Now, if you see the scheme detail, the composite scheme involves 3 steps. First is demerger of omni-channel pharmacy distribution and Apollo 24/7 digital platform. Then they're going to amalgamate Apollo Health Co with new company, and the merger of Kmid will also be with new company. Now, please remember that Kmid is a wholesale pharma distributor. Now, the important point is what's in for Apollo Enterprise. If I were to talk about now, the valuation gap is expected to narrow down as loss-making entities are hived off, and the Apollo business is trading at 25 to 30% of discount to some of its peers like Max. Now, also there's a potential for hospital business EBITDA margin to expand. If you see the hospital business EBITDA margin, standalone margin stand at around 24%. And the consolidated margin stand at around 14%. So now if these businesses are hyped off, the overall consolidated margins will go up. Now the financial projections of the new company, if I were to talk about the revenue, so by FY27 they're expecting a revenue of 25,000 crore with EBITDA margin of 7%. And let's talk about what are the key con call highlights. They're going to list this new company in 18 to 21 months, and the new company will have revenue of around 25,000 crore by FY27. They're going to looking to grow 22 to 24% year-on-year basis when it comes to AHLL and Kmid on the back of the growth in pharmacy business, and the insurance business will also contribute to growth. They're going to achieve break-even in EBITDA in Apollo Digital by end of FY26, and on the hospital side, they're going to add 4,000 beds, and they're on track to add 4 hospitals in FY26. So, Vineet, considering this deal, everyone is so bullish about Apollo Hospitals, because now finally your loss-making companies are out of the whole group. How are you seeing this deal and your outlook when it comes to overall hospital sector as well? And apart from Apollo, if you have any other picks.
So, Apollo is trading at a discount, as you said, to peers. So, obviously, there is going to be an immediate uptick out here as you remove the other businesses out. The other businesses themselves, the pharmacy and the digital health tech business are very strong growth drivers, futuristic businesses, which I think will also do well. So overall, there's going to be a massive re-rating of the stock taking place. Having said that, I think if you look at Suraksha Diagnostics, which is another diagnostic company which is based in far North India, we think that it is quite underpriced and should give you at least a 30% upside in the next 18 months.
Right. Another counter that has been buzzing in trade is IDFC First Bank. It's the top F&O gainer, up more than 5% in trade after Investec upgraded its rating on the counter. Let's get in Harsh with more details on the same.
Such a large increase in terms of target price. They've gone up from 65 rupee target price to a 90 rupee target price, gives a 24% potential upside to an IDFC First Bank. What they're saying is that core operating profit will grow 29% CAGR over FY25 to 28. So very, very strong growth on core operating profit. What's going to aid that number is obviously the OPEX number. They're expecting an 80 basis point reduction in the OPEX to assets ratio, which is extremely large, and they're seeing a tapering down with regard to OPEX. They're seeing OPEX growth of just 13% CAGR from FY25 to 28, while loan book will grow at 20% CAGR FY25 to 28. And therefore, you'll likely see operational efficiencies play out. That's the one big point they're making. The other point they're making is with regard to credit cost. Credit cost will come down by 90 basis points FY25 to 28. Both of those levers to aid the ROA number. The ROA number will go from 0.5% to nearly 1.5%. And that is what the re-rating will likely be, is what they are saying. In fact, they're expecting an ROA 1.3% to be absolutely precise FY28. EPS CAGR to be 57% FY25 to 28. They see operating leverage play out, loan book CAGR of 20%. I spoke about that. And valuation, they're valuing it at 1.4 times FY27 book at this point versus the 1 time which they had attributed to it FY27 a few months ago. So they are seeing a large upside because of this upgrade.
Well, Pratik Agarwal, the MD and CEO of Motilal Oswal AMC, explained which sectors he believes will be a good growth idea going forward. Let's listen to what he has to say.
Our house would be expected to be invested into something like NBFCs, but a lot of these new spaces and all of them happening together at the same time, to our mind, never happened before, are these spaces which offer growth in earnings significantly higher than that of the index. I mean, a lot of these spaces are small, so they are not held back by the size of the economy and the economic growth. These are the spaces which are driving the next $1 trillion expansion of the economy. And we believe these spaces held for a long period of time in a portfolio, not space per se, could deliver good outcomes for the investors. Frankly, we have been doing this for now 2.5 years.
Well, that were the top ideas coming in from Pratik Agarwal, and with that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time.
Hello and welcome to India Market Close right here on NDTV Profit. Before we go ahead with the show, let's first look at how the markets are doing, because again, it's been a session which has largely been dominated by the broader markets as well as individual stock movements. But let's first take a stock of the Sensex and Nifty. Very close trading range, to say the least. We had almost about 90 to 100 points on Nifty today. We're currently trading at almost the lowest point of the day, but still in the green. So that is one of the key positives. On the Sensex as well, just 0.07%, hardly any move. And on the Bank Nifty as well, that will be one of the key focus areas into this week. That's largely been because of the banking updates that we could see in Q1. But again, today, almost 150 points up move on the Nifty Bank, largely outperforming the Nifty 50 as well as the Sensex. Let's look at the Nifty heat map first. We'll see a lot of stock moves today. Apollo Hospitals buzzing on the back of the deal that they mentioned. A three-way split essentially is what they could see of one of their key businesses. So it's one of the biggest gainers. We've seen some positive move on stocks like BEL as well, and the defense pack has been active. It's continuing its positive momentum, now comfortably above the 400 rupee mark for BEL. The other key gainers, something like an IndusInd Bank, SBI Life, Reliance also is up. And Jio Financial is continuing its positive momentum. It's been largely one of the top Nifty gainers over the last 3 to 4 trading sessions, again in the green. On the losing side, we're seeing some pressure on stocks like Axis Bank. Nestle is down in trade today, as well as something like Shriram Finance. I just want to quickly look at what the auto names are doing. We're still awaiting the auto numbers for the month of June from something like a Tata Motors is down 0.5%. Maruti is up 0.3% right now. There's not too much of an expectations for Maruti specifically, but something like an M&M is up 0.4%. Eicher also very close by. Both companies reporting a very strong set of numbers for individually as well. Let's look at the mid cap and the small cap as well, because before that actually let's pull up. So the mid cap 150 is down in trade, but let's look at the sectoral heat map actually, if we can pull that up very quickly as well, because it'll show us that the Nifty PSU Bank is up today almost 0.7%. BEL is up today. We spoke about that in the Nifty, and that's led to a positive momentum in the Nifty India Defense. The oil and gas also seeing some positive moves. Media is down in trade today, so is FMCG, and that ties up with what you see in terms of the Nifty as well, with Nestle down. But that's largely on how the benchmarks are doing. I'm joined by my colleague Mahima now. Mahima, how are the broader markets looking right now?
Right, so as you rightly mentioned, in the start of the show, the markets are majorly driven by the broader end of spectrum, and we're seeing that pain in terms of the mid cap 150 as well as the small cap 250. The mid cap 150 down almost 0.5%, the small cap 250 also down by about 0.4%. In fact, if we can pull up that advanced decline ratio, that will give us a picture as to how the pain is in the broader end of spectrum. There you go. There is 1000 odd advances versus that of 1200 odd declines. So the ratio is slightly more than that 1:1. But yes, that is where the pain is. If we can pull up the BSE 500 also and see what counters are actually buzzing in trade today. There's Coromandel, which is seeing pressure down by about 7.5 odd percent. There's Borosil Renewable, where we're seeing pressure down by about 6 odd percent, followed by Home First, which is down by 4.5%, Aegis Logistics, FSL, Hitachi, all down by about 4 odd percent. Narayana Hrudayalaya and KPR Mills also seeing pressure. But some counters that are defying the markets and doing well. Asai India up 8%, Blue Dart significant amount of volumes here, up 6.7%, Raymond up 5.8% on the back of course, the demerger happening. IDFC First up 5.6%, JK Lakshmi up 5.6% as well. Endurance Tech also doing well in trade today, up by about 4.5 odd percent. But with that also, let's welcome in our guest for the day, Kush Bora, founder of kushbora.com, joining us now. Kush, hi, good afternoon to you. How are you reading the charts right now for the Nifty 50?
Hi, Mahima. First of all, very good afternoon to you and to all the viewers. Well, not too bad, not too bad. In fact, I think this is time to start creating long positions on the Nifty. However, let me just put things in, let me put a few more things in context rather. VIX at 12 and a half, this is what you would expect the markets to do, which is, perhaps open and shut in a very tight range, in a very narrow range. If VIX continues to languish around these levels, then, you might have a few more sessions going on like this as well. Not a bad thing, but you want the VIX to spike up and perhaps create some more volatility. Now, usually VIX spiking is associated with markets correcting, but I think we are already close to the support zones of 25,400 and 25,500. Also, if you look at the PCR for Nifty, it's at 0.7. It just rebounded from 0.65, suggesting that the room on the downside is not too much. At least that's what the data is suggesting right now. Also, to add to that, 25,500 put has been adding open interest for this weekly expiry. So a few things going for it, hence the conclusion that it may not be a bad idea to create a positional long trade on the Nifty with 25,400 as your stop loss and gun for targets of 25,750 and 25,900. So all in all, while things could perhaps consolidate a bit for a session or two till VIX starts to show any kind of spike up, this is a good base formation for the next up move, and with a stop loss near the 25,400 mark, we could well consider a long trade on the Nifty.
Okay, and what about the Bank Nifty?
More bullish on the Bank Nifty, Mahima. Have been for some time, continue to remain so. The reason's very simple. The HDFCs and the ICICIs of the world had actually rebounded very smartly from the support zone, but now you're seeing the PSU Bank coming, and the biggest one at that, which is SBI, which hadn't really done much in the recent past, is starting to participate. 820 remains a supply zone for SBI, so you will see some sort of consolidation, some sort of sideways movement along these levels. But once you cross 820, 825, I think there is a good big catch-up move that's coming in SBI, perhaps even for targets of 860 and 880. So I think SBI is set to give you that big move. HDFC, ICICI already participating. Bank Nifty is quite ripe for my first target of 57,800 and the second of 58,500. So if you want to create a long position, I have more comfort in Bank Nifty than the Nifty. But as I said, given the risk reward ratio that Nifty is showing, not a bad idea to consider that as well. So a bullish view on both of them. Outperformance on Bank Nifty could continue for some more time.
Got that, Kush. But I just want to address the flash at the bottom of your screen right now. The auto sales numbers coming in for Tata Motors, and while the commercial vehicle sales have come in line with estimates, it's the passenger car sales that are really down in the dumps, to say the least. Down 15% compared to the same time last year. We've seen an expectation of about 6 to 7% fall was the estimate, and almost 40,000 units is what was expected. It's down 15% in this month, and for the Q1, it's been a complete washout for Tata Motors, to say the least. And these numbers are slightly concerning, and that's largely also because they've already launched the hatchback segment. We spoke to the management a couple of weeks ago, and they highlighted that the hatchback segment, which has the models like the Tiago as well as the Altroz, those were the concerns in last year. but they've both been relaunched in one in January, one in May. Definitely a key concern there. We're seeing the stock down 0.8% and seeing that correction throughout the day. But the passenger vehicle numbers definitely not putting any kind of confidence, at least for the month of June for Tata Motors. And amongst others, we've only seen Mahindra come out in the four-wheeler space. So those numbers have been very positive. But the numbers for Tata Motors definitely a big concern here. But Kush, a very good afternoon to you. Thanks so much for joining in. What are your top picks for the afternoon?
Hi, Puneet. Sure. Both of them on the long side. One is from the financial space and the others from the metal space. LTF, L&T Finance, been bullish on this one for some time. Have given a call or two previously as well. Even now, if you see, it continues to move higher. Some consolidation had happened, but that was also very short-lived. So this momentum on the upside could continue for levels of 211 and 215 around, and the stop loss around the 202 mark. Metals as a sector has been doing well. Some of the names stand out. And the one that very clearly does is Hind Copper. A very good accumulation over the last 4 sessions on this one. Golden crossover as well coming about on this. So if you want to consider a long trade in metals, then 287, 294 are your targets, and 273 is your stop loss at for Hind Copper. So LTF and Hind Copper are the 2 long calls for the day.
So those 2 stocks, Hind Copper being one of them for Kush. Again, the numbers coming thick and fast now for the auto space. We are seeing Ashok Leyland numbers flashing on the bottom of your screen right now. 15,333. Estimates were largely around the 15,000 mark. So it's come in line with estimates as well. The key aspect is when you compare both. So we've commercial vehicle sales for all 3 companies are now out, including VECV, which we had at the earlier in the day. We'll try and collate all those numbers today and get those perspective to you. But essentially, this is a very positive sign for the truck business, essentially for all companies. We've seen brokerages also highlight that the e-way bill numbers have been spiking up. The fleet operators are having high utilization, so it's just round the corner that it leads to newer sales as well. So Ashok Leyland now, in the green, we're seeing a very sudden spike there as well, and that's largely reflective of the strong numbers as well. While it was imperative that the first quarter would be slow for Ashok Leyland, definitely the numbers in line with estimates as well. But Kush, let me just come back to you on both Ashok Leyland as well as something like a Tata Motors. How do they look on the charts right now? Because for Tata Motors, the fundamental factors haven't been supporting the company. Anything on the charts that could give some leg up from these levels?
Afraid not, because there was this consolidation near the 670 mark. The stock was inching higher, but has even from a technical standpoint, if you see, has met a resistance. 3 points add to this, which is the 20-day moving average, the 50-day moving average, and also the 700 mark, which is also psychologically an important mark. These 3 points are acting up as a resistance. Also, if you see, the call condition has been around that level. But that said, it doesn't change the broad view on Tata Motors, which is it's no longer a very trader favorite high momentum stock. But if you look at the risk reward ratio, I think from a 12-18 month perspective, 600, 625, those levels being your stop loss, you could still consider an entry into Tata Motors, because this is pretty much the low level that the stock has been at for some time. It's gone sideways, which is still a healthy sign. It's not making new lows below 600 mark. So you could consider adding Tata Motors, but from a longer time frame perspective. As far as Ashok Leyland goes, yes, this is a good move, and now it might be time to just book some profits, because the stock has run up nearly about 10% in the last 5-6 odd sessions. Once you do that and you get a dip close to the 240, 242 mark, you could create a long position again on Ashok Leyland, given that the medium-term trend on Ashok Leyland is very bullish.
Okay, medium-term trend bullish when it comes to Ashok Leyland with respect to where charts are concerned. Stock not doing much today, down by about 0.16%, so not reacting to the June auto sales data for sure. Now, we have Jasmeet joining us and giving us a list of stocks that are buzzing in trade today. Jasmeet, what are you picking up?
Right. First on my list is Sigache Industries. While this stock is down 7% in trade today, and these are stocks to watch, while on the account of fire accident which took place yesterday in the Hyderabad plant, this resulted in the loss of life and few injured, and the plant is shut for next 90 days. Core manufacturing infrastructure is also damaged during this incident. While the full entity is been insured, so that's not an issue. Let's understand the impact on the production. The company in total has 3 plants which produces MCC, that's micro celestial use, while the Hyderabad unit contributes roughly 20 to 30% to the overall production, and this loss is going to impact on their sheets. While the unit contributed by Hyderabad sheet is 6,000 MTPA, that's metric ton per annum, while the company feels that it can be optimized by the other 2 plants. Now next on my list is Diffusion Engineers. While the company received a domestic order for rupees 48 crores for the supply of high pressure grinding rolls for cement industry. The order is to be delivered in next 11 months, and the company's order in hand as of March stands at 103 crores. The last on my list is Hindustan Copper. While the company executed an MOU with Coal India Limited, the focus of this MOU will be to jointly identify, evaluate the opportunities, and to understand the critical copper and other minerals in the sector. While company recently also signed an MOU with Indian Oil on 29th of June, 2 days earlier. While this joint venture was to understand and make further deals in copper, critical material, and block auction. It'll be interesting to watch out what further deals will be signed by the company and in the following trade.
All right, Jasmeet, thank you so much for breaking that down for us. Kush, your quick view on Sigachi. What are the charts indicating?
So, ma'am, I think you should hold up any kind of fresh purchases because this is the second day that the stock is down on the back of very heavy volumes. Not sure if the fall is done and dusted. The data doesn't suggest that it is. 2 levels of support that I would like to mention here. One is 43, rounding that off, and also somewhere close to the 40 mark. So wait for the stock to dip. If it dips closer to this level, or rather this zone, and holds up, then you might find a buying opportunity, in this one. Given the news update that we just heard, it might not be right to expect a V-shaped kind of a recovery. But yes, 40 to 43. If this zone does indeed act like a support zone, then you're better off buying here and holding on for some time. And the risk reward ratio obviously becomes very favorable, but you might just have to hold it for a little long.
Got that, Kush. Kush, stay on. We'll just be back with you on a few questions as well. But let's welcome in Deepak Shenoy, who's the CEO of Capital Mind Mutual Fund as well. Mr. Shenoy, a very good afternoon to you. Thanks so much for joining in today. Before I get to a few aspects, how are you looking at the auto numbers coming in? Because while the expectations were slightly subdued for the passenger car makers as well as the truck makers, the two-wheeler space has been buoyant. Decent numbers from Eicher as well as TVS. How are you viewing some of the key numbers that have just come in?
To be fair, I haven't seen some of today's numbers. We usually wait till all the reports have come in before we look at assessment. But by and large, we've seen the last year or so finally showing some recovery in sales volumes after 2019 when BS6 started to come in and we had that insurance increase in price by the Supreme Court judgment. So since then, two-wheeler sales have not been like majorly high, and we've seen overall passenger vehicle numbers start to take up some of that slack. That we don't have the full data numbers yet, so it may be a move from one to the other. But by and large, we haven't seen some massive increase in anything, and it seems to be just more or less business as usual. I would expect that with the higher incomes in salaries on a taxable basis, I think the number has increased from 7 lakhs was tax free versus 12 lakhs is tax free from this year onwards. You'll have a slightly higher number of people that will be able to afford cars because relatively speaking, that much tax is saved. So hopefully some of the cars or bikes will see some increase in volumes towards the end of this year. However, interest rates haven't come down meaningfully, at least from what we've seen so far. So, that will probably provide another round of push to sales. But again, I think that will expect to happen only around the Diwali season, Diwali time. So at best, I think, these are incremental numbers. We'd like to see more car sales. India is terribly under-penetrated in the four-wheeler space. But to be honest, right now, I think we are not seeing the numbers meet that from a meaningful perspective.
So Shinoy, so because we've largely seen a very few selective names, and I know you can't talk names, but we've seen like players like TVS, which are largely benefited from both the presence in scooters as well as electric scooters and bikes. So there is that comfort for Eicher Motors. It is that pivot towards the premium space and the focus on sales rather than EBITDA margins. And Mahindra, this has largely become the consensus buy calls across analysts as well as people who've been speaking to on the channel as well. And today as well, the numbers that have just come in for all these three players have been very, very strong. So the expectation from the auto space, is it largely more bottoms up into companies that are looking to show growth, or do you expect to play some key spaces on valuation comfort on stocks like Maruti amongst others?
So, I mean, one of the problems is what's happened in some of these players is they've moved away from diesel. So, diesel has been, a considerable part of the growth path in the past years. And now that you don't have diesel, you have that as one of the issues. The second one is maybe a transition from two-wheelers to cars, maybe because of the bad roads, the weather, and so on, and the affordability of cars being higher. So you get a PV, and even in the PV, the entry-level SUV is more acceptable as an entry-level car today than the entry-level, sedan or the hatchback, which was the traditional way people would start a car. So we're seeing more sales of some of the entry-level SUVs than of the entry-level hatchbacks. This is actually a change that we're seeing, but on the growth perspectives, the names you've mentioned, some of them have actually innovated in the sense that they've actually got more features in their cars than some of the much higher end cars as well, especially those of some of the German manufacturers and all that who come in here. The entry level cars don't have quite as much features as some of the entry level cars, even in these segments. And I think some of the players in the two-wheeler space have also innovated to that extent, bringing in entries into EV, but also improving the current ICE two-wheelers as well. So from a perspective of, I think the whole market should grow, but I think people who are innovating in this space will end up getting a lion's share of that growth. As we've seen, as you get new launches, you see a substantial increase in bookings whenever the feature set is quite substantially higher. So you saw that for at one point for the XUV cars that were released about, I think, 2.5 years ago or 1.5 years ago. You're seeing that in some of the new releases that are coming up, that have come up recently as well. So there is demand for good features, and to provide them at the right price point, I think the leaders are the ones that seem to be showing the way. The laggards don't seem to be innovating quite as much.
Mr. Shinoy, hi. Mahima also joining in. You did mention that consumption is likely to see pickup in terms of auto numbers as well, because you're seeing that tax bracket has now moved to that 12 lakh mark. Apart from autos, there are a lot of pockets of consumption that will also see some pickup, right? According to you, which pocket will be placed well in terms of seeing pickup in terms of its sales? And if yes, how can one play that theme right now?
So I think in our PMS, we actually have a bunch of stocks that follow the theme. But the idea here is tourism, transportation. These are one of the things that are our primary here. We think people will spend more on experiences, spend more on transportation simply because it increases the quality of life. But also in that vein, it would be restaurants. So a slight layer of premiumization in terms of usage. So it's not really the toothpaste and the soaps that will benefit. I think it will be the slightly more premium areas where you will see a more demand, whether it is hospitality, whether it is perhaps travel or restaurants or things like that, is where I think a lot of the consumption will increase. And perhaps in the transportation area also, because I think that's a dire need, especially non-metro cities, because metros are crowded, but in non-metro cities, penetration is relatively lesser. We have the same weather, so at some point you want to not be stuck in the rain on a bike. So at some point there will be people in who'll take the plunge, moving on to cars where earlier bikes were more prevalent. So I think that is where these are the areas where you will see this, but it won't be in entry level FMCG. There may be premium FMCG where this makes a difference. There's not that much over there meaningfully in India right now, but entry level FMCG is not as attractive as some of these other sectors.
Any specific names that you're liking in that space, transportation, tourism, etc.?
Yeah, I can't do names,
Okay.
so I'm sorry.
Understood, no problem. And in terms of your outlook on metals as well, there's ferrous, there's non-ferrous and precious metals. Right now, how are you viewing that space?
Precious like gold, I think, is doing well from a perspective of having gone up quite considerably in the last few years. So as long as there's war and strife and all that damage and in uncertainty and, Mr. Trump doing his thing, I think that is all a factor where the uncertainty will cause more interest in gold going up. But at some point, I don't feel that's a very productive asset to invest in. It's usually a risk or a panic asset. And the world generally goes from areas of panic to areas of stability. And that is usually not a great time for gold going forward. So if there is to be an area of stability at some point in the future, that gold is not the place to be. But I think overall, we are not seeing major increases. You've seen the drop from in terms of the amount of gold that's been imported into the country in the Jan to March quarter. And I think it's a little bit lower this time also. It's also because at one level it's become unaffordable, but there's also that there are other avenues of saving that people seem to like as much. So that's one layer. On metals itself, I think much of it depends on the tariff situation going forward. That's going to come to a head probably in July and August. Based on that, we'll see whether, for instance, China wants to dump steel all over the world. Price will change dynamics for India. Whether aluminium changes in terms of import duties by the US or by other countries on aluminium imports. So much of these depend on that. So I think right now it's a little bit dangerous to kind of make a longer term prediction. But in general, metals don't have a great growth story. So base metals not very attractive. If you'd asked for if there were companies that were doing a lot more of the heavier metals in electric vehicle batteries or sensors, I think that would be an interesting proposition to play with. But I think the base metals are not very attractive.
Mr. Shenoy, you did highlight about the uncertain geopolitical environment actually, and metals, and connected that very well as well. The other aspect with that is of course defense, and we've seen a lot of positive move on stocks like BEL among others. Do you have any kind of pecking order that you would look at? And also within that, we've seen a lot of new age private defense players, and I'm just taking these as an example, the likes of Azad Engineering, likes of Solar Industries. Those have shown market great prospects, and they've actually been rewarded as well. So very richly valued in those aspects, but growth prospects very high for these companies. How would you tie up both these arguments in the defense space and your view on the same?
No, so there are two, of course, the public and private sector is one layer, but it's also the fact that India is spending a lot. India is the world's second largest arms importer. And a lot of that has come from the past where we used to import everything. We used to import the ammunition, we used to import the guns, we used to import the equipment and all that stuff. But now they're saying, let's make more and more of that in India. So as more of that comes in and replacement starts to flow. So whether it's explosives, so one company will benefit from that. Whether it is guns and tanks, another company will benefit from that. And then there is vehicles that used by the armed forces. There is anti-drone equipment. There is missile technology. So there is a lot of stuff in this that's being made partly by public sector, partly by private sector, shipbuilding, and then the engines to make those ships. The shipbuilders may be public, but the engine makers may be private. I think there's a combination of a lot of these that will actually benefit going forward. But it's a proxy for also Indian manufacturing, which will probably benefit in the long term. And this is a 10-year thing. So it's starting now, but I think India will go forward, spend a lot more on defense. And a lot more of that spending, which used to go out earlier, will stay in India in terms of benefiting the Indian economy from Indian manufacturers that are going to be paid to do this. So I would say, have a broad spectrum, not individual plays. I won't say that is better than this. You need elements of each one. Some of them will have larger runways than the others, including in semiconductors, including in heavy earth batteries.
Right.
I think a lot of this will be used. So you should have a portfolio rather than a single set of companies.
Interesting take there, Mr. Shenoy. Thank you so much for taking out the time and speaking with us at NDTV Profit. All right, now Apollo Hospital is in focus. The healthcare company has decided to spin off 3 of its businesses into separate companies. Varsha is joining us with more details on that. Varsha?
Yeah, thank you so much for that. So yeah, the new company will be listed on stock market and the transaction will be completed in next 18 to 21 months. Now, the overall point here is what's in for Apollo Hospitals, why the stock is buzzing. One is the valuation gap is expected to narrow down because the loss entities are hyped off, and the Apollo Hospital business, if you see, is trading at a 25 to 30% discount to some of its peers like Max, and so now there's a potential of hospital business EBITDA margin to expand, because if you see on an overall standalone basis, the hospital margins are at 24%, but on a consolidated basis the margins are at 14%. So now there's a chance that because of this loss, the loss business will be hyped off. You'll have a good EBITDA margin on the overall basis. Lastly, if I want to talk about the con call details, they're going to list this new company in 18 to 21 months, and the healthcare services will remain in AHLL. The new company will have revenue of around 25,000 crores by FY27 with 7% of EBITDA margin. They're looking to grow 22 to 24% year on year when it comes to AHLL, and came in on the back of the growth in pharmacy business. And the insurance business is also expected to contribute to the growth. They're going to achieve break-even in EBITDA in Apollo Digital by end of FY26. On the overall hospital level, they're going to add 4,000 beds, and they're on track to add 4 hospitals in FY26. And lastly, their focus is on hospitals, plus they're committed to grow when it comes to their diagnostic business as well.
Okay, Varsha, thank you so much for explaining that in significant amount of details. Kush, your quick view on Apollo Hospitals. Where do charts stand?
Very good moves that we've seen over the last 2 months on this one. However, the 7550 level is a bit of a resistance level, a bit of a supply zone. This is the third time that the stock has been trying to close above that level, but at least so far there are indications that it may or perhaps may not. So I would wait and watch. The trend remains intact. If I had a position, I would for sure continue to hold with the kind of volume pileup that you are seeing over the last 4 weeks. Trailing stop loss in this case would be 73.50, but a close above 75.50 is what would take the stock much higher, perhaps even to 7700 and 7950 kind of levels. So all in all, bullish. Wait for the 75.50 mark to be taken out for momentum to begin.
Got that, Kush. But now it's that time of the show where we speak about some key news flows, as well as what my colleague Somit is hearing on the street. Is what we call and heard on the street. Somit, what are you picking up?
Well, firstly, the buzz is on Glenmark Pharma. Dealers are indicating that large HNIs have started to accumulate this counter in anticipation of some positive corporate development that could come in anytime soon. Second one is on Axis Bank. There are sell flows on FI desk is what dealers are indicating. Hence, that's the reason the stock has been underperforming. If you look at the Nifty Bank Index, that's the top loser, down around 2.5% in trade, while other banks are not performing that bad in trade today. When it comes to Bajaj Finance, dealers are indicating that there are sell flows on HNI desk on anticipation of weak Q1 FY26 update that could come in. So keep an eye out for Bajaj Finance as well. And when it comes to Coforge, dealers are indicating that large family offices and PMS have been accumulating this counter, given the fact that Coforge, as per their expectation, could report not only a better number compared to peers, but also the growth number could be much better compared to what the street is estimating. So keep an eye out for Coforge as well. MCX, now that stock has been gaining in trade on rumors of a new product launch, new weekly product launch that the street is expecting, and hence that stock is up 1% in trade. And lastly, when it comes to Aegis Vopak, dealers are indicating that the anchor selling is largely over. The anchor lock-in had opened on June 30th, that is yesterday, and the selling is largely absorbed in, and hence there could be some bounce back in Aegis Vopak is what the dealers indicated.
All right, thank you so much, Somit, for giving us all those details. Kush, your quick view on Coforge?
Well, amongst the IT names, this is one stock. Am I audible now?
Yeah, I can hear you.
Yeah, among the IT names, this along with Persistent has been one of the names that has been shining and might well continue to do so. However, I'm seeing some negative RSI divergence setting up, which suggests that there could be some profit booking coming in. So if you haven't bought it, I think you should wait up. A correction towards the 1880, 1875 mark, would make a good entry point. Perhaps the negative RSI divergence play also would have acted out. So if you have a position, you could partially book some profits. If you don't, then wait for the 1875 mark, to come in and then go ahead and create long positions. On the whole, I prefer this along with a Persistent in the IT space.
Got that, Kush, but stay on. We'll be right back. A very short break on India Market Close. We'll be speaking with Sudeep Bandyopadhyay on a lot more perspective on this. Stay tuned.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Welcome back. You're watching India Market Close. I'm Harsh. With me is Neeraj, and we'll take you through the last hour or so of trade. Joining us as well this afternoon, we have Sudeep Bandyopadhyay, Group Chairman, IndiTrade Capital, as well as, of course, Kush still with us. Sudeep, how are you viewing markets at the moment? Very quickly.
Well, I think the bias is definitely positive. After market goes up some certain amount, I think there is a bit of a profit booking coming. But by and large, the domestic trends are positive. Global news flow also is supportive at this stage. So we are witnessing positive market sentiments. We have to keep in mind the forthcoming volatility on account of the 9th July, approaching 9th July, which is when the Trump deadline runs out. We'll have to wait and watch, but we have to be prepared at some level for volatility.
Okay. Sudeep, in light of the fact that there has been a bit of a rally that has happened or already in the markets, would you believe that the street might be in the mood to take some money off the table considering the July 9th deadline and whatever significance it may hold? We don't know as yet. You may well postpone it. Deals may well be struck before it. But would the smart money take some chips off the table?
I think so, Neeraj, because there is a lot of uncertainty and there is no way to predict what's going to happen in or around 9th July. So smart money definitely will start booking some of the profit. The other reason, Neeraj, here is that Indian stocks are not cheap, so they are reasonably priced. In some cases, probably a bit stretched as well. So smart investors will definitely book some profits and wait in the sidelines again. If there is some kind of a volatility, some kind of a correction, they will come back then.
Sudeep, where is it that you are seeing smart money move out? Sector, stocks, pockets?
Well, we've seen a lot of profit booking happening in defense and a lot of stuff. People have moved money out of defense. It's not that they don't like defense. They will probably again come back when the opportunity arises.
Okay, but that's just defense, Sudeep. Anything else?
Well, there can be multiple areas. Sure. I don't think railways is too far either. Some of the railway stocks do look again fully priced. So there also we can see power segment, though it's a great segment to be in for long term, smart money may move out and again come back in.
Okay. Well, but Titagarh Rail interestingly showed some uptick there. I wonder if Texmaco, Jupiter Wagons, etc. in today's session at least are showing that sign or no. Titagarh up about a couple of percent points. Remember Texmaco had that big deal and that stock at 175 is okay. Jupiter Wagons is quiet. Okay. Won't trouble Kush with the chart check. Let's go on to a chart which is looking very, very strong today, and that's Gabriel India. Unveiled major restructuring plan to transform the diversified mobility solution provider. The stock has hit an upper circuit. Puneet Johnson with why so? Now, Puneet, one thing is that there is an announcement. Two is the implication of the announcement over the longer term. Take us to that.
Well, thanks so much for that. So we've actually seen one of the major restructurings in Gabriel's history over the last 3 decades, where company largely was a single product company operating in the suspension space, and they'd added a very recently sunroof as one of the key other verticals, but 90% of the revenue was coming from one single product. The interesting part is that Gabriel is part of the larger Anand Group, which also had joint ventures in their investment company. Now all of that, and that was the Asia company that we were speaking about, Asia Investment Private Limited, or AIPL. So this is a 3-way agreement between these 3 companies: Gabriel, which is the listed entity, Asia Investments, which is the promoter's investment company, and the third one is Ankemo India, which is also another entity which Gabriel will now acquire and have a 100% stake in. Now the intention behind this is to consolidate all the auto businesses under the listed entity Gabriel India. They'll also have some business agreements to get this done aspect, but the larger operation is to make Gabriel into a multi-product company, and this will immediately get you the existing business revenues of all these verticals. So that's one of the positives coming in. Let's now look at the key aspect of this, that of course the scheme will integrate the business of Ankemo India as well, which is one of the key products apart from that, and then the 3 other verticals which include investments in 3 joint ventures: Dana Anand, Henkel Anand, as well as Anand CY. So these all will be now eventually integrated into Gabriel India as well. Now let's just look at quickly what these segments actually do. Now AIPL, of course, is an investment holding company. So let's quickly move on to the other aspect, which is Ankemo India. Now this one offers products like coolants, diesel exhaust fluid, which is not where Gabriel is present currently. So it's a new product vertical, and the other 3 verticals as we just spoke about as well. Finally, in terms of key steps for this particular merger as well, what could you watch out for? Because over the next 12 months, this is what the company is planning to do. The first one will be the merger of Ankemo with AIPL, and that will eventually lead to step 2, which will be the demerger of all these verticals from the promoter's listed entity into Gabriel India. Finally, we will also see Gabriel issue shares to the promoter's investment company AIPL as part of this aspect. Gabriel will share roughly 1,158 equity shares for every 1,000 AIPL shares to its shareholders. But what is the aspect of it is that currently the company has 4,000 crores in revenue, and all these new verticals consolidated which come into Gabriel also have a similar revenue number of 4,000 crores. Currently, they don't own 100% equity stake in all these verticals, so that will happen over the next few months versus integration with these joint venture partners. But this is one of the major restructuring that we've seen in Gabriel India over the last 3 decades, as I just mentioned. And we could see the re-rating just be starting off now. So the 20% move, while today, could be start of a much bigger move over the next few months.
Very, very interesting. Thank you so much for bringing us that, Puneet. Now, when you're looking at Gabriel India's market capitalization around 12,000 odd crore, top line, as Puneet pointed out, just a shade lower than 4,000 crore. Sudeep, you see this as a fundamental shift in the way Gabriel India should be looked at from a fundamental perspective?
To an extent, I think this is a very good development and welcome development from a point of view of Gabriel India shareholders and the future of the company. Definitely, it brings a lot of focus back and it consolidates the auto ancillary business under one roof as far as the Anand Group is concerned. So yes, it's a positive development. We'll have to wait and watch. These things take time to crystallize and materialize on ground. But I think it's definitely a positive development.
Okay. Sudeep, anything within the auto ank space outside of Gabriel that you're liking at this point? Because it's a space which has garnered some amount of interest over the last maybe couple of months. So, and it's been a space where returns have been outstanding over the last couple of months as well.
I do like Sona BLW. I think it's a good investment and good company to get into. Look, this entire tariff thing can again put a spanner in the works. One doesn't know how things will eventually settle because they have a lot of interdependencies and parts do move from one part of the world to the other. Even Sona has got that kind of dependencies, but assuming that the world gets back to a normal, operating mode, I think that's a great company to be in. And even from a long-term point of view, forget the short-term, these kind of fluctuations because of tariff and related issues. Sona BLW does look very good.
Interesting. Okay, so Sona BLW at that. And what within the auto space? We had the auto sales numbers as well. Maybe we'll touch upon that. But, there are a couple of stocks, Sudeep, which I've spoken about earlier this week, or maybe earlier last week as well. Force Motors, SML Isuzu, some of them really flying. Now, before I take a technical view from Kush, let me have your fundamental view on some of those.
Well, I think, we have been positive on Mahindra and Mahindra for almost more than a year, and we maintain our view. I think even if you look at the numbers which came out today, I think M&M definitely comes out as a winner. All the segments, they are doing pretty well. Look at the SUV, I think the fantastic set of numbers. Tractors, again, things are picking up, and the monsoon being what it is and the expectation of a very good monsoon, I think the tractor sales will further pick up. And I think it's a very good place at this stage. I think even at current levels, it's worth looking at M&M from a long-term perspective.
Okay. Kush, do you have a view within the auto pack? And I'm sorry we've come to you after quite a bit, so thanks for being patient.
Not an issue at all, Harshan. I was enjoying the conversation myself. So, no, I agree with Sudeep. M&M definitely, the top pick amongst, the passenger vehicles. But as far as the auto anks go, Gabriel India is something that's already moved quite a bit. Now would be a time to perhaps start nibbling in terms of taking money off the table, start booking profits. Even I would go out and focus on the auto ank space some more. So 2 stocks here on slightly different theories. One is Lumax Auto. We've been discussing this stock about some time now. For about some time now, very good moves. Now negative RSI divergence is starting to creep up. you could see some profit booking. So, as in when you get a dip towards the 1100 mark, you should consider a re-entry or an entry into Lumax Auto. And the second one is Uno Minda. This too had a very sharp run over the last 10 sessions. Yesterday, today, it's seeing some profit booking, but now the 20-day support zone might act up. So if you see it holding around, these 1050, 1075 zones, then you could reconsider, an entry into Uno Minda as well. So I will have my focus on Lumax Autotech and Uno Minda and Gabriel. It's time to start booking some profits because the stock is locked in and over, in an upper circuit. You don't want to give it all up today. But as and when you get a chance, you should start exiting maybe about 20-25% every day if the circuit keeps going on for a couple more days.
Okay, fair call. There's a set of listings that came in today as well, so keep that in mind. And we'll talk about them, some of them at least, the recent ones with Sudeep. But out of the four, Raymond is down, but the others, and Kalpataru was expected, but the other two, after starting off about 25-26% higher, are actually currently trading about 33% higher. So pretty good going there. Sudeep, any thoughts on the new listings? Any company that has recently come which has impressed you?
Well, Ellenberry definitely does look good, and even before the IPO subscription numbers came, we were positive on that. I think they're in the same space as Linde, and we know what kind of performance Linde has shown over the years and the kind of potential this business has. So the EBIT margin is about 40% plus, and there is scope for further improvement. So I think this is a good business to be in, and I think the issue was also priced appropriately. So the guys who got allotment should be happy. And I think this positive trajectory in Ellenberry will continue for some more time. Kalpataru also, I was reasonably positive. And I think we know what's happening in the real estate space overall and how real estate companies are performing. So Kalpataru is an established player in the MMR market. And I think there is potential for this company also to reward shareholders over a slightly longer period of time.
Okay, well, that's the view on the IPOs, and a clutch of them currently, IPOs, QIPs, has become a big thing, as have been government decisions. Now, we learned that the government is planning to make anti-lock braking systems mandatory for all two-wheelers. This was discussed, I think, some days back, and apparently the rule is set to impact two-wheeler companies, entry-level bikes, and maybe more. Puneet Johnson with what's the impact on major auto players? Puneet, why is it relevant today?
Well, thanks so much for that, Neeraj. So we've seen some positive impact coming in on endurance tech as well as something like an Ask Automotive, and that's largely led because these companies supply anti-lock braking systems or ABS products to these entry-level bike players as well. Now, this could have a larger business impact amongst these, and that's something which is putting the positive momentum on endurance tech specifically because they give ABS products from roughly 100 to 900 cc bikes. Now, over the weekend as well as yesterday, we saw that kind of confirmation come in from our sources at NDTV as well, confirming that the ABS rule will be coming in from January of 2026. And since then, we've started seeing that positive momentum on especially something like an endurance tech. So currently, there is estimate that roughly the price of entry-level bikes will increase by roughly 3,000 to 5,000 rupees. That's as per brokerage from Nomura, and that could impact the bike makers like Hero as well as some impact on TVS as well, because they have a huge scooter portfolio which will also need these ABS systems. But in terms of beneficiaries, there will be two. One of them is definitely endurance tech because they already have an existing product, while the other one will be Ask Automotive, which derives 36% of its revenue coming from advanced braking systems and the braking vertical as a whole. So these two companies will definitely be in focus because as of now in India, roughly 75 to 80% of bikes do not have the ABS system. So with the confirmation of this news flow coming in from our sources, it is imperative that there could be a positive fillip on all these or at least these couple of auto ancillary companies, and hence we're seeing the positive reaction coming in on endurance tech today.
Okay, thank you so much for that, Puneet. Now, Sudeep, I have quizzed you about Auto Ank, Endurance, Ask Automotive. Any of those on your radar as a result of what's playing out here? Very quickly.
Endurance, definitely, because I think this will be a great opportunity for them. So incremental opportunity rather. So definitely endurance.
Kush, do you have a view?
So Harsh, I think the move, at least because of this news trigger, is done. If you see the moves on endurance and even on Ask Automotives, the stocks had actually seen some accumulations. In fact, quite heavy duty accumulation over the last 5-7 odd sessions. And in fact, today are now seeing profit booking. Endurance also, if you see, is off the high point of the day from about 3,030 to 2,900 right now. And even or Ask Automotive had spiked up to about 547 yesterday. Today seeing some profit booking. So on the back of this news, if someone wants to enter, I think it's time to book profits and take money off the table. But on the whole, from a medium term perspective, the structure for both of these is rather solid. So if you do get an endurance take close to the 2775, 2800 mark, and even an Ask Automotive close to the 500 mark, you should consider a re-entry.
Okay. Well, what else? A third of 1% down for the indices by and large. Nothing too great. I think I was looking at stocks which might have moved in the session today in the last few minutes of trade. So EU Small Finance Bank and Federal Bank are amongst others which have had maybe a decent move for sure. On the Nifty Bank, of course, IDFC First Bank, something that Harsh highlighted in the opening show, has also done reasonably okay for itself. And which is why on the bull versus the bear segment, we focused on that one. Now, Harsh, interesting because it's not necessarily always had moves, but after doing that fundraise, if I'm not wrong, or a pref allotment or whatever they did at the price of 60, the stock has actually had a fairly decent return in the last 2 or 3 months.
It has, Neeraj, 25% from there, in fact more than 25% from there. So that seems to have been the bottom of sorts, at least for the moment. Let me not call it too quickly, but let's quickly pull up the bull versus bear. And the first point essentially is OPEX. OPEX has been elevated for IDFC First. Their cost to income is around 72%, which is quite high. Compared to peers, something like an HDFC has 40% cost to income odd. So that's quite high. Even if I look at it cost to assets perspective, it's 6%. So that's obviously elevated. And the last, in fact, when I'm looking at the 5-year period, cost to assets has been anywhere between 5 and 6% for an IDFC First. So it's quite elevated, but that also leaves it with a lever. If that were to come down, you'll immediately see an impact on profitability and ROA. And that's my first bull case. Can that change? But I've already kind of brought out the bear case here. The last 5 years, they're used to this very elevated cost to assets or cost to income. And that really is, they are finding it difficult to shrink that. At least that seems to be the case at the end of FY25 and what the commentary suggested. Now let's talk about the bull case on the second count. FY25 has seen a sharp spike in credit cost, 2.5%. Highest credit cost number since FY22 that we saw in FY25. That though is past us, and likely can we start to see a shrink from here is the question. And maybe there is, because Q4 there was a slight bit of shrink with regard to credit costs. Again, the question therefore is, the bull case question is the worst over? The bear case question is, could the pain continue? Let's go on to the third piece. Margins to be least impacted by the repo. This is basis the Investec note today, which I was going through. Margins among all private sector banks, IDFC seems to be the best place in terms of margins. They will protect their margins in this repo rate cut. But loan growth, which used to be elevated, 25, 30+% sometimes, has slowed down to 20%. You want to keep your eye out on that loan growth. Could it dip further? That could be a downside surprise if that were to happen with regard to IDFC First. Let's talk about valuations now. It trades at 1.4 times 1 year forward, which is in line with the 5-year average. So a positive, because you might see a cycle turn, right? You're at the bottom at this point, and you're at the 5-year average in terms of valuation, so not too expensive. Could you see an upside from here? Possibly, given the kind of valuation it's trading at. But it trades in line with competitors, so you could well see other competitors as well and compare valuations there. And if you're finding favor with another competitor, that could well be something that buyers will look at. Now let's look at how the analysts are looking at this. 15 buy calls, 5 hold, 5 sell. The average return is negative 5%. You want to look out for that. The stock has run up quite sharply. 73.58 is the average 12-month target price. Let me go across to Sudeep. Sudeep, do you have a view with regard to an IDFC First?
Oh, absolutely. We like the stock. In fact, even it was correcting post that preferential allotment, which they did, and there were a lot of negative publicity. We were positive, and we believe that 90 is a target for IDFC First at this stage. They have significant scope for improvement, and you're absolutely right. FY25 did see actually the worst possible credit cost and the scope for significant improvement, which is happening as the economy is improving. Also, the microfinance asset book, where they took a lot of hit, I think things are improving quite a bit there. Cost to income ratio is going to improve. That's what I understand from the management commentary in the last quarter meeting. So overall, we are positive. It's got a steady, stable management with a very clear focus on business. So we are positive here.
Okay, Kush, do you have a view with regard to an IDFC First?
First, from a momentum trade perspective, yes. I mean, otherwise the stock has been one that has disappointed the street, every now and then. But right now, if you see, it's got a few things going for it. There was a falling trend line, a falling channel resistance that it's broke out some time back, and it's building onto, those gains today. Also, you're seeing the stock up on the back of good volumes. I think from a near-term perspective, also you could look at an entry for targets of 81 once that is taken out, and 85 as well. That happens to be a bit of a stiff resistance. So yes, from a momentum trade perspective, you could well consider IDFC First Bank and keep your stop losses near the 72 mark.
Okay, so but that's on IDFC First, one of the smaller banks. What's really doing well since the last couple of days, Neeraj, is the PSU banking space. And I'd be curious to know.
Today not so.
Today also is the top sectoral gainer.
BOB, etc. are slightly off.
Yeah, but it's still the top sectoral gainer today, and that's second consecutive day on the back of 2.5% that it did yesterday. Quite impressive. But let's listen in to a snippet of our chat with none other than Mr. C.S. Setty, who's the chairman of State Bank of India. We'll slip into a short break as well. On the other side, we'll take views. Also, I need to quickly thank both Sudeep and Kush for joining us this afternoon. Thank you.
The question of the margin is always something that is bothering a lot of people, especially in the rate cut cycle that we're in. And we're closing to the fag end is what we all understand that. But is that at all a worry for State Bank or for the chairman of the State Bank of India?
So the net interest margin trajectory is, in my view, would be a U-shaped curve, in the sense that in a couple of quarters we see the margins getting compressed.
Yeah.
Obviously, the front loading of repo rate has accelerated the repricing of some of the retail portfolio. For us, the benefit is that we don't have much of that repo-linked portfolio. Our portfolio is broadly either fixed or MCLR. But we want to give the benefit of MCLR reduction also to our customers, right? So which means that you need to calibrate your deposit rates. This is precisely what we have done. So going forward, I believe there are two things. One is the margins get adjusted, and number two, the September onwards, again an unexpected pleasant surprise from the regulator is to cut the CRR by 1%.
Yes.
So that will add, one is it will immediately reduce the cost of maintaining that reserve, and number two, ability to deploy those funds. So September onwards, I think there will be a addition to the margins. So we need to look at the exit margins of Q4.
Correct.
I think broadly most of us would be better positioned.
And is a pride of the country. User friendly है. SBI के ऊपर सबसे ज़्यादा trust रहता है.
Wherever I am, even in the rural most areas, I still can find SBI.
Indian banking starts, and I would say even end with SBI.
This office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
Welcome back. Let's bring up a few stocks because there are some big moves happening in stocks or smart moves happening in stocks. Himmat Singha Seed is having a move, all right. So look at that move in that one in the last few. I believe Solara Active is the other one which is having a fairly sharp up move. Iris Clothing has a sharp uptick as well. Craftsman Auto, Equitas Small Finance Bank, Credit Access Grameen, ESAF Small Finance, a lot of stocks which are having some decent moves and sharp up moves in the last few minutes of trade. So keep them in mind. Our guests are with us for the last half an hour. Pankaj Pandey, Head of Research at ICICI Direct. Aditya Agarwala, Head of Research and Investments at Invest for EDU. Gentlemen, both of you, thanks so much for joining in. I rattled out a flurry of names, Aditya. I wonder, before we get to your calls, if you look at any of them, because they're all having some sharp moves in the last few minutes of trade.
Good afternoon, Neeraj. Oh, definitely. Most of them have been flying up and then flaring up as well. And if you take a look at the texture of the market, it has slightly changed towards smaller finance and NBFCs. Can add a couple of housing finance companies as well. And my sense is this space is going to see some more upside in the near term. I just joined the call. I was overhearing discussions on IDFC First Bank. Probably you can add a couple of more names to it. CUB, City Union Bank, that also is looking interesting. And a clutch of stocks that you mentioned, like Credit Access, Grameen and all. I think there is good opportunity in this space still. Talking of Credit Access Grameen, I still feel one can actually latch onto the stock even at current levels. There is good volume traction that I've seen at lower levels from there. Stock has seen a good run up. I think there is more room on the upside. One can still go long in the stock. Look for a target of at least 1400 to about 1550 on the upside with a good support on the downside at 1150. So Credit Access Grameen definitely stands out for me. Talking about Himmat Singha Seed, this is one stock which is still stuck in a range, though from the lower levels it has seen some kind of a buying. Neeraj, I think 170 is a major hurdle for the stock. If it takes out 170, then maybe I'll be more interested in the stock. Apart from that, the one space that I clearly like are the smaller banks and few PSU banks as well, and NBFCs, if you can add it to that.
Got it. What about an index call itself? Are you doing something on the index itself, Aditya?
Not really. I think it will enter into a consolidation phase. There is a gap area which it witnessed in the month of October last year, 2024, which is closer to about 25,700. So my sense is markets will enter into a sideways consolidation for the Nifty between 25,400, 25,300 on the downside and 25,700 on the upside. Same holds true for Bank Nifty. It's actually heading into a resistance upper end of the rising wedge on the Nifty, Bank Nifty. Which is closer to about 57,700. So my sense is markets will spend into a sideways consolidation few more days, and then maybe you will see an eventual breakout, while you will see a churn in the sectors and the stocks that we are already witnessing.
Okay. What about ideas yourself, Aditya?
So I've got a couple of buy recommendations. One is from the metals pack, which is clearly looking very interesting. And I've picked up a Vedanta for our viewers. I think it's setting up for a big up move. So at current levels, I'll be a buyer. It's on the verge of a breakout from an ascending triangle pattern for a target of 500 with a stop loss at 450 on the downside. The second stock is from an EMS player. Again, this is one space which is looking very interesting. Sirma is something, Sirma SGX is looking very interesting to me, Neeraj. And I think a clutch of these stocks are looking interesting. I picked up Sirma as of now for a target of 635 on the upside with a stop loss at 560 on the downside. And there are more stocks within this space which I think can be looked at apart from Sirma only.
Okay. All right. So those are some views coming through with regard to some stocks. Let me quickly go across to Pankaj. Pankaj, if I were to ask you your top pick for the next year in terms of valuation as well as turnaround, what would that be? Can be a sector, can be a stock. Is there something in your mind?
So a sector what we are liking for the next say 6 to 12 months or probably even longer is capital goods. I think post budget there was a sense that probably consumption is going to take center stage, but our sense is that when we look at the April numbers for central government capex or even the May numbers, I think those numbers are quite good. See, compared to last year, April numbers of nearly 1 lakh crore. This year, time April, it was about 1.6 lakh crores. And again, from a low base of somewhere about 41,000 odd crores, now this number is about closer to about 60,000 odd crores. So I think capex is something which I feel is going to sort of make a comeback. I think all the entire ecosystem is sort of moving into that direction, be it RBI policy cuts or the kind of push what we are sort of getting from the government. What I'm clearly liking is, again, tier 2 names, especially, for example, while a lot of bigger names are there, but I think the bearing companies particularly look interesting from the perspective that there has been a decent price correction there. We are seeing good amount of capex being planned by most of the players. And I think it's a basic industrial product. So whichever segment does well, bearing is going to be required. I mean, be it railways, be it any other segment. So I think so my topics again there would be Timken and SKF. And NRB Bearings is another stock which we have been liking for some time.
Okay. Wonder what Pankaj thinks of Dixon. We'll get to him on that and auto sales, because first let me get in Puneet, because Dixon Tech was under serious pressure and still down in trade because Morgan Stanley released a note downgrading the company. Puneet, tell us about the rationale here.
Well, thank you for that. It's not just on valuations. We've started seeing downgrades coming for Dixon on the business side of things, and that's where the concern slightly lies. Today, while they've upped the target price from roughly about 8,600 to 11,000, somewhat and change there, but specifically, they've gone on to say that they see a higher competition in the core EMS business, and that's largely continuing with what we've been discussing over the last couple of days, where some mobile volumes from Motorola, which is its largest client, has now gone to another EMS company, Carbon, and that could be under serious pressure post this year, where the PLI incentives end essentially by this FY26. So they've said that could be one of the key concerns. The second concern is on the component manufacturing side. They've highlighted that it is a step in the right direction for the company, but it could emerge as a business which was much tougher to execute compared to the traditional EMS business as well. And what's interesting is in terms of EPS as well, what they're estimating, while over the next 2 years a 46% EPS CAGR is what the brokerage is estimating on Dixon Tech, that substantially falls to 18% between FY27 and 30. So therein lies the challenge. There could be some business from the EMS vertical going to other players, as well as the components business, according to Morgan Stanley, much tougher to crack compared to the traditional EMS business.
Okay, so that's the take coming in on a Dixon Tech. Pankaj, do you like EMS? And thank you for that, Puneet. And Pankaj, do you like EMS one, and within EMS is Dixon one of your top picks, or how would you rate it?
So yes, EMS is a space we like. I think from 3 lakh crore plus, this industry is expected to witness 27% kind of a growth. And Dixon, within that is what we like besides Sirma. So in Dixon, we have a target price of 20,000 and Sirma about 640. We like both the companies because of the high growth prospects. I think on the Dixon, our sense is that, see, from a manufacturer, from a OEM perspective, no OEM would want a single guy to sort of control too much of a volume. So a bit of a diversification, we don't see that as a strategic negative. In fact, our sense is that Dixon is going to remain the primary manufacturer for a lot of non-Apple phones. And overall sense is that we would be witnessing 35, 37% or probably slightly higher kind of a growth both in the top line and bottom line. Bottom line could be higher because our sense is that with, I think, component or value addition going up, margin profile could improve from 3.9 to say about 4.5%. So we continue to like Dixon. We don't see anything major negative there. Sirma, I think, is more broad-based across other segments as well. So Sirma is another stock what we like. But we're liking this space. Only challenge is that because the growth rate is high, valuations are rich also.
Okay. Well, on a day of weak market breadth, it's good to know of pockets of strength as well. And of course, the weakness, of course, or the weaker hands need to be kept in mind too. So, well, on the strong side, of course, while Raymond has had a good one and banks have had a good move, in the EMS space, Amber Enterprises had a phenomenal move today, 4.5% in counting and trading at the day's high. So this is one serious mover. Non-EMS Blue Dart is now the top gainer on the Nifty 500. So you got to watch out for this as well. News and updates, more news and updates on to an NDTV Profit exclusive. New development in US-India trade deal. Tamanna joins us on the phone line. Tamanna, what are you gathering?
So, Neeraj, this is very interesting because even as the July 9th deadline nears, we know that there is now a stalemate which is continuing over trade talks in Washington between India and the US negotiators. And this stalemate is now because India is completely sticking to its red lines. This is what we are learning. In fact, the team is now once again extending its stay in Washington, D.C. And there was one extension which was yesterday. There will be one more. Where the whole conversation seems to be stuck is over two pockets. One is that the U.S. side is pushing for access to Indian agri and dairy sectors. And this is something that is not completely agreeable on the terms they want. India, on its side, we learn, is seeking concessions for labor-intensive sectors like leather and toys manufacturing, and that is the access that the Indian side is seeking for these sectors and this produce that comes from India. So even as we head to that July 9th deadline, even as President Trump is announcing that, we're very, very close to a deal. We heard from the White House this morning that there could be a deal anytime now. We are now learning that the stalemate very much continues as hectic negotiations are on.
Okay. Well, remember, thanks for that, Tamanna. Remember, there was an extension and one more, and the eventual date was supposed to be 30th US time, and now it is this. This is close to call, of course. Remember, 9th July is the flutter date, if you will, and it will essentially be a factor, Harsh, of the markets reacting in the run-up to that date and not necessarily on that date itself. And I think volatility could pick up, which is why I think Sudeep Bandyopadhyay was also mentioning that it might well be the case that because we've seen a bit of a run-up in the markets already, some smart money may want to take some chips off the table in that period, and then wait for your time. The markets have given you returns, take some money off the table, and then think of what to do next.
Okay, but Sudeep, so likely...
No, we have Pankaj, we don't have Sudeep anymore.
Oh, apologies. Pankaj, yes, you're right. So, Pankaj, would you also at this point look to take chips off the table? Is that what you're advising clients?
So our sense is that historically, say for example, July has been a very productive month for the market. It has on an average given returns about 2.5%. And I feel there are a lot of positives trigger which can sort of come in. Obviously, what we have clearly seen is that the crude oil prices have sort of have come down to nearly $68. On top of it, there is a good chance that probably some thing might come out of this bilateral trade agreement. Result season is expected to be okay compared to Q4, so you'll have stock-specific triggers. So we don't see, or we are not recommending people to sort of exit the market at this point in time. Our sense is that by another 3-4 months, we should be making a new high, and possibly levels like say 27,000 or 28,400 on the cards technically in the next 3 to 6 months. So we're not advising people to sort of exit the markets or book profits at this point in time.
Okay, interesting. So stay put. That seems to be the case. Is there a case on technicals, Aditya, that one needs to be cautious at this point?
I would like to be a little cautious, Harsh. I wouldn't completely rule that out. A couple of reasons for that. If you take a look at the VIX, it's clearly hit the lower end of the bull territory. Whenever markets are in an uptrend, VIX usually tends to consolidate near 10 to 12 odd levels. We're almost there about 12.5 odd levels. Plus, if you take a look at the Nifty and the Bank Nifty, both are slightly at elevated levels, slightly at resistance zones as well, both on the Nifty and the Bank Nifty. So partial profit taking, yes, shouldn't be a bad idea. If you're sitting on decent profits, either on stocks or on indices themselves, it's not a bad idea to book partial profits at current levels, maybe about 40-50% of your profits. And look for some kind of a volatility to pick up when you will see a slight bit of cool off in both the indices. Then it will be a good idea to latch on to them again, because I don't see markets running away one way to new all-time highs just yet. It will take some time before you actually see that happening. So it might not be a bad idea to take some part of the profits off the table, at least 40 to 50%. And once you have some bit of a cool off in the market, a correction also, good idea to re-enter.
Okay, all right. So that's the take, both fundamental and technical, and that's the big breaking you want to keep your eye out on. Will 9th July be positive for India, or at least the way it's going at the moment, basis information we're getting, not as much. But while we're at it, it's a day for autos, and while the auto index isn't moving as much, but we have Puneet here to take us through the June auto sales numbers that have come so far. Puneet.
Well, thank you for that. And it's very interesting because while most companies have met the weaker estimates, there have been a couple that have actually, underperformed severely, to say the least. Let's start with the two-wheeler names first. In terms of Eicher Motors, now the company's growth has been very strong in this particular month. 22% growth for the company. They've also beaten estimates handsomely in this particular month, and it's showed the highest growth. We're still awaiting numbers for Hero. It won't be close to 22% for sure, but it's a very strong number coming in for Eicher. The other one is Bajaj Auto, and here you see the growth differential from 22 of Eicher, just 1% for Bajaj Auto, and this also is largely led by the growth in exports. The domestic two-wheeler business has actually fallen 16% in this month, and it is a tough time because within the last 8 months, 7 months the company has reported a negative growth in the domestic market. So it's a serious need to look at that aspect as well. The other one's TVS, and again you will see a very sharp up move in growth, 20%. The product shown is rightly so because the scooter space has been doing effectively very well for TVS, as well as the higher premium bikes have been doing very well. So again we've seen TVS as well as Eicher being key winners. In terms of four-wheeler space, and here is where you see the divergence again. Mahindra and Mahindra 18% growth in this particular month of June, and beating largely almost meeting estimates as well. So it's been again a strong month. On the other side, when you look at something like a Tata Motors, and for the Harrier maker, they've shown a 15% YOY degrowth. While this could help in maintaining the inventory at a lower level, it's certainly a huge disappointment versus the estimates as well for almost 40,000 units. Finally, in terms of commercial vehicles and tractors, and we've seen a disappointing month for Tata Motors. Let's also quickly go to Ashok Leyland as well as VECV, because we'll see largely meeting estimates for both these numbers. Ashok Leyland as well meeting estimates, but the YOY growth is just between 1 to 3%. So it's been a month where it's been consolidation, and hopefully the second quarter is much better than the first one. And finally, in terms of tractors, Mahindra and Mahindra again showing a 13% growth, meeting estimates and beating estimates handsomely, while Escorts has largely just not met estimates that much, but 2% YOY growth, very low. So you're seeing three key winners again. Similar to last month is Eicher, TVS, as well as something like a Mahindra and Mahindra, and that could be continuing. Well, we are still awaiting numbers from Maruti as well as Hero, both big numbers within the key verticals, and those will be one of the key ones to watch out for tomorrow morning.
Okay, so that's with regard to auto sales which are coming through thick and fast. Thank you for that update, Puneet. I want to quickly take a BTST view from Aditya Agarwala before I take the auto update from Pankaj and take his views on auto. Aditya, BTST.
So I've got an SBI Life which looks interesting to me, Harsh, for a target of 1930 on the upside with the stop loss at 1810. It's a good BTST candidate.
And Pankaj, do you have a view with regard to the auto numbers, and what do you make of it? What are the trends showing, and what are you most bullish on within auto?
So on auto numbers, last few months, if you look at, same template is getting repeated. The export volumes for most of the OEMs have been sort of doing good. I think in two-wheelers, clearly you have Eicher, which is doing 90,000 kind of a monthly run rate, doing quite better, especially in the premium side. And TVS is doing a lot better compared to the other two counterparts. And in M&M, I think continues to deliver a high teen kind of a growth. Tractor is again expected to deliver a high single-digit kind of a growth. So no major changes. What we are liking in, again, auto is M&M with a target price of about 3,700. So that remains our top pick. I think Eicher is another company which we like. So that is the pick. And I think overall sense is that in auto, one needs to be very selective because we are yet to see broad-based growth. So the benefit of tax cuts is really yet to sort of come by. And let's hope probably in 3 to 6 months whether we get something of that sort. Otherwise, I think, again, it will be led by only few select stocks. I am still not hopeful of a very broad-based pickup in numbers in this year in autos.
Okay, real estate has had an iffy last few days, but Kolte Patil in today's session is having a serious move. Then some very strong upticks in a stock called Quick Heal. So both of those will come up on your screen. Kolte Patil Developers and then Quick Heal. Quick Heal up 6.5% off in the last few minutes, but Kolte Patil 6.5% and trending higher and closing in at the day's high. So good going here. Aditya, in real estate, do you like or dislike anything? Because it's a sector that's underperformed in the last 6 or 7 days.
There are a few pockets which definitely look interesting, Neeraj, from within the real estate space. The one that stands out for us is Godrej Properties for sure. A good consolidation going on in the stock. I think a matter of time before it eventually breaks out of that hurdle of 2,500 and its levels of 2,650, 2,700 on the upside. The second is Shobha Developers. That is also something which we like within the real estate space. And after a good bit of a consolidation post-correction, I think it offers an excellent risk to reward even at current levels. Can be bought at the stop loss somewhere around 1450, 1440 on the downside. Look for a target of 1,800 on the upside. So there are a few pockets which do look interesting within the real estate space. Top two bets for us are Shobha and Godrej Properties as of now.
And Godrej Properties, point well noted. You know, the other one which has had a seriously good move, Aditya, the last few days is Laurus Labs. Now, should one take money off the table here, or are the charts looking good for more?
In fact, if anything, I believe stock has hit a new all-time high in trade today. And as we mentioned in technicals, if a stock is hitting a new all-time high, there are chances of stock continuing its upward momentum. Do not take money off the table. We are looking at a target of 850 on the upside as far as Laurus is concerned. If you are looking for a fresh entry, you can still take a fresh entry in Laurus Labs, I believe. Place a stop loss somewhere around 710 on the downside and look for a target of 850 on the upside. Definitely a hold and a fresh buy as well.
Not a cheap stock at all, right? But I mean, it's hit new highs today. So who is to argue against that? Fundamentally, is this or a Divi's or some other CDMO player something that you like?
On the CDMO side, obviously we like a big player like Divi's, I think. So that is the topic. Beside that, I think Piramal Pharma, our sense is that should benefit from the fact that they've got facilities in US also, and they're guiding for a good a low double-digit kind of a growth rate with a better margin profile over the next 4 or 5 years. So Piramal Pharma and Divi's is what we are liking in the CDMO space.
Pankaj, do you like the PSU banking pack at this point? We've had a couple of very good days for that one.
So within the banking, I think PSU banks are at a relatively slightly better position because last 2-3 years, I think they have not been losing market share. Credit growth has been quite decent for them. I think they are relatively less volatile from a margin perspective, given the fact that for PSU banks, I think 40-45% is external benchmark linked rate. On top of it, they are well placed on CASA front, and even on the valuation front, I feel that they're relatively better placed. What we like in PSU is again something like, say, Indian Bank. It has got one of the best ROAs of about 1.3%. Besides that, I think Bank of India and PNB is another the other two stocks what we like. SBI, I can't comment.
Okay. Aditya, do you have a view?
Oh, definitely, Harsh. In fact, as a disclosure, we have recommended PSU banks to our client in the past 2 trading sessions. The top 2 bets would be SBI and a PNB. For SBI, we're looking at a target of 860, 880 on the upside. Place a stop loss at 810 on the downside. As far as PNB is concerned, that too we have recommended and would be in their positions for a target of 120 on the upside with a stop loss at 110 on the downside. PNB Bank also looks interesting. My sense is the next leg of rally within the banking space will be led by PSU and the smaller banks as we've been talking about.
Okay, just before we start wrapping up the markets, 3 minutes left. You got to wonder what's happening to Coromandel International, because that stock has really sunk in trade today, right? I don't know if this is ex-dividend or otherwise, but some very sharp downtick in trade today. Aditya, any thoughts here? It's usually not a stock that's prone to such sharp moves.
Absolutely right, Neeraj. In fact, it's also heading very close to support levels of 2270 on the downside. I won't look at exiting the stock just yet if you already hold the stock following this 7% downtick that we're witnessing. Maybe see how the stock behaves around 2250, 2270, because that happens to be a major support for the stock. It's more of a consolidation we are witnessing between 2500 and 2270, 2250 on the downside. If it breaks 2250, then I'm looking to exit the trade. As of now, I would not be too much in a hurry to exit the trade because I'm not seeing too heavy a volume also in selling as we had seen in the buying previously.
And Aditya, very quickly, Blue Dart and Raymond in particular, because surprising moves there, I thought.
Oh yes, Blue Dart is something which also popped out for me while I was looking at scanning stocks. The only thing here I'm waiting for and I'll watch for trade tomorrow is it's heading to its 200 DMA. Once it breaks out of 200 DMA, then I'll be a buyer in the stock. Above 69.50 is where I'm looking at going long. If it breaks out of 69.50, then I'll be a buyer in the stock. As far as Raymond is concerned, yes, this is one stock which will continue to head higher. I believe 850, 900 on the upside in Raymond is a very much possibility. If you already have it, continue to hold. If you're looking at fresh entry, you can again go ahead and buy the stock even at current levels with a stop loss at 720 on the downside. Look for a target of 850 to 900 on the upside.
Pankaj, very quick 20-second view on Raymond. Are you positive?
Don't cover this stock.
Okay. All right. Thank you so much, gentlemen, for joining us this afternoon. We'll let you go on that note. We're a minute away from close. Let's quickly look at how the Nifty is shaping up at close. We're just about on the flat line. 25,500 held, second day in a row. Not bad news at all. Let's look at the intraday chart on the Nifty. We're off the highs, of course. We made a high of 25,593, but it's a fairly range-bound session. You look at the low, you look at the high, just 90 points between that. And therefore, it's been a very, very range-bound session. But we're closing in the green as we speak. So nothing to complain about in that sense. Let's look at the heat map and let's see what pockets have done well. Apollo Hospitals, no surprise there, 3.5% higher after that announcement. Well, defense continues to do well. BEL 2.5% higher. Reliance, the big boy, has done 2% as well. And that kind of aids the index as well, right? What's not done well? Well, you have Nestle as one pocket and some consumer, including an Eternal, is sinking around 1% or so lower. Let's look at the contributors as well. We've closed for the day. The breadth largely even Steven on the Nifty, but Reliance, HDFC, Kotak, likely that's what's really in some form or shape aiding the index. What's putting pressure? And ICICI Axis. So it's the private sector banks which are really playing both positive as well as negative on the index. That's of course the breadth. And overall it was absolutely neck to neck, 1:1 at close, but there was plenty of gyrations all through the day that we've seen. Let's look at the mid cap and small cap indices as well, and that'll give us a sense. The broader end largely flat on the Nifty mid cap at close, the Nifty small cap as well, just about a 1/5% lower, so no action per se in a big fashion. Again, fairly range bound in the way they've traded as well. Let's also look at the BSE 500 top gainers, top losers. Before I just look at sectors very quickly, some names which we've spoken about pretty much over the last hour and a half of trade, but an RBL Bank is the other one that really stands out. Second straight day of gains, and look at that, nearly 5% higher for an RBL Bank. And those are some big losers. Coromandel sitting right up on top. Obviously volumes is what's likely led to that, because otherwise very little in terms of an explanation as to why that is 7% lower. Let's look at sectors now very quickly. What you're seeing is PSU banks continue to do well. Defense also 0.5% higher. Quite a good day for defense in relative terms. 1/3% higher on metals. What's not done well is an FMCG. We spoke about that a bit. Nifty IT also down around 1/3% thereabouts. The Nifty Realty was down around 1/4%, but largely no major moves on sectoral indices. Frankly, in terms of what to watch, far and few for tomorrow. So those are some things that you'll want to keep your eye out on globally, but outside of that, very, very little to speak about. US manufacturing PMI is the other one. Fed Chair Powell's speech will be interesting because of all that's happening between the US administration and the US Fed. But for the moment, from Neeraj, myself, everyone who puts the show together, thanks so much for watching. Out of time on this one. Market Express will take all the action forward. Stay tuned.
and is a pride of the country. यूजर फ्रेंडली है. SBI के ऊपर सबसे ज़्यादा ट्रस्ट रहता है.
Wherever I am, even in the rural most areas, I still can find SBI.
Indian banking starts, and I would say even end with SBI.
This office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show, viewers. Benchmark indices outperformed broader markets today. Both Nifty and Sensex ended about 1% higher, while the Nifty wrapped up trade above 25,500 levels. The 30-pack Sensex stood above the 83,600 mark. Heavyweights like Reliance, HDFC Bank and BEL added to the momentum. On the other hand, ICICI, Axis Bank and TCS also added pressure. Benchmark indices outperformed broader markets. Both Nifty and Sensex ended about 1% higher, while the Nifty wrapped up trade above 25,500 levels. The 30-pack Sensex stood above the 83,600 levels. Heavyweights like Reliance, HDFC Bank and BEL added to the momentum. On the other hand, ICICI, Axis Bank and TCS added the pressure. Most sectors, viewers, ended in the red, with media, FMCG and IT being the top laggards. Meanwhile, PSU Bank's defense and oil and gas lead the gains, ending the day in the green. Apollo Hospital was a buzz in trade after the company decided to hive off 3 of its business into a separate company. The new company will be listing directly on stock exchanges and the transaction will be completed in 18 to 21 months. Now, the combined entity aims to hit 16,300 crore rupees in revenue by FY25 and plans to top 25,000 crore rupees revenue by FY27. Now on to the brokerage verdict on this demerger. Morgan Stanley maintains an overweight rating on Apollo Hospitals with a target of 7,242 rupees, citing potential value unlocking. They note Apollo trades at a discount to peers, sees its NewCo as India's largest omni-channel pharmacy distribution company. Morgan Stanley also praised its aggressive revenue and EBITDA targets that could actually boost shareholder value. Meanwhile, Citi remains bullish, maintaining a buy rating. They view the demerger and the listing of its pharmacy and digital health business as positive. They also expect the move to narrow Apollo's 25 to 30% discount to peers through a leaner business structure. Morgan Stanley has downgraded Dixon Technologies to underperform from equal weight. Now, the brokerage has raised its target price to 11,563 from 8,696 rupees. Now, the downgrade comes as analysts see increased competition in Dixon's core electronics manufacturing services business. They also view the company's move into component manufacturing as a positive step. However, Morgan Stanley has cautioned that it could be more challenging to execute than its core operations. CG Power, an industrial solution, has launched a qualified institutional placement to raise up to 3,000 crore rupees. The issue price is set at 660 per share and 3.25% discount to last closing price. The floor price was set at 679 rupees. The QIP, which opened on June 30th, will result in a 2.89%, close to 2.9% dilution of the company's post-issue equity capital. The funds are also aimed at strengthening CG Power's balance sheet and supporting its growth in industrial systems, power solutions and consumer appliances. Kalpatru Projects and its subsidiaries have secured new orders worth 989 crore rupees in the power transmission and distribution sector. Now, this is largely from the overseas markets. This brings the company's order intake for FY26 to 7,150 crore rupees. Now, this signals growth visibility Meanwhile, Manish Monot, the company's MD and CEO, highlighted that strong traction in the T&D business. This traction was actually driven by global demand for grid infrastructure. The order win also powered a 4% uptick for the stock. However, the stock pared some of its earlier gains and ended the day in the red. ESAF Small Finance Bank has completed the sale of stressed loans worth 733 crore rupees to an asset reconstruction company, receiving 73 crore, a 10% consideration of the outstanding amount. The portfolio finalized via the Swiss challenge method includes 362 crore rupees in the non-performing assets and approximately 373 crore rupees in the technically written off loans with 90.15% provisioning coverage. Now, this strategic move aims to clean up the bank's balance sheet, improve the asset quality and bolster investor confidence as ESAF focuses on strengthening its core lending operations. Shares also rose over 3% today following the announcement. IRDA's Q1 of FY26 update shines with a 19% year-on-year increase in the loan sanctions and a robust 31% rise in disbursements, outpacing its lending peers. Recently raised funds have bolstered its capital adequacy, ensuring growth capital availability. Meanwhile, HUDCO reports a strong Q1 of FY26 with loan sanctions soaring to 33,904 crore rupees from 14,097 crore rupees year-on-year. However, loan disbursement remained flat at 12,812 crore compared to 12,625 crore rupees on a high base, still contributing to AUM growth. Now, both companies signal resilience in their financing strategies. In some major relief for Yatharth Hospital's Ramraja Hospital's land, the dispute in Madhya Pradesh has been conclusively resolved. The company's rightful claim to the land was confirmed. The issue arose when Sagar Sambhag ordered a takeover claiming the land belonged to the government. Ramraja had challenged this in the Madhya Pradesh High Court, which directed the commissionerate to reconsider. Meanwhile, hospital operations remain unaffected throughout, ensuring uninterrupted patient care. Gabriel India managed to hit 20% upper circuit after the company announced plans for strategic restructuring. The plan aims to transform the company into diversified mobility solution provider. The plan also aims to consolidate all auto businesses under Gabriel India. Hindustan Copper and Coal India have signed a memorandum of understanding to jointly explore and evaluate opportunities in the copper and critical mineral sector. This partnership aims to identify potential projects and explore collaborations with renowned global companies in these fields. While the MOU is non-binding, it marks a strategic move for both state-owned firms to strengthen their presence in critical minerals, vital for India's industrial growth and energy transition. Hexacom Telesystems Board has approved a rights issue to raise 260 crore rupees by offering equity shares to existing shareholders, aiming to strengthen its capital base. The company currently holds cash reserves of 220 crore rupees but carries a debt of around 700 crore rupees with a market capitalization of 2,387 crore rupees. Hexaware Technologies has approved an additional investment of up to $50 million, approximately 430 crore rupees, in its wholly owned subsidiary based in the United States. Now, this investment planned to be made by the end of 2026, which will be in the form of equity share capital or other instruments. Prestige Estates launches a new premium residential project in Chennai spread over 21.84 acres. The development features 2,069 high-end apartments in 2 to 3 and 4 BHK configurations with a gross development value of 3,350 crore rupees. Located on the Pallavaram Thorai Pakkam Radial Road, the project offers excellent connectivity to key commercial and its hubs along with top educational and healthcare facilities. Bharat Electronics has disclosed receiving additional orders worth 528 crore rupees following its last update on June 20th. Now, these new orders include advanced radars, communication equipment, electronic voting machines, and jammers. Now, the fresh business reflects BEL's continued strong demand from defense and government sectors, reinforcing its position as a key player in India's strategic electronics manufacturing. Jefferies and Investec have both maintained a buy rating on Ambuja Cements, highlighting strong growth prospects. Jefferies has set a target price of 700 rupees, noting that the company is ripe for a comeback after a challenging fiscal year 2025. The management's strategic focus on cost efficiency, capacity expansion, and technology adoption is expected to drive a sustained turnaround from Q4 onwards. Now, Ambuja is considered one of the top picks in the cement sector. Meanwhile, Investec has a higher target of 836 rupees, emphasizing management's commitment to capacity targets and cost efficiencies with a FY28 EBITDA per ton target of 1500 rupees. CLSA maintains a high conviction outperform rating on DLF with a target price of 1025 rupees. The brokerage praises DLF's restrained aggression and strong governance in managing supply, pricing, and capital allocation. DLF's calibrated strategy focuses on balanced pricing and supply management alongside prudent capital management that has successfully lowered debt and avoided equity dilution. Mahindra Electric is paving the way for a potential IPO as key investors Bain Capital India and Temasek plan their exit between fiscal years 2028 and 2031. Both had invested 3,050 crore via convertible shares, with Bain Capital expected to hold a stake between 2.6% and a 4.6%, and Temasek between 1.5% and approximately 3%. Now, these investors aim for a full exit at valuations above fair market value, either through cash or share swaps. In international trade news, the US and India are nearing a mini trade deal, but it may offer only limited tariff cuts. Sources tell NDTV Profit that the agreement is unlikely to include sector-specific reductions. There is likely to be no relief expected on duties for autos, auto components, steel, or aluminium. Instead, the focus is on reciprocal tariff reductions or the removals. India warns that doubling bilateral trade will be challenging without broader tariff cuts. India has also urged both nations to prioritize lowering overall trade barriers. Talks continue as the two countries aim to strengthen economic ties. 65 IPOs have hit the Lal Street in 2025 so far, with 22 main board and 43 SME IPOs listed. 35 IPOs saw gains on their listing day, while 25 faced losses. Notably, 6 of the 22 main board IPOs are trading below their issue price, and 27 of the 43 SME IPOs on BSE are also underwater. Despite some strong debuts, posts on X highlight a tepid trend, with over half of recent listings trading below their IPO prices, signaling mixed investor sentiment in India's primary market. Raymond Realty made its market debut, listing at 1,005 rupees on the BSE and 1,000 rupees on the NSE. So the stock has gained 6% since its initial listing. With this move, Raymond adds a second independent growth engine to its portfolio. So the company had already successfully executed the demerger and listing of its lifestyle business through Raymond Lifestyle, unlocking significant value. The listing of Raymond Realty is expected to follow a similar trajectory, reinforcing the company's strategy of creating focused standalone entities to drive long-term shareholder value. Kalpatru shares hit the bosses for the first time at 414 rupees on the National Stock Exchange, which means that's a flat listing. Kalpatru IPO, which opened its bidding from June 24th to June 26th, saw a good response, especially from the non-institutional investors. By the end of day 3, the issue was subscribed to 2.3 times in total. Globe Civil Projects shares listed at 27% premium on the National Stock Exchange on July 1st, following a bumper subscription of 86.03 times in the primary market between June 24th and 26th. So shares of Globe Civil Projects were listed at 90 rupees per share on the NSE, a premium of 26.7% over its issue price. So the 119 crore rupees initial public offer had a price band of 67 to 71 rupees a share. So the total market cap of the company post-listing shares stood at 536 crore rupees. The Transport Ministry's proposal to mandate ABS on all two-wheelers from January 1st, 2026 will impact entry-level bikes, which make up 76% of the sales. This could raise prices by 3,000 per vehicle, with Nomura estimating a 2 to 4% sales hit. Hero MotoCorp, with over 80% of FY25 sales from entry-level models like Splendor, faces the biggest impact, while Bajaj and TVS with 10 to 12% entry-level contribution are less affected. Auto component makers Endurance Tech and Ask Automotive stand to benefit, with the Endurance expanding into dual channel, ABS and Ask deriving 36% of revenue from ABS systems. Oil marketing companies have slashed the price of 19 kg commercial LPG cylinders by 58.5 rupees effective today, marking the fourth consecutive monthly reduction in Delhi. The retail price is now 1,665 rupees, down from 1,723.5 rupees. So Mumbai sees cylinders at 1,616 rupees, Kolkata at 1,769 rupees. Domestic 14.2 kilogram cylinder prices remain unchanged at 853 rupees in Delhi. So this cut, driven by softening global crude prices, offers relief to hotels, restaurants and small businesses, though aviation fuel prices rose 7.5%. So GST 2.0 rate rationalization may actually further impact future pricing. Putting all speculation to rest, the Congress High Command today made it clear that it has no plan to replace Sidramaiah as the Karnataka Chief Minister for now. Deputy Chief Minister D.K. Shivkumar, whose supporters have been demanding his promotion to the top post, sat next to senior party leader Surjewala as he made the announcement. The Telangana factory blast has reportedly claimed 36 lives as rescue operations recovered more bodies today. The toll, which was 12 till Monday night, rose to 34 this morning and is now at 36 after multiple reports gave varying figures. Officials are currently verifying whereabouts of the missing people. A suspected reactor explosion triggered a blast and fire at the Sigachi chemical industry on June 30th. Prime Minister Narendra Modi is all set to begin his five-nation tour from July 2nd to July 9th. Now, this tour, which will begin from Ghana, will mark the Prime Minister's longest diplomatic visit in nearly 10 years. PM Modi's five-nation tour will focus on South American, Caribbean and African countries. Now, the final leg of the tour will take place in Namibia, which will also mark the first visit by an Indian Prime Minister in 27 years. Donald Trump takes another hard jibe at Elon Musk. Trump has suggested his administration to look into cutting subsidies to Elon Musk in order to save the government's money. So now this is in retaliation to Musk's sharp criticism for Trump's multi-trillion-dollar tax bill. Trump warned on social media, saying that without subsidies, Elon would probably have to close up shop and head back home to South Africa. No more rocket launches, satellites or electric car production, and our country would save a fortune. The US Senate is in a heated marathon voting on the One Big Beautiful Bill Act, a 1,000-page budget crucial to President Trump's agenda, facing a July 4, 2025 deadline. Republicans controlling Congress are split on welfare cuts to extend tax breaks, with the bill adding $3.3 trillion to the $36 trillion national debt. Now, Elon Musk, once Trump's ally, called it insane, threatening to challenge the GOP supporters and form a new party. Trump countered, hinting at cutting Musk subsidies via DOGE. A Medicaid amendment by Senator Rick Scott risked $20 million losing health care. The bill needs Senate approval and a House revote after passing by one vote last month. Thailand Prime Minister was suspended due to her conduct in a diplomatic spat with Cambodia. The suspension follows a case being lodged by a group of conservative senators accusing the PM of breaching ministerial ethics during a border row with Cambodia. as per a leaked recording when the PM called Cambodian statesman Hun Sen to discuss tensions. She referred to him as uncle and called her own country's military commander an opponent. Conservative lawmakers argue that she breached constitutional provisions requiring evident integrity and ethical standards among ministers. A powerful heat wave grips Western Europe today, putting Paris on red alert as temperatures soar above 40 degrees Celsius. French authorities open cooling centers and urge residents to stay indoors and hydrated, especially the elderly and vulnerable. Meanwhile, parts of the UK brace for possible highs of 35 degrees, prompting health warnings and travel disruptions. Across Europe, countries like Spain, Italy and Germany also experienced record-breaking heat, with wildfires reported in some regions. India's Smriti Mandhana has soared to a career-best third place in the ICC Women's T20I batter rankings with 771 rating points following her maiden century, 112 of 62 balls, against England in Nottingham. She trails West Indies' Hayley Matthews and Australia's Beth Mooney. Mandhana's knock powered India to a 97-run victory, the largest T20I defeat for England by runs. MS Dhoni's application to trademark his famous nickname, Captain Cool, has been officially accepted by the Trademarks Registry. The title, which reflects Dhoni's calm and composed leadership on the cricket field, will now be exclusively associated with him for sports and related services. The trademark was published on June 16th of 2025 and will be formally granted if there are no objections in the next 120 days. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit as Sanjana Chauhan brings you Profit 360 on the other side of the break.
And it's a pride of the country. User friendly है. SBI के ऊपर सबसे ज़्यादा trust रहता है.
Wherever I am, even in the rural most areas, I still can find SBI.
Indian banking starts, and I would say even end with SBI.
This office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and
Benchmarks end higher, outperform broader markets as the Nifty Midcap 150 snaps its 7-day winning streak. Meanwhile, sectoral indices end mixed with the Nifty PSU banks ending as the top gainer. Sources tell NDTV Profit that the stalemate persists in the India-US trade talks, with Indian negotiators extending their stay in Washington as both sides remain entrenched on key issues. SBI plans to become a financial superstore. That's the word coming in from SBI Chairman C.S. Sethi, adding that private capex boom is some time away. An NDTV Profit exclusive lined up on the show. Quick commerce companies in India add various fees like handling, convenience and now rain charges to customer orders to improve their unit economics amidst rising competition. Saraswat Bank set to acquire the beleaguered lender New India Cooperative Bank. This after New India was placed under restrictions by the RBI in February. The death toll in the Sigachi Pharma Industries explosion in Telangana's Sangareddy district climbs to 36. Meanwhile, shares of Sigachi Industries extend their plunge by another 8% a day after the incident. In a bid to curb pollution, Delhi bans fuel for end-of-life or overage vehicles that include 15-year-old petrol vehicles and 10-year-old diesel vehicles. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana, and for the next 30 minutes, we're going to bring you the latest on markets as well as national and international news. So let's jump right into it and have a look at how the markets fared today. Nifty and Sensex ended flat after a choppy day of trade, but outperformed the broader markets. Meanwhile, sectoral indices ended mixed. But let me go across now to my colleague Harsh for a wrap of the day's market action. Harsh, over to you.
Well, we've closed absolutely flat on the Nifty 50 index. The positive here is two things. One is that we've at least not corrected significantly after the rally we've seen. That's point number one. Point number two, extremely range-bound day of trade that we've seen today. We traded in a less than 100-point band and we've closed above 25,500. So that's the lowdown with regard to the index itself. When you're looking at the breadth of the index as well as the market as a whole, largely even Steven. 24 advances to around 26 declines on the Nifty 50 and just about 1100 advances to a very equal number of declines on the NSE as a whole as well. So largely even Steven where the breadth is concerned. The broader markets, well, they inched slightly lower. So we saw maybe a 50% lower on both the Nifty mid-cap as well as small-cap indices. But again, nothing too major in terms of a reaction, and that's a positive. In terms of sectors, again, nothing that really stands out. We had a couple of sectors doing okay. PSU banks continue to rule the roost. They're top gainer along with Nifty India Defense among the losers. Of course, we saw some bit of pressure with regard to metals as one of the sectors which saw some pressure. But outside of that, you didn't see too much from any of the other sectors, and that's again a positive. The Nifty Auto Index in focus because of auto sales numbers, a 50% lower is where that one has closed. When you're looking at specific names that have moved, yes, there were a few names zooming, and that'll come shortly on your screen. But broadly, again, the market looked quite decent given the kind of rally we've seen. We're seeing a bit of consolidation at play at this point.
Meanwhile, Prateek Agrawal, MD and CEO of Motilal Oswal AMC, explained which sectors he believes will be and give good growth in the month of July. Let's listen in.
Our house would be expected to be invested into something like NBFCs, but a lot of these new spaces and all of them happening together at the same time, to our mind, never happened before, are these spaces which offer growth in earnings significantly higher than that of the index. I mean, a lot of these spaces are small, so they are not held back by the size of the economy and the economic growth. These are the spaces which are driving the next $1 trillion expansion of the economy. And we believe these spaces held for a long period of time in a portfolio, not space per se, could deliver good outcomes for the investors. Frankly, we have been doing this for now 2.5 years.
And moving on to some crucial information coming in with regards to India-US trade talks. Sources are telling NDTV Profit that the stalemate over the trade talks continues. We understand from these sources that India is sticking to its conditions in the trade negotiations. The team, if you're aware, has extended its stay in Washington. But my colleague Tamanna now bringing us the latest.
This is very interesting because even as the July 9th deadline nears, we know that there is now a stalemate which is continuing over trade talks in Washington between India and the US negotiators. And this stalemate is now because India is completely sticking to its red lines. This is what we are learning. In fact, the team is now once again extending its stay in Washington, D.C. And there was one extension which was yesterday. There will be one more. Where the whole conversation seems to be stuck is over two pockets. One is that the US side is pushing for access to Indian agri and dairy sectors. And this is something that is not completely agreeable on the terms they want. India on its side, we learn, is seeking concessions for labor-intensive sectors like leather and toys manufacturing, and that is the access that the Indian side is seeking for these sectors and this produce that comes from India. So even as we head to that July 9th deadline, even as President Trump is announcing that, we're very, very close to a deal. We heard from the White House this morning that there could be a deal anytime now. We are now learning that the stalemate very much continues as hectic negotiations are on.
Right, remains to be seen now how these negotiations and conversations move further now that India is actually sticking to its ground and digging its heels in when it comes to these India-US trade talks. Moving on, here is a snippet of our chat with none other than the SBI chairman C.S. Sethi, who addressed some key concerns about rate cuts and the margin impact. He reveals how the recent CRR cut will ease reserve costs and signal margin improvements from September. Let's listen in.
The question of the margin is always something that is bothering a lot of people, especially in the rate cut cycle that we're in. And we're closing to the fag end is what we all understand that. But is that at all a worry for State Bank or for the chairman of the State Bank of India?
So the net interest margin trajectory is, in my view, would be a U-shaped curve, in the sense that in a couple of quarters we see the margins getting compressed.
Yeah.
Obviously, the front loading of repo rate has accelerated the repricing of some of the retail portfolio. For us, the benefit is that we don't have much of that repo linked portfolio. Our portfolio is broadly either fixed or MCLR. But we want to give the benefit of MCLR reduction also to our customers, right? So which means that you need to calibrate your deposit rates. This is precisely what we have done. So going forward, I believe there are two things. One is the margins get adjusted, and number two, the September onwards, again an unexpected pleasant surprise from the regulator is to cut the CRR by 1%.
Yes.
So that will add, one is it will immediately reduce the cost of maintaining that reserve. And number two, ability to deploy those funds. So September onwards, I think there will be a addition to the margins. So we need to look at the exit margins of Q4.
Correct.
I think broadly most of us would be better positioned.
And let me quickly cut across to Tamanna now, who is actually going to bring us more on the JSW AkzoNobel deal, speaking with the MD. Over to you.
It's because the paints business has been heating up. New entrants, big entrants, and of course, a new player in town now. But let me start with how you managed to chase down this acquisition, because we know the #1 market share company was looking out at AkzoNobel, so was #2, so were several others. But you finally got them here at the end.
Yeah, so we entered the market in 2019, and we've been one of India's fastest growing paint companies. We clocked a revenue of more than 2,000 crores last financial year, and we have always aspired to get to and become like certain brands, and Dulux has been one of those aspirations. Even when I was studying in college and when I was working on the project of, which is the next business the JSW group should enter, and I zeroed in on paints, one of the brands which were the aspirational category was obviously globally was Dulux, and even in India. So when AkzoNobel Global announced their strategic review last year in September, we felt that this was too good an opportunity not to really go for, not to really fight for. And when we looked at the synergies, both on the decorative side of the business as well as on the liquid coatings industrial side of the business, we felt that the two businesses of JSW Paints and AkzoNobel India were highly complementary in nature. And that's why we said that, if we truly want to become a top 3 player in this category, if we truly want to gain size and scale fast, and we truly want to operate like JSW operates in other businesses, then this is the natural partner for AkzoNobel India. So, we really worked hard on it. I went and met Greg in Amsterdam and introduced myself. He knew of the family because he has worked in India for many years in various different companies. And we struck a deal, and I think it's a deal that is mutually rewarding for both players, and it really gives JSW Paints now the heft, the might, and the power of the brand of not only Dulux but also International, also Sikkens, also Wanda, and truly gives us the ability to leverage their international R&D capabilities and know-how, and our know-how on India, and really get a marriage that hopefully can take us to the next level.
Greg, I want to hear your version of this story, because there were a lot of suitors, and finally Parth has clinched that deal. JSW Paints has got you there. What was in that particular pitch that worked for you? What was the winning proposition?
Well, first of all, it's a wonderful partner. It's a family whose name speaks for itself, and JSW as a group is a wonderful success story. But beyond that, it's true that we talked to a lot of people and that there were a lot of parties interested. But at the end of the day, what made the difference is that Parth has a clear vision. He's got a very supportive family with a clear governance that allows him to be agile and to move quickly. And then we share the same values, so it was an easy decision.
You talked about how even when you were in college, the paints business is something that you had identified. And I'm just going to pick on that part, because right now, and we saw that in the last financial year, but right now if you just zoom out and look at what's happening with the paints business in India, it's hit a bit of a rough spot. Discretionary spends have not quite kept up, and at the same time there's competition heating up. So it's a great acquisition, but it is a bit of a tough time.
Yeah, so I think if you look at the paints industry in general, there are two segments of it, right? There's the decorative segment as well as the industrial segment. Now, last year was an anomaly where the decorative industry was flat. And we saw the largest players in the space actually lose market share, and the newer entrants like us and others gain share. But overall, the industry was flat. And the decorative industry has been growing at a CAGR of 10 to 12% for nearly 2 decades. So it is bound to have a couple of years here and there of flat growth. And last year can be attributed to the general election. It can be attributed to a lot of state elections, which led to government spending also slow down. We're hopeful that comes back. Industrial, on the other hand, had a very strong year, and as India industrializes, as India tries to become the manufacturing hub not only for our domestic demand but also for global, industrial will continue to see growth. And what really excites me about this opportunity is that we have two engines of growth. We have the decorative engine of growth, which, like you rightly said, has hit a rough water. There is intense competition, there is increasingly stiff competition. And then there's the industrial coating side of the things, where we are now the number 2 player. between ANIL and JSW Paints, we become number 2. And we have a clear pathway there how to leverage their global technology and know-how and our B2B relationships to go to number 1. So, so we are very confident that, you know, the sum of the two companies coming together will allow us to take this company to the next level.
It's also a deal at great valuations. When there were, you know, the back of the book calculations being made over the last several months of what AkzoNobel would go for, the number was significantly higher, or maybe that was priced in your stock as well, than what you ended up at. So what was the key consideration there? Of any of light you can throw on that aspect from either of you?
I think the math confuses people, which is often the case. You're talking about a publicly traded entity, AkzoNobel India Limited, of which we're taking out the powder business, so there's a split, and then we're putting in some of the IP, and then we're taking out the research center, and then we're taking out a dividend. So anybody that makes a straight comparison between the share price and the value announced is either a visionary or a math genius. But the reality is that it's a fair deal for both parties.
They're both of those, visionaries and math geniuses trading in the market.
Especially in India, there's a lot of math geniuses, but it's
no, because that's what I mean. That was what was being priced in by investors, etc. So that was a bit of a question when the deal was announced. You saw that in the stock price on day one, but of course it evened out. But you're explaining it well, that there is a whole bit that you retain, and you retain your presence in India as well, right?
We do. Lots of ins and outs, and at the end of the day, I think Parth will agree that we both got what we were looking for out of this. They got a great business. We got what we think is a fair valuation and a long-term partner, because we will be the technology provider under a royalty agreement for the coating businesses, and therefore we're together for the long term.
So what you get out of this, of course, is the brand, the Dulux brand, and of course the technology, etc. How do you now leverage on that part in a space which has become extremely competitive? What there is the cutting edge? Because you have, for example, the number 1 player who I think has 5x of the distribution touch points of the number 3 player, 4x of the number 2. How do you now plan to move ahead in a space like that?
Yeah, sure. So on the decorative side of things, AkzoNobel India, which is Dulux, has about 19,000 retailers across the country, 19,000 machines, tinting machines installed, and JSW Paints has about 9,000. So when we put the two together, we have about a 10% overlap. So we get to about 27,000 machines in the market. So one, there is huge synergy to unlock amongst these 27,000 in itself, because if you look at Dulux, Dulux is the leading player when it comes to premium paint, luxury premium paint. Dulux is known for that, and they have a disproportionate share of their business as well as a disproportionate share of the market of luxury is with Dulux. When you look at JSW Paints, we are one of the fastest growing companies in the value segment as well as in the mass premium segment. And hence, our 9,000 retailers will now get access to the Dulux products. Their 19,000 Dulux retailers will get access to our value and mass premium. And here we will be able to increase the share of business in each of these counters. This in itself will unlock huge amounts of synergies. Second is, if you look at the geographical presence of both companies, although both companies are pan-India, Dulux is very strong in metros and in tier 1 and tier 2 towns. JSW Paints is very strong in tier 3 and tier 4 towns. So the sum of the two will allow us to increase the JSW presence in metros and tier 1, tier 2, and increase the presence of Dulux and other products in our tier 3 and tier 4. There's also a huge synergy on the distribution side. If you look at the distribution side, Dulux follows a direct to retail model in metros and tier 1, whereas they follow a distribution led model in the smaller towns. JSW Paints is a direct to retail model across the country. So once again, once we get in and hopefully get all the approvals, CCI, and complete the open offer, that's when we'll actually get into the business. We'll understand the brand architecture that we want to go with. We will reinvest in both the brands. We will build up the Dulux brand and dial that up, because it's a household name that everybody knows, but we want to get it back on the tip of everyone's tongue like it has been, and also dial up the spends on the JSW side. and truly go to the consumer with a combined offering, saying that if you're value conscious, you have JSW. If you want luxury and premium, you have Dulux. And across the value chain, whether it's wood finishes, waterproofing, construction chemicals, we'll bring the power of the R&D capability of AkzoNobel, and this will allow us to scale. And I'm sure the other retailers that you mentioned who are Forex and the number one is Forex or the number two and all of that, I'm sure a lot of them will be looking at us and being like, look at these guys. Now they have the complete offering, they have global R&D know-how, they have global capabilities, and they have the power of an Indian group behind it. So let us, why are we over leveraging on one of those brands? Let us join hands with Dulux and JSW and work with them. So we would welcome them and we hope to scale very quickly.
No, so wait, let me go back to that. What do you mean by let us join hands?
Means let us also sell their product. Why are we selling only their product?
Okay, no, I just thought, is there more M&A in the offering or more
I'm
consolidation?
Saying the retailers.
Okay, the retailers.
The retailers,
okay.
They might look at an alternative as well, and now we become a more attractive alternative because we give the complete offering. We give them Dulux, we give them JSW's offerings all together. So now they can really compete with anybody else.
So, I was reading your quotes also from the press conference earlier in the day, and one of them is that we will be the number one brand. I don't know if you were misquoted, or aspire to be the number one market share leader in this space. Is that aspiration there? How do you think it can happen? What is the timeline you're looking at?
No, I don't think I said that. I think the first step for us, which is very clear and it's on the horizon, is from the fourth largest player together, can we come into the top three? And coming third is something that I think we will definitely achieve very quickly.
You're on the verge. I think it's 11 and 10 between number 3 and number 4. So you're nearly there.
No, the pecking order is 30,000 crores is Asian Paints, 11,000 crores is Berger, 7,500 crores is Nerolac, and 6,000 crores would be the combined entity. So the first step would be obviously from 6, how quickly can we become number 3. But in terms of the brand, I truly believe that Dulux has the power of being the number one brand in this country. And that's what we want to invest in. That's what we want to amp up the spends on and match the number one market share player in the amount we spend on the brand.
So suffice to say, no change in the name of the brand, of course, because that's the key proposition. What about in the name of the listed company or the branding of the listed company? What happens to that entity? Is there a reverse merger? Any light that you can throw on that?
Yeah, once we complete all the process and come into majority ownership of that entity, we will change the name of that company to JSW something.
Okay.
And in terms of the reverse merger, like I said, first we want to get into that business. We want to understand the cultures. We want to start unlocking the synergies. And at an opportune time, the natural thing for us to do would be to reverse merge JSW Paints into this entity.
Okay, so it will still be a listed entity
100%.
that will continue to be there. Just a word from you, Greg, on how you see the Indian paints market now. And you've had that ringside view. It becomes more of parts problem right now to make Dulux the first number 3 and then move it up the chain. But how have you seen it and the kind of, I think, dip in appetite that we have seen in the space?
It's an interesting time in history in the sense that there is a deep-pocketed player that's decided to throw money at the issue. It disrupts the market a little bit because you've got a historical market leader which has been struggling over the last few quarters. And if you look at the competitive landscape, everybody reports their numbers because they're all listed. AkzoNobel India Limited is the one player that's continued to hold up really well in a market where some other players are under profit pressure and also under volume pressure. So what that tells you is that there's strength in the brand, that the premium positioning is also a natural defense against somebody who enters with mass market aspirations. But also this is, people like to think that situations are unique, but history repeats itself. There's a lot of countries where players from the cement or the gypsum board industry have tried to come in by building a brand from scratch. You had that in China 10 years ago. I could give you a few more examples if you give me more time after this conversation. And usually it doesn't end well because building a brand is really expensive and it's really time consuming. And India is not a market that is lacking for capacity. If you take our combined businesses, we can pretty much double the size of our business with the existing capacity. So building factories doesn't bring you anything. It brings additional capacity to a market that already has capacity. Building a brand is tough, and I think that Parth and the JSW Group made a very wise choice, which is that it's better to buy a brand that's already established, especially one with the credentials of Dulux, and build on that rather than to try to go bottom up from a blank page. But at the end of the day, these things, as they've happened in other geographies, they settle over time because most people over time want to make money in the businesses that they're in, and otherwise they choose a different approach. So let's let the Indian market settle down. I think there's going to be 2-3 years of turbulence. On the deco side, the coating businesses are doing really well, and then you'll see a market that will stabilize, that will mature, that'll probably consolidate a little bit more, and I think that bodes well for the prospects of our business, your business, pretty soon going forward.
Yeah. So on the consolidation aspect of it, on the bottom up, I'm not saying the top 3 players part, but more smaller players that exist, not all of them listed, some of them listed. Do you think it makes sense with the ambitions that you've now outlined to start shoring up? And like Greg said, this is an issue that one big player is throwing money at. Yeah. That's something you're going to have to do.
No, I don't think it makes sense for us to look at any of the smaller players unless there is a smaller player with proprietary technology that we don't already have access to, which I don't believe is the case because of the partnership between JSW and AkzoNobel. So I don't think any of the smaller players would be attractive for this combined entity to look at, and I think now the focus is really going to be how to leverage the synergies and how to scale up the business.
But the positioning is going to be premium because that's what Dulux's positioning is.
Yeah, so like I said, we need to fight in every segment. We're not going to only fight in the premium segment. And hence, once we get into the business, we have to arrive at the brand architecture and make sure that we can fight in the value segment, in the mass premium segment, in the premium segment, everything, waterproofing, wood finish, construction chemicals. We have to be fighting in all segments and gain share everywhere. So hence, we are not yet clear on what the brand architecture is going to be. But obviously, Dulux is going to play a huge role in that because it's the biggest recall brand, now in the JSW stable probably.
Yeah, I think that tune, right, of that ad, which we've all heard growing up. Yeah. Why don't you guys say it?
Dulux, Dulux, Dulux.
Oh, perfect.
I can't match that. That's wonderful.
Super. Best of luck, guys, and thank you so much for your time with us today on NDTV Profit.
Thank you.
And there you heard it from Parth Jindal and AkzoNobel CEO about the capacity and, of course, what's lying ahead with regards to this blockbuster combination of JSW and AkzoNobel. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
and it's a pride of the country. यूजर फ्रेंडली है. SBI के ऊपर सबसे ज़्यादा ट्रस्ट रहता है.
Wherever I am, even in the rural most areas, I still can find SBI.
Indian banking starts, and I would say even end with SBI.
This office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100%.
Hello and welcome. You're watching Know Your Company. I'm Harsh Saita, your host, and today we're going to be talking about Fino Payments Bank. Why Fino Payments Bank? One, there is plenty of talk around technology and banking, and Fino has been at somewhere at the periphery of it, or is it at the center of it? And that's what we'll try to understand better. But essentially, it's a bank where plenty is happening. They're converting from a payment bank to a small finance bank. They have applied for that license. How quickly does that license come will be the other big question. But it could well be a turning point in the way you look at the business as well. From the highs of the IPO price and the list price, the stock is trading now at a substantial discount, while profits over the last 3 years have compounded at a fairly healthy rate. And therefore, you want to start to understand whether this business has started looking interesting or not. So first question that I really want to know is that how much can the existing business grow by? You have your traditional business which they do at this point, and I'll explain that business to you. And thereafter, the kicker will likely be the small finance bank license, where they go into lending, and how that journey goes along will be completely different, and that will be a different lever both in terms of valuation and growth. The second piece is what's the outlook like on commission based income. What do they do in commission based income? One, they do remittances. These days for remittances, say for example you have a house help who you pay 20,000 rupees to. They have to remit some amount or some part of that amount to their village. Earlier they used to take the help of someone like a Fino to make that payment to their village, and their parents or family would collect it from an outlet of Fino. But not anymore. With UPI really well entrenched, you could well see that remittance number has come off, and which is what in some form or shape also impacts the business. Is there a substitute to that, or is lending the only thing? Then of course there's Aadhaar enabled payments. For example, all the government related subsidies and incentives are now done through Aadhaar related payments, all done over UPI. And then there's micro ATMs. Who uses ATMs anymore, or rather there's been a sharp reduction in the usage of ATMs, and therefore does that also impact the business? Competition in loan referrals. That's the other risk, right? So they've ventured into loan referrals, and then you have these large players, a Paytm, a Paisabazaar, who have come in and are disrupting, and they are all online. None of them are offline, and therefore is that business really seeing pressure? What changes with a small finance bank license? Now this is the big question, because you want to know whether the small finance bank license adds risk to the balance sheet in a substantial form, and if they are lending, what is that risk? Because if you are buying into the stock or you are already invested, you want to know what the risk will be of getting this license and how they intend to lend. Now the fifth question is, how quickly are you looking to get a small finance bank license? By one, I mean an SFB license. How quickly do they get it? How quickly does the strategy unwind as soon as they get it? Do they already have a strategy in place or not? And what happens to the promoter holding post the SFB license? Promoters currently hold around 75% through an entity, single entity. That structure may have to unwind at some point. Now, of course, that may take a year or two, but what's the thought process behind that? And the last question I want to ask them, where are you investing at this point? You're generating cash, you're a profitable business. Few businesses within the payments technology startup space are actually profitable, and this one is profitable. So where is it that they are investing that nearly 100 crore odd of profit that they are making? So all of that and more, but first let's understand what the business is all about. I'm going to start off with what Fino Payments Bank does as of today. The core business of Fino Payments Bank is digital and payments. That's what it essentially is based on. They've gone deep into rural, set up micro ATMs, and I'll explain this, and they have done digital through banking. So they do remittances and then they provide financial services. So basic banking, remittances, financial services. Within basic banking, they allow you to maintain a current and savings account. They enable fund transfers, and they help you check your bank account through their app, which is all digital, all UPI. They've linked that entire stack to UPI. But what Fino cannot do is they cannot lend, because they are a payments bank. They have a payments bank license. They absolutely cannot lend. So that is where the small finance bank license comes into play. They've applied for it. Earlier, there was no intention to do that. When I spoke to them at the point of listing, they said, we don't intend to lend at all. But that seems to have changed over the last 3 years. What has changed there is what I'd want to know. How they operate through an asset light model, and it's phygital in nature. So one, they attract the customer into what is called a micro ATM. You'll have Kirana stores which will have a simple micro ATM machine which allows you to insert your card, enter your PIN, and check your bank account balance. Once you check your bank account balance, you can withdraw from it. Say your balance is 10,000 rupees, you can withdraw 2,000 rupees. But there is no ATM machine there. It's actually the Kirana store owner who gets paid a fee, and 2,000 rupees is handed over by the Kirana store owner to the customer. So it's a very unique concept in that sense. And they have nearly 20 lakh touch points and merchants who they have tie-ups with, and therefore they're one of the largest micro ATM players in the country at this point. I want to understand, can that continue to grow at the rate at which they've been growing? In terms of customers, well, they serve low-income individuals, migrants, small shop owners, and rural consumers. Basically, the target customers are customers with limited or no access to traditional banking and traditional bank branches and traditional banking channels. Once the customer is onboarded, then there is a simple app through which the customer can transact. So once that attraction is done, then the customer can transact through the application. So it's a phygital model. It's asset light because it does not require the company to open ATMs or open branches. That is not required given the way in which the model is structured. So where does it make money from? Let's understand it bottom up. Fino earns money mainly, one, through transaction based fee that's on your screen, then it's interest income. Mind you, these customers maintain balances. They may be very, very small balances, but they maintain balances nonetheless. And what happens is Fino has access to that money. That money gets parked with the RBI, and the RBI pays an interest out to Fino, which may be a very, very small or a thin interest, and therefore the net interest income may be very, very thin, but nonetheless that is income for Fino. So that's interest income they make, and then they make money on commissions. Any withdrawals, depending on the type of account you have with Fino, any withdrawals you make, any remittances you make, all of those get charged, and along with it, any loans you take. So the loan syndication that they do, any insurance products that get sold to you, all of those come through commission. So you have 85% of the revenue coming in from merchant commissions and fees on transactions. Then you have interest income from investing customers which invest in customer deposits in safe instruments, which Fino invests in safe instruments. And then there are commissions from selling insurance, referrals, value-added services, and the like. And that's where all of the almost 85% of the top line essentially comes from. Let's talk about the exact services that they do. One, they do money transfers, and this is mainly domestic. Then they have Aadhaar enabled withdrawals that they do. They do UPI and bill payments for their customers, savings and current account maintenance for customers, micro ATMs, cash withdrawals, deposits, does both withdrawals as well as deposits. Debit cards and prepaid cards are issued by them or are enabled to be issued. Insurance and gold loan referrals are made. And then there is CMS, which is cash management services. Now, what is cash management services? And this is a new opportunity for them. Basically, if you are a store, if you are a Kirana store, you have lots of cash with you. What they provide to you as a service is they will pick up the cash from your shop, deposit it into your account for you. That makes life easier for you. And there are a few players in this cash management services business. It's a difficult business to do, but given the way in which Fino Payment has penetrated, it becomes easier for them to do this business. So cash management services is the other thing that they do. What does Fino spend on? One, interest payment on the deposits that they take from their customers, merchant payouts and agent commissions that they make, employee salaries, admin costs, the general, and then you have tech and platform expenses, which enables digital for their customers. Now, this is all with regard to Fino. So we hope we've given you a good coverage with regard to how Fino operates. Now, let's talk about some numbers and let's break down all of the 8 metrics that we'll talk about today. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of these. Let's start off with the income statement. I'm going to start with the top line. 22% growth on the total income number over the last 3 years, which is very healthy compounding that we've seen. We'll look at EBITDA here because, mind you, this is not a bank. This is not your traditional bank where you will look at operating profit. You will look at EBITDA because what you want to judge from that number, or rather EBIT or earnings before taxes, what you want to judge from that number is compounding happening there. Because post expenses, you want to see whether the company is still making money. And what you are seeing therefore is profitable growth coming through. 26% 3-year CAGR. That profit which has fallen from FY24 to FY25 is largely related to taxes that they've paid. Mind you, it was a loss-making company earlier and therefore they had carried forward losses which could be offset against any profits which they made all the way through FY24. So they were paying zero tax till FY24. Now they've started paying taxes and that's why you're seeing that recalibration of profitability. But that likely to a significant extent is done. Now what we'll see in FY26 is a normalization. Hopefully there'll be growth from here, from this 86 crore number, and we'll quiz management on how that happens. But a 26% growth CAGR, not bad on a 3-year basis. So we've given this a thumbs up. Now let's look at the balance sheet. You look at the equity is at roughly 83 odd crore. It has retained earnings of roughly 600 odd crore and it has some amount of borrowing. But typically the capital adequacy is what is relevant if it converts to a small finance bank, and it has an 80% capital adequacy. So no requirement of a fundraise whatsoever, at least for the moment, unless they start taking on too much debt, which at the moment does not seem to be the case. So that's how the balance sheet is stacking up. We'll give that one a thumbs up also. It's a lean balance sheet for a 2,000 crore, 2,300 crore market cap company. So that's how it's shaping up. Now let's talk about cash flow. Now cash flow, very simple metric, right? I'll compare the cash flow from operations to the profit after tax. 86 crore was the profit after tax for FY25, 76 crore odd of operating cash flow, not looking bad, and therefore we'll give this a thumbs up as well. I want to understand one thing from cash flow. Where is it that they are investing? Is there substantial pockets where they are investing for the next leg of growth? That's the other thing I want to understand, and we'll understand that from the managing director and CEO as he joins us. Let's quickly look at return ratios now, because the cash which they are investing needs to have a healthy return profile. We've shown you the last 3 years ROE number. We've given it a neutral because it's just about in early teens. What you would want is a ramp up of this. But mind you, there's one thing you want to understand. As businesses achieve scale and size, the ROEs start to creep up automatically. This one is a small business. It's a 2300 crore market cap business. I want to understand whether it can achieve that scale and size, and ROEs can see a lift or not as a result of that. So we'll see how that plays out. Now let's look at shareholding pattern. So we've given this a neutral, more to be seen on the ROE front. Shareholding pattern, 75% is owned by promoters. Let me pull out that promoter holding. It's the promoters that hold this one are called Fino Paytech Limited. And Fino Paytech Limited is again owned by a clutch of companies, including the likes of an ICICI Bank as well. And then you have a BPCL as well, which has a holding in it. So it's got an interesting set of promoters with it. But this will be subject to a reverse merger as well. There will be some bit of overhang as that reverse merger plays out. But that is only post the small finance bank license being received. So a lot of restructuring will likely happen within this promoter holding group. There's very little DI or FI interest at this point. It's a small company as well. And therefore, you'll want to look out for some of these things. We'll give the shareholding pattern a neutral as well. Let's look at street cred now. The one thing that stood out for me, and those numbers flashing on your screen, is the fact that if you are an IPO investor, you've not made money on this one. And that's a possible problem, because as promoters, as management, you would want to leave some money on the table for the retail shareholder. That doesn't seem to have been the case. Maybe have been the intent, but wasn't the case. That's not played out. And therefore, what you want to see is some of that will likely either have to play out very, very quickly, or you've seen some bit of pain within that shareholder pocket, which have bought since the IPO and continue to hold. So I want to understand what's in it for them, right? Can we see a substantial ramp up in the numbers, and that likely might impact stock price? That's something, of course, that we'll understand better from management. But for the moment, we'll give this a neutral, because stock price performance not really outstanding, but just about average when you're looking at it the last 3 months or so. 24% returns is what it's given. Now let's look at how the street views this. There are 3 analysts that cover it. We'll be cautious about this one. 3 analysts that cover it with a return potential of 13%. While the returns are okay, but what really stands out for me is that there are just 3 analysts that cover it. It's a 2,000 crore company where 3 analysts cover it. So not bad in that sense. We'll give this one a cautious neutral as well. Let's talk about valuations last off. Now, 2 ways to value this, right? One is price to book, but this is not a traditional bank, and therefore price to earnings is the better way to look at this. And when I was looking at the price to earnings at 11 rupees a share, which is FY25 EPS, it's trading at roughly 25 times, so trailing 12 months. But 1 year forward is trading at 22 times, and 2 years forward it's trading at roughly 18 times. That's how the valuations are stacking up. We'll give this one a neutral as well, because not necessarily something which is very cheap, but is there an upside surprise to earnings is what I'd want to understand. Let's quickly pull up all of the ratings now, because we've summed it all up. Now let's quickly pull that up. That's what you have. No issues with regard to the first 3 metrics, and the other 4 are also a neutral. No thumbs down. If at all there's a negative bias, it's with regard to street cred. That's something you'll want to look at, because that's not helping its case at this point. But 5.5 on 8, very, very fair from a KYC ratings perspective. Let's go across. We're joined by Mr. Rishi Gupta, who's the MD and CEO at Fino Payments Bank, joining us live. Good morning, Mr. Gupta. Always good speaking with you. I want to start off by understanding where does growth go from here? You're currently at around 19 lakh merchants. Can that number continue to grow? Can you continue to penetrate, and how's the competition looking at this point? Sir, I believe you're on mute.
Yeah, can you hear me now?
Yes, I can, sir.
So, good morning to you and to your viewers. So, good update on the KYC, and 5.5 from my point of view looks a little low, but I leave it to you and your analyst. Coming to your specific questions on the merchant addition, I think that is an area we have been adding about 1.5 to 2 lakh numbers per annum. So we'll continue to add that number of merchants as such. The only thing which has changed over the last 3 years, I would say, is that Fino was largely the revenue and the profit was largely coming from the physical network of our merchants and the products which we used to sell through those merchants. In the last 2 years and specifically in the last 1.5 years, we have seen there's a large push because of the UPI ecosystem which has come up. And that is where we see a digital transaction also growing to a large substantial part. Roughly 49% of our transaction value is coming from digital now. So Fino has become both a physical and a digital company now. So we have become a truly a phygital company. So not only the merchant growth, but the digital growth makes it even more robust and more avenues for us also to make revenue and profits.
And sir, how is the loan syndication business going for you? The loan referral business. Again, are you seeing competition there? How are take rates looking at this point? How is growth going for you?
On the lending part, we have applied for a small finance bank license. Yes. So internally, we have working with a couple of NBFCs on the lending side, largely around gold loans, micro lab, kind of affordable housing are the 3-4 products which we are focusing on. We do about between us and the BC business about 150 to 200 crores we do every month on the gold loan and other products, so to say. While we are growing that number, but I would still believe that with partnerships you are dependent on the partners, whether it is for the rate of interest or the product configuration or the geographies which are there. Once we get a small finance bank license, at that point of time, this learning will definitely help us to get into those businesses in a more controlled fashion where we control the product per se. So it's been a good growth, but I think the opportunity and the demand is far more as such. So we are going along with that, and let's see how it spans out in the next 9 to 12 months.
So give us the outlook on top line. I'll reserve a couple of questions on small finance bank. Let's keep that out of the picture for the moment. The existing business on 1850 crore of top line, where does it go? Say in the next year, say in the next 2 to 3 years.
So for that, you will have to probably break up this entire business into 3 lines. One is the entire deposit base, which is the CASA number. That CASA number, we grew at about 40% plus last year. We expect the same growth around 35-40. The base has gone up. So from a CASA point of view, I think we'll see a good growth coming on that side. Digital also grew at a much higher pace for us in the last year, nearly 4x of 24 number vis-a-vis 25. So in that sense, we also believe that the digital number will grow, but may not be growing in X, maybe growing in some percentage as such. Our transaction business, which is the micro ATM, APS and remittance, has seen a degrowth in the last 2-3 years and specifically in the last 1 year, because some of that is due to regulatory changes, some of them is due to customer behavior changing or moving away from cash to digital. And also a lot of those customers who used to do this are now my own CASA customers. So we see a degrowth on that because there are a lot of moving parts in the business right now. As you understand, the government is also pushing a lot on the digital frauds and cyber frauds, mule accounts. So we are also taking a very risk calibrated approach. So giving a guidance at this stage looks a little difficult because of the moving parts within the 3 lines of businesses which we are having. But one thing which we are very sure is, as Fino has always been very bottom line focused. So I see a good healthy growth on the bottom line per se. On the revenue side, even if we have to compromise somewhere on the revenue, but the bottom line is something which we'll continue to focus on. But our approach in this 25-26 is to be a little cautious and take a more risk calibrated approach on the growth side, not to grow exponentially at the cost of the risk and the ecosystem which is currently we are facing in the country.
Sure. Okay. So non-committal on the top line, on the bottom line focused. So yes. Would 100 crore plus kind of PAT run rate be something which is reasonable to expect?
So last year we had about 93 odd crores of PAT, where we had a 18% tax incidence. because in the first quarter we didn't have tax. From the second quarter onwards, we started to have tax. Our target is to cross maybe 100 crores of PAT this year with the full 25% tax incidence. So partly you are right in that way. So we'll be focused on the PAT numbers on the bottom line. And so we are working on some renegotiations, some working on other businesses, some new lines of businesses, some new products as we go down the year.
And sir, what is the where are you investing your surplus cash? You're doing 100 crore of PAT now, cash much more than that. So what's the kind of thought process behind where you're investing?
So 2-3 things are largely 95 to 98% of our investments are into technology. In technology, there are two lines of investments. One is the investments on building capacities and also security systems and everything else. With the kind of tech focus which is there within the company, and also the focus of the regulator is to build up a very scalable as well as secure technology ecosystem. So we continue to invest in building up that scalable speed as well as secured system as such. So that is where a large part of the BAU investments are going. On the other side, the large investment which we did in 24-25, which will get capitalized in 25-26, is the ecosystem around our core banking platform and some of the hollow the core projects which we have taken up in 24-25, which we'll see in 26. So these are projects in which we are moving out of core banking platform from FIS to Finacle. So that is going to get capitalized in this year. So that's where the large investment on cash side you mentioned in your KYC presentations also is going to happen. But that is only one of which happened in 24-25.
Sure.
In going forward, we don't expect that kind of large investment to happen on the technology side per se. We will continue to add more technology platforms, sure, automation platforms. AI is something which we are working on.
Sure.
So that is moving away from, say, right now, the payment which we do to FIS is coming under OPEX as part of our operating cost above the EBITDA level. So once we capitalize this, a large part of that payment is going to come within the depreciation. So it will move from above EBITDA to below EBITDA to that extent. And but the benefit to the company with latest technologies, latest software systems will be much more than the current ecosystem which we are.
Got it. So is there an aspiration to grow PAT? Would late teens be a good number given that you're in any case a small company in relative terms?
So I think we spoke about PAT a few minutes back. So that is what I would leave at that.
Okay.
Our focus will be definitely to grow the PAT even with the higher incidence of tax in this year.
Sure. So completely out of time. Thank you so much for coming and speaking with us, giving us all of that perspective. For viewers, some quick perspective in terms of the lending. I think what he gave us is that as the small finance bank license comes, they're already doing some amount of lending or enabling lending through their current existing customer base. So they'll probably use that data to kind of onward lend as well. So maybe that's something, that's another lever that one needs to look out for. But not particularly positive with regard to growth, which was something I was anticipating or hopeful for. Completely out of time on this edition of KYC. Thanks for tuning in.
and it's a pride of the country. User friendly है. SBI के ऊपर सबसे ज़्यादा ट्रस्ट रहता है.
Wherever I am, even in the rural most areas, I still can find SBI.
Indian banking starts and I would say even end with SBI.
This office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Imports become the exception rather than the norm, And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, there is one investment that if you had made over the course of the last 10 years on a compounded basis would have done better than an investment in the Nifty 50, and that means that it would have done better than quite a few other investments. And some of you will already know what I'm talking about because you've invested in it, whether you like it or not. You've bought gold. And if you look at the compounded annual growth rate of gold over the last 10 years, then when it compares to the total return index of the Nifty 50, gold has returned about 13.9% and the Nifty 50 is at 13.15%. We'll talk about why gold has been such a spectacular asset class and what you should do at this stage, because over the last few months, despite geopolitical tension in various parts of the world, gold prices have not moved up very substantially. We'll also talk about your strategy when it comes to silver, because a lot of people have been talking about silver versus gold. Usually there is a ratio that describes the value of gold versus value of silver, and it is actually the gap between the two is widened quite considerably. Will that gap be closed, and does that provide an opportunity for you? We'll talk about that as well. Joining me today is CA Abhishek Mehta, who is the founder of Invests Capital. Thanks so much, Abhishek, for taking the time. Let's talk about the performance of gold. Of course, you've probably been studying it for some time. Why has it outperformed?
So in the last 10 years, if you see, there are three major reasons why gold has outperformed the Nifty 50. One of the first major reason is there is a heavy buying from the central banks. If you see, China has added almost about more than 500 tons gold in the last decade, and even Russia has added more than 900 tons in their reserves of gold. 1/5 of the gold reserves today are held by the central banks. China and Russia has been one of the key players in adding gold reserves in their kitty. The reason is that China today, if you see China's numbers, China today ranks second in terms of GDP. It is second in terms of military forces. It is second in terms of foreign reserves. It is second in terms of market capitalization. But still, in terms of gold reserves, it is almost at the rank of 6th right now. So my estimate is that even though the last decade has been very good for gold, another 1 decade, like in the next 10 years, Russia and China together will be adding a lot of gold in their gold reserves because they would like to de-dollarize the foreign exchanges and get their currency stronger as compared to dollar. So that is one of the key reasons why gold has performed. The second reason has been, obviously in the last 3 years, we have seen a pretty good bull run in the gold market. The geopolitical tensions, whenever geopolitical tensions arise, obviously gold is known as a heaven and everybody moves to gold, whether it is US-China trade war, whether it's Russia-Ukraine, whether it's India-Pakistan, all the wars have led to the increase in gold prices. Third reason is always gold is a very good hedge against inflation. So whenever, like we also do asset allocation, we tell clients ki invest some amount of bit of your money into gold because it is one of the best asset classes to hedge yourself against the gold.
Okay. So those are three reasons why gold has outperformed. Now, I do want to ask about the best way to buy it though, because Abhishek, and I know this conversation has happened so many times, even I have had this conversation several times, but it bears repeating. A lot of people think that investing in gold is going out and buying gold jewelry. Now, there are so many digital options available. Unfortunately, the sovereign gold bond is no longer available. So with that knowledge, what is the best way to invest in gold? Would it be through the gold ETF?
So before we jump into how to invest, I would also like to, talk about the risk before. Because I personally believe that once we go into an asset class, first let's talk about the risk. If you see the standard deviation of gold over the last 10 years, it is about 18.25%, whereas silver is 23.75%, which means silver has a higher volatility rate. So whenever you are choosing between the two asset classes, whether it's gold and silver, be aware that you will face more volatility in terms of silver. So silver should always be bought in a staggered manner. Now, how can one invest into gold and silver? There are two major methods. One is ETF and second is fund of fund. ETFs is a very good method. You can probably purchase 100, 200 rupees also, 500 bucks also. Lot of time investors confuse that their actual physical gold returns and the online gold returns will be same, but that will not be the case because of three major reasons. One, when you go and purchase from a retail shop, you have to pay GST. Second, you have to pay making charges. Third, your retail gold prices are always higher as compared to wholesale rate prices. So I would like to urge all investors, if you are going and purchasing gold as an investment asset class, always go for ETFs or fund of fund. And especially for silver, go in a very staggered manner because silver has a very high volatility rate as compared to gold.
I want you to describe this. Now, a lot of students of mathematics or even economics will understand what you say when you say standard deviation. But from the perspective of price movement over the course of 10 years, what this would mean is that there could be a deviation at any given point of time up or down by as much as 18% from the long period average. Is this correct?
Right. So I always, in a simple manner, it is the turbulence which you face. So when you catch a flight, the amount of turbulence you will face from going to your destination A to B. So gold will give you a turbulence of about 18.25%. Consider it as a pendulum. So it can go 18.25% down, it can go 18.25% up. And silver will give you a turbulence of 23.75% when you are going from one destination to another.
So we've established what that is, and in the meanwhile, the Nifty 50 total return index had a standard deviation of 12.6%, which is at any given point of time, it will still give you a positive return even in a lean period, whereas a gold investment at some point of time you could turn negative over the course of that 10-year period. Basically, this is what it means. But you've also told me about the efficiency ratio. What do you mean by that?
Efficiency ratio basically means for every 1 unit of risk you are taking, what is the return you are generating. So it is basically return divided by the standard deviation. It just gives you that whether my risk was perfectly correlated with the return or not. So Nifty 50, if you will see, the efficiency ratio turns up to 1.04%. For Nifty 500 index, it turns up to 0.92. For gold, it is 0.76, and for silver, it is 0.48. So silver has the least efficiency ratio because of the higher volatility rate. And also silver in the recent year has not underperformed, but to its peer, it has not performed that good as compared to gold. But I personally feel that in coming next 10 years, silver might be a very good asset class because it has gone away from the precious metal. Nowadays, silver is being used in a lot of things like EVs, solar, your medical devices. So I personally feel that in the next decade, silver would be an asset class which will outperform gold in a period of next 10 years.
Okay, so and that's an important point that you make, because we're looking at all of this in the rear view mirror, Abhishek, and we've seen a tremendous rally for gold as things stand right now. Like I said, that gold silver ratio is at the widest that it has been in a long time, and so from that perspective, what you're saying makes sense. We could see a rally in silver prices, and so if we have a conversation 1 year from now, maybe the figures that we've just spoken about will be different. But having said that, what you just referred to, I was reading that that 2/3 of demand for silver actually comes from industrial sources. So exactly what you're saying. And so when demand goes through for industrial sources of silver, and supply constraints are resolved to a certain extent, you can actually see a rise in silver prices as well. But having said that, how should an investor invest in silver? To what extent should they invest in silver and gold?
I think you can invest almost about 10 to 15% of your wealth into commodities like gold and silver. Like I said, one of the best ways to do it, not through the physical channel, but through ETF and fund of fund. What's the difference between ETF and fund of fund is more or less on the taxation part. ETFs are more better as compared to fund of fund because ETFs will give you a 12.5% taxation after a year and fund of fund will give you a 12.5% taxation after 24 months. So the best way to invest into gold or silver, I think probably you can buy silver Bs and gold Bs through the ETF channel and it will give you a taxation of only 12.5% after a year. Also, physical holding, has a lot of hassles, Alex, because every time you want to go and sell, you have to go out to your house, you have to find the rates, then sell it out, and the liquidity becomes an issue. Whereas the liquidity is much better in terms of ETFs. You can just go on your app or, call your broker and sell those ETFs very easily. I would also like to point out one thing is gold and silver has a negative correlation with Nifty 50. What does negative correlation means? Whenever Nifty is negative, gold outperforms Nifty. So if you see the past data, let's look at some data. In 2003, Nifty was down by 11.7%, but gold was up by 8.4%. In 2009, Nifty was down by 35% and gold was up by 26.80%. What does this mean is that you should not put all your eggs in one basket. The negative correlation in an asset class is very good because when one asset doesn't perform, the second asset class will perform. So that will reduce your volatility in the portfolio level and give you a better returns.
Okay, quick question on this and then we move into asset allocation. When you're buying an ETF, what is the efficiency of the ETF? And by that I mean in terms of pricing. For example, if I go to Zaveri Bazaar and if I were to look at the value of gold, they will give me the market rate. But on an ETF, there is sometimes a dislocation and it's not exactly that same price. How likely am I to get the market value as close to market value when I'm buying gold on an ETF?
So in fact, the efficiency is much better when you are buying because when you go to a wholesaler or retailer, he obviously keeps his spread. Whenever he is buying, he is selling probably $1,000, lower, and whenever he is selling, he is charging you $1,000 more. So more or less, you would get a 99.99% efficiency when you are buying an ETF as compared to physically going and getting the gold.
Okay, got it. Let's talk about asset allocation because you said 10 to 15% in gold and silver. But what happens with the rest? Because a lot of people have this tendency, Abhishek, to run after things that are doing well. So if, for example, gold is suddenly running up, then they'll say, why not put more money in gold? And the entire asset allocation goes for a toss. Is there I know there are lots of thumb rules to follow, but incidentally, when we were talking about, you said that asset allocation goes back to the 4th century BC.
Right. So I was just reading about asset allocation recently and I came across thousands of years back, Jewish came with a literature called as Talmud. So what does that means is they said that divide your money into 3 asset classes. One is physical, where you buy gold, real estate. Second is you buy businesses. So probably you invest into equity, you invest into mutual funds. Third is you buy debt products or products which are liquidable. So they wrote thousands of years back and they back tested it at that time. So what they came out with this result was that if you follow this method of 1/3 into physical, 1/3 into commodity, 1/3 into your liquidable assets, then 9 out of 10 years, you will be in the top 25% returns. The only important thing is you have to rebalance your portfolio every single year in a disciplined manner. That means you have to sell whatever has gone up. You have to sell your winners and buy your losers. If you keep doing that, in 9 out of 10 cases, you will be in the top 25% asset allocation. Now, this Talmud portfolio was also taken ahead by Markowitz, who won the Nobel Prize in 1990. The same portfolio was also referred by Roger Gibson in his 1998 book called as Asset Allocation. Asset allocation has 5 key takeaways. I would like to discuss that because people always they listen about asset allocation and they keep it on the back seat while investing, because people get more interested in investing in asset classes which have performed better in the near future. There are 5 key takeaways for the asset allocation thing. The first thing which came after the Markowitz theory is your return and risk both are calculatable. What does that mean? Return is very easy to calculate. You put 100 rupees, you get 200 rupees, you say, I got 100 rupees return. But you need to calculate your risk as well. How do you calculate your risk? Like we said earlier, through your standard deviation. The second key takeaway of your asset allocation is that more risk always doesn't mean higher return. After a certain point of efficient frontier, even if you keep taking higher risk, your returns will not increase in the similar linear fashion. The third key takeaway is adding asset class into your portfolio will reduce the risk but not reduce your return. So always have about 3 to 4 asset classes in your portfolio. Fourth thing is rebalancing is very important. Rebalancing, it's like in your employment, every month you get salary and at the end of the year you get a bonus. So if you do rebalancing will give you a rebalancing bonus after a longer period of time. Also, rebalancing helps you to stay disciplined. In bookish knowledge, we always hear that you should buy, low and sell high. But we are not able to do that because we don't have a perfect asset allocation in place. So asset allocation really helps you to stay disciplined when you are investing in your journey.
Okay, so some key takeaways of asset allocation, and those points are well made, particularly the one when it comes to averaging both on the upside and on the downside. It's not the easiest thing to time the market and not many people can, so follow a simple asset allocation strategy as Abhishek is suggesting. Let's talk about a scheme or category of mutual fund schemes that is doing exactly this without you having to churn too much, and this is multi-asset. We speak about it incidentally, Abhishek, whenever we speak about gold, but I don't think that should be the case. And I know that mutual funds have different interpretations to how they do this multi-asset strategy. So let me ask you this. If we were to look at the key functionality of these schemes, to say return maximization would be one, the second would be absolute balancing of asset classes and shifting between asset classes, and the third being capital protection. How would you describe these 3 principles and talk about schemes in the same category?
Right. So one very good category which mutual fund has evolved it into is called a multi-asset allocation fund. How did this evolve? Earlier, there was 100% equity where 100% of the money was getting invested into equity. Second, what came is a balanced fund. What was balanced fund doing? 75% equity, 25% debt. The fund got evolved more, the category got evolved. They came up with a balanced advantage strategy. What it used to do is, it used to play between debt and equity and say whenever the equity is on a higher side, they would go up to 30%, 40% on the equity level. Now, after that, this category has evolved further and they have come up with a category called as multi-asset allocation. What does multi-asset allocation means? You have to have minimum 3 asset classes in your portfolio with a minimum 10% asset allocation to all these 3 asset classes. We will discuss 3 mutual funds of this category. One is DSP mutual fund, second is White Oak mutual fund, and third is ICICI. ICICI is one of the leaders in this segment. They are managing 52,000 crores in today's multi-asset allocation fund. The fund is managed personally by Naren and 2 other fund managers. What does this fund try to do is, they try to have a 65%, more or less 65% equity exposure, Second is they try to have some exposure on the debt side. Third is they have an exposure on commodity side. So if you see the asset allocation today, they have an equity portion of 52%, debt portion of 35%, commodity is about 12%. So they have divided into the three asset classes. The entire agenda of the fund is more or less to have lower risk as compared to Nifty and deliver better returns as compared to Nifty 50 by doing the asset allocations. Now, what is the difference in this fund and the other two funds is that of the taxation. They try to mirror an equity taxation, which means they at any point of time have to keep 65% of their funds into equity, and then probably they try to hedge it with the options. But the first agenda, because they cannot go below 65% to get an equity taxation, they have to always try and chase the equity side more as compared to chasing the other asset classes. DSP and White Oak comparatively are really going by the T of being a multi-asset allocation fund. What they have done is, first, in terms of taxation, they don't follow an equity taxation strategy. They follow a taxation strategy which states if you have more than 35% allocation in equity, you can put your money for 2 years and have a 12.5% taxation. So first, they are stress-free in terms of keeping 65% allocation in equity. Now, how does White Oak does is, White Oak has 31% in equity, 56% currently they are having in debt. They are having about 4% in commodity, and they have put in real estate and REITs and invest as 7.5%. So they are particularly trying not to beat the market, but to be a pure asset allocation play where having three asset classes. One is equity, second is debt, and third is real estate in their portfolio. At the same time, DSP is doing something different. What DSP is trying to do is, because they are master in picking foreign equity, they have an Indian equity exposure of about 37%, foreign equity exposure of about 21%, debt is 25%, and gold and silver is about 15% in their portfolio. They have one of the wonderful names in the foreign equity side. They have GE, they have Amazon, they have Nike. They're one of the funds which is DSP Value Fund. Still holds Berkshire Hathaway as a share. So because they are, very good in picking foreign stocks, they have a foreign flavor in it. White Oak is good in, picking, Prashant Khemka is good in picking the real estate side. So they have a flavor of real estate in them. ICICI multi-asset allocation at the same time is having more towards the equity side because Naren is a pure equity player in its investment strategy.
Yeah.
If you look at the standard deviation of all three products is very different. ICICI multi-asset allocation fund has a standard deviation of about 12%, which means almost like an equity fund. Nifty has a standard deviation of about 13-14%, and they are having a standard deviation of 12%. White Oak has a standard deviation of only 4%. Its 1 year return of White Oak is 15%, yet it has a standard deviation of only 4%. So White Oak is really, living by the T.
Okay, so you've actually elucidated that point. You want to very quickly tell me what the standard deviation for DSP's multi-asset fund is?
8.54%.
Okay, so that kind of bears it out, right? Because the objective of each of these schemes is slightly different. So when you're investing in this category as well, which a lot of people tend to do because they say these will give me gold allocation, it's not always necessarily true. It could actually be true, but it's not always necessarily true. And I hope that we've given you some perspective, viewer, on how to look at these schemes and this category. Abhishek, thanks so much for joining me today. Absolute pleasure having you on the program.
Thank you so much.
All right, now, when it comes to your expenses, of course, it's easy to say that you should put a tab on it and you should see where you're spending. But there's one thing that you spend on that is difficult to put a tab on. This is a silent killer, if you can call it that. A lot of us pay for subscriptions. And the thing is that those bills can add up. How much are you paying? And what is the total cost that you might be footing? Well, my colleague Yukta has this report.
It's the beginning of the month, which means rent's gone, you've paid your electricity bill, and your digital subscriptions are silently auto-renewing in the background. Netflix, Spotify, Zomato Gold, Cult, Canva, Google Drive, that newsletter that you never read but swore would change your life. And if you're 20-something working away from home, these feel like needs, not wants. They feed you, entertain you, help you work out, and sometimes just offer the comfort of being there. And hey, there's no shame in paying for convenience. Whatever you need, there's an app for that. There's always an app for that. But sometimes along the way, it's easy to lose track. According to a survey from March 2025, urban Indians under 30 are spending an average of 2,800 to 3,000 a month on subscriptions, and 42% admit they've continued paying for at least one that they no longer use. Now here's what that spend typically looks like per month. OTT subscriptions could lead to around 800 rupees per month. Music streaming platforms like Spotify, YouTube Premium could be another 300. Food delivery and dine out perks, which have like Swiggy and Zomato, could be around 400. Fitness and meditation apps could be around another 800. Cloud storage and productivity tools like Google One, Notion Pro, etc. could be another 300. Courses and niche apps could be another 400. That for an entire year adds up to around 36,000 rupees. Now, none of this is useless. It's all stuff that makes life easier, right? But the problem is everything is a subscription now. And after a point, it gets a little much. Not just for your bank account, but for your brain too. Now that's what people are calling subscription fatigue. Just feeling overwhelmed by all the small, ongoing payments and the mental load of tracking them. So here's what you can do to declutter. Step 1 is the audit. Grab your phone, check your UPI app, emails and app store. List everything you're paying for, monthly, yearly, and even those free trials that you forgot about. Step 2 is having an honest chat with yourself. Did I use this in the past 30 days? Does it make my life better? Would I even notice if it stopped working? Is there a friend that I can borrow this from? And am I already getting some of these for free with my phone recharge? And step 3 is pause, cancel and remind. Cancel what you don't use, pause the ones that you might return to, and for what you're already keeping, set a reminder a few days before the renewal.
All right, that brings us to the end of this edition of Your Money Matters. Thanks so much for watching and do stay tuned. This is NDTV Profit.
And it's a pride of the country. User friendly है. SBI के ऊपर सबसे ज़्यादा trust रहता है.
Wherever I am, even in the rural most areas, I still can find SBI.
Indian banking starts, and I would say even end with SBI.
This office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and
Alright, so chaotic traffic, jackets that get wet in the rain and pothole-filled roads. There's nothing more iconic than Mumbai monsoon, except maybe one thing, and that's the building that I was just looking at. On top of the building, you will see the Roman numerals for the year 1924. That's the year when this building was built. And what is in this building? Well, State Bank of India's main branch for the city of Mumbai, right next to Horniman Circle. And inside, we've got something interesting lined up for you. At the 70th anniversary of State Bank of India, what is it that you are seeing as something that is it a starting point? Is it a big milestone that you're proud of? How are you seeing this?
So thanks for having me here. I think this building is not only the Mumbai main branch now. Historically, the significance of this building for us is this is where 1955 State Bank of India corporate office was present.
Right.
Even prior to that, Imperial Bank of India was there. So from that angle, this building symbolizes not only age and architecture, it is also testimony to the trust, consistency in our service orientation, and being the very significant part of India's economic development. I think that is what it symbolizes. Coming to your question, of course, 70 years is the foundation of State Bank of India in the new avatar from 1955 onwards. But of course, this bank has a history of almost more than 200 years.
Yeah, 219. Yeah,
219. Yes, and this historical, background and the purpose for which State Bank of India was formed in 1955 has driven the way the bank has been contributing to the society at large and also for the economic activity of the country. I think from there you need to see the 70 years journey from that spectrum, that what is that SBI has played in the systemic role, what it has played in the economic development.
Okay, why don't we take a walk around the branch and try and figure out the history as well as, of course, the present and the future. Sure. So I want to ask you, this 100-year-old building, how are you feeling when you soak in all of these historical sort of, nobody here was alive when this building was born. How are you soaking it all?
I think this building, both as a corporate office of Imperial Bank of India and subsequently State Bank of India, and currently in the form of a very large branch of SBI, is a part of shaping the aspirations of people.
Right.
I think it's not only the number of retail customers who walk in here.
Yeah.
And over the years, the corporate banking aspirations and entrepreneurial aspirations of the people have been fulfilled over the years. And also, this office has shaped the way State Bank of India thought about its role in the rural development, in supporting the MSMEs, in the industrial financing activity, both new age as well as conventional industries.
Yeah.
From that angle, I think it has played a very, very large and important role.
So, 70 years in this avatar of State Bank of India after the SBI Act was born, right? To your mind, when you're looking at this history, What is it that stands out as, oh, this is why State Bank of India was born, and this is why State Bank of India as a lender exists? How are you seeing those things?
I think first and foremost, you can't think about SBI without thinking about the great financial inclusion.
Yeah.
The role what SBI has played in that. First, to start with, this is the very purpose of this organization to extend rural credit. I think it has done a phenomenal job in terms of ensuring that the initial phase of its development in terms of agricultural financing, microfinancing, small scale industries financing, cottage industries, and take the banking to extremely unbanked areas. We were the first bank to take branches to many villages, many rural areas which have not even heard of banking in those days. So that's I think the very, very important role which you have to acknowledge whenever you talk about SBI, that people have been brought into the banking system. The second important area is that, that alone would not have helped. That how do you design your credit policies, procedures and products so that, the people who are entering the formal credit system will be able to avail those benefits. And I'll just give you an example.
Why don't we come here and sit down and talk?
During 70s, when the government of India wanted that there should be a large-scale participation of SBI in MSMEs, we have not only taken up just merely extending the credit, we launched an entrepreneurial development program. We trained the people to, how do we set up a small company and take the economic activity. And another important project I would like to mention, what is called Project Uptake.
Okay.
How you ensure that the MSMEs on a cluster basis invest in technology. And there are other important milestones in SBI's journey, in my view, is that, see, the economic crisis from time to time.
Yes.
When the foreign exchange crisis was there.
Of course.
SBI has played a very important role in terms of India development bonds, Resurgent India bonds. And the other one which we must acknowledge is the digital adoption. How do you take this? If you say the later part of this 70 years journey, in the last one decade, SBI has played a very, very large role, either setting up new institutions or setting up our own technology platforms across the banking services. Is also need to be acknowledged that today we democratized the digitalization in the country. The last piece I would like to mention is in terms of our extending the financial services beyond banking. Today we have more than around 18 subsidiaries, non-banking subsidiaries, which provide different financial services. So the evolution of SBI from a mere banking entity to a financial conglomerate is an amazing journey in my view.
You joined the bank in 1988 as a probationary officer at that point in time. Now, of these 70 years, you've stayed with the bank for more than half. I wanted to get a few hits of your career, because obviously during your time at the bank is when the 1991 crisis happened, the 2008 crisis happened, later when the banking sector NPA crisis happened in India, after that multiple geopolitical crises that you've witnessed, especially after becoming chairman. I wanted to get your sense of what your trajectory has been like.
So there's never a dull moment in SBI. You see, I think whichever assignment you are there, you always have some excitement. But I don't like to call them hits, but a few very challenging environments, assignments which have helped me to understand and excel in those areas and also contribute in a significant manner was one. Definitely, I would like to mention about the Deputy Managing Director stressed asset resolution.
Yes.
That was the most difficult phase where post asset quality review we had undertaken large scale identification, resolution. I think this process, it is not only that we have provided the leadership to the industry. This turbulent environment, we also, in my view, provided a calming effect. We have given assurance to the industry that how do we handle this large account resolution. So that is, in my view, I believe that is one of the major moments for me in the career. But the other one is in terms of managing director, retail operations. When I took over as MD retail, we just entered the COVID. And during COVID, it was a great humbling experience to see how our staff members react and respond to this crisis.
Yeah, of course.
And when banking was declared as essential service, we, from a management perspective, we said that safety of our employees, safety of our customers, and if we can do some business, let us do business. But I'm very proud of my teams that, we have done phenomenal job in terms of providing the services. It also helped me to understand the resilience and strength of this organization in a much larger scale. We have almost, you are familiar, more than 22,000 branches, more than 65,000 ATMs. The network had to operate, and we also had rural presence by way of business correspondents. More than 70,000 of them. So every one of those entities have worked to the satisfaction of the customers, and I believe that through that assignment, I could realize the power and potential of this wonderful organization.
Okay, I've heard a lot about this conference room in this building on the second floor, which was home to the Mumbai local board as well, when it was the Imperial Bank at that point in time. It would be great to have a chat with you there.
Sure.
Yeah, sure. Okay. We are now entering this conference room, which used to house some of the oldest board meetings in the history of State Bank of India in Bombay. What I wanted to understand from you is, now we are in this year of 2025. There is no real competition for State Bank of India in the current setup in India, in the Indian banking sector. But having said that, there is a expectation that it will only keep growing bigger and bigger. How do you, as a chairman of the bank, how are you balancing this, staying first but also focusing on being like a growing bank?
The competition is always there. I think the advantage for SBI, or the nature of SBI, is that always face the competition head on. So when you are number one, there is a greater responsibility, greater expectations, and also we need to constantly redefine ourselves, to redefine the leadership itself. There a lot of disruption. So when we look at leadership, we don't look at only at the size. Obviously, we have had the advantage of size, and we are maintaining that. It requires a lot of effort. It's not an easy task to maintain the leadership. But what we would like to position this bank as, not merely